Thank you.
Very much to Professor Hong, as well as Amy and Ella and Ms. Kim Ji-yoon. And as you can tell, we have a very special event prepared for you today. I would like to introduce myself again. I'm Hannah Jun, and I'm honored to serve as the conference MC. And today we are at the Ige-Wfg Financial Group International Conference, Sustainable Finance for a Better World, Nature Recovery, and Circular Economy Transition. Today, we're honored to also have many distinguished guests joining us from all over the world and to share about how finance can be channeled into recovering the environment and the transition to a circular economy. It's even more meaningful as many of our guests have been able to make the trip over to South Korea, and we're delighted to have you here today. For those who are joining us offline, you might also notice some of the efforts that have been made to have a more eco-friendly event. There are no single-use plastic water bottles. You'll also find memo holders that have been made with eco-friendly materials and displays in the lobby made from reused honeycomb boards. So our fourth session will also feature our MZ generation as well, which makes today's conference even more special. So to start off the opening of our conference, I would like to introduce the chairman of the Institute for Global Economics, Dr. Chung Kwang-woo, for his welcoming address. Please join me in welcoming Chairman Dr. Chung Kwang-woo this morning.
Good morning, ladies and gentlemen, and distinguished guests. It is a great honor for me to open Ige-Wfg Financial Group International Conference on behalf of the organizers and supporting institutions. I would like to extend my warmest welcome to each one of you. And also, at the outset, please allow me to say that we gather here today with the most profound sense of condolences and prayers for the victims of the tragedy occurred in Seoul last week. Ladies and gentlemen, global economy has never been under such serious threat as tremendous headwinds continue to accumulate around the world. Needless to say, our urgent task is to overcome the impending multiple crises. But we must not lose sight of the most pressing issue of our time, the climate risk. More than ever, it is absolutely vital for humanity to work together for the revitalization of our ecosystems and transition to a circular economy. And we must also strengthen our efforts to achieve sustainable growth at both corporate and national levels, to keep up with increasing social responsibilities, if we are to secure a better future for the next generation. Furthermore, the role of finance is becoming more essential in facilitating energy transition and industrial transformation for the greater economic resilience and sustainable development down the road. Against this backdrop, the conference is intended to explore a broad range of interrelated issues pertaining to the economic challenges and climate changes, which include the topics of coping with the new global economic landscape and geopolitical uncertainties, strengthening ESG principles as a crucial corporate management and investment strategy, and pursuing a green growth strategy and policy in the age of energy security and carbon neutrality. Ladies and gentlemen, I'm so very grateful that we are joined by the world's leading scholars and business leaders as well as senior officials in Korea. Although I cannot recognize all the outstanding participants individually due to time constraints, I would like to extend deep appreciation to Honorable Mr. Kim Joo-hyun, Chairman of Financial Services Commission, and Mr. Kim Tae-hyun, Chairman and CEO of National Pension Service, and Nobel laureate Professor Rod Merton of MIT, who is also IGE's honorary chairman, for their congratulatory addresses. In addition, allow me to thank our distinguished speakers, especially Mr. Henry Fernandez, Chairman and CEO of MSCI for more than 20 years today, and Professor Ann Kruger of Stanford, former chief economist of IMF and the World Bank, among many other prominent speakers, for joining us in person today. Likewise, special thanks must go to Mr. David Rubenstein, founder and chairman of the Carlyle Group, and Dr. Mark Carney, who is the UN Special Envoy on Climate Change and Finance, and vice chairman of Brookfield Asset Management, as well as a former governor of the Bank of England. Mr. Mark McComb, the senior managing director and chief client officer of BlackRock, and Mr. Jin Sung Ho, chairman and CEO of KIC, for their special messages. Last but not least, I would like to thank Mr. Son Tae-sung, chairman and CEO of Uri Financial Group, for his strong commitment to corporate social responsibilities, which made this important gathering possible. I sincerely hope that all the speakers and participants will join us to make this conference a highly productive and successful event that contributes to creating a better tomorrow for not only Korea, but around the world. I wish you all the best. Thank you very much.
Thank you. Thank you very much to Dr. Chong Gang-woo for your welcoming address. At this time, I'm pleased to invite Mr. Son Tae-sung, Chairman and CEO of Uri Financial Group. Mr. Son previously served as the President and CEO of Uri Bank, and we're delighted to hear his welcoming address at this time. Thank you very much, Chairman Son Tae-sung.
Greetings, distinguished guests, ladies and gentlemen. I am Son Tae-sung, the Chairman and CEO of Uri Financial Group. Before I begin my welcoming remarks, I would first like to express my deepest condolences to the victims and their families who are in deep pain and sorrow over the Taewon tragedy. And I would like to thank all the distinguished guests for joining us here for the international conference. And I would also like to thank Chairman Kim Joo-hyun of FC for being the strong pillar for Korean economy finance. I'd like to express my very special appreciation to Chairman Henry Fernandez of MSCI, former Deputy Managing Director, and Kruger of IMF, Executive Vice President Clary Laurie of IIF, and all the speakers and panelists for their much valued presence and insights. Please accept my regrets for not being able to introduce all the participants due to time limitations. I also want to welcome everyone joining the conference via YouTube. Thank you so much for your interest and support. Ladies and gentlemen, today's conference seeks a path towards a sustainable finance for a better world. As you all know, uncertainties in the financial market is deepening with sharp interest rate hikes due to global inflation against a backdrop of a situation where the fear of the pandemic has not yet completely subsided. On top of these issues, the clock of climate change is ticking ever rapidly, moving towards a crisis we are not yet prepared for. In this era of the new normal, companies will not survive without dealing with the climate crisis by achieving carbon neutrality, by considering coexistence with various stakeholders. Ladies and gentlemen, ESG is no longer an option. It is something that we all need to do in order to ensure the survival of our generation. And as the chairman and CEO of the Free Financial Group, I feel a greater sense of social responsibility than ever before and promise to do my very best to make a better world. In this sense, I am very much looking forward to today's international conference with the theme of sustainable finance for a better world. And in each session of the conference, there will be presentations and discussions by prominent global thought leaders, and I'm confident that various solutions will be identified through active discourse. Finally, I would like to express my sincere gratitude once again to all those involved in making today's event possible, especially Chairman Chung Kwang-woo and everyone at IGE. And I wish everyone good health and happiness. Thank you very much.
Chairman Son Tae-seung for your welcoming address, and we look forward to hearing more about Uri Financial Group's initiatives in nature recovery and the circular economy transition. We're also honored to have the Honorable Kim Joo-hyun, Chairman of the Financial Services Commission. Mr. Kim was previously Director General of the FSC's Financial Policy Bureau and Standing Commissioner of the Securities and Futures Commission. Please join me in welcoming the Honorable Kim Joo-hyun for his congratulatory address.
Good morning, ladies and gentlemen. As introduced, I'm the chairman of the Financial Services Commission. At the outset, allow me to extend my deepest and heartfelt condolences to the victims of the Itaewon incident. Our thoughts and prayers are with you. At the outset, I would like to congratulate the IGE and Uri Financial Group for convening this very timely and meaningful event. And my special thanks goes to Chairman Chung Kwang-woo of IGE and Son Tae-seung, Chairman and CEO of Uri Financial Group, for bringing us all together, global leaders and experts, to talk about the meaning and role of sustainable finance in building a better, brighter world. My thanks also goes to Kim Tae-hyun, Chairman and CEO of the National Pension Service, and Professor Robert Merton for your congratulatory remarks that you'll be delivering right after. And also thank you to Henry Fernandez, Chairman and CEO of MSCI, for joining us as a keynote speaker. Despite the slowdown in the global financial market, the flow of capital into sustainable finance remains intact. However, the recent economic, political, and military whirlwind has sent shocks of uncertainty reverberating throughout the market across the world, raising concerns that ESG might just lose steam due to greenwashing, among other issues. However, ESG, comprising the environment, social, and governance factors, are values that are underpinned by sustainable finance in our quest to build a brighter, healthier, and more sustainable future for our children and our future generation. The Financial Services Commission is working on a wide range of policies that can help sustainable finance reach its full potential. First and foremost, transparent information-based ESG investments require an overhaul of disclosure and reporting systems. Beginning in 2025, ESG disclosure mandates for companies publicly traded on KOSPI will be phased in, and the companies required to do so and their disclosure items and standards will be fleshed out in more detail. Furthermore, the Financial Services Commission is committed to engaging in the process as ISSB sets global sustainability disclosure standards. Second, enhancing credibility in ESG investments necessitates stronger independent assessments and ex post facto reporting on ESG bond issuances. And ESG washing will be prevented to the best of our abilities by helping companies utilize the K taxonomy. Last but not least, ESG management capacity building is also an area that we support. In cooperation with the Korea Exchange, the FSC has launched an ESG information platform where investors can get easy access to ESG data and information. The FSC's Green Finance Task Force's Green Finance Implementation Plan laid the groundwork for 5 financial associations to come up with a green finance guidebook for financial institutions to use. Ladies and gentlemen, green investments at the center of ESG are said to be path dependent, meaning that depending on the level of our commitment in the early stages, the cost entailed in transitioning structurally towards a sustainable economy will differ. The more we drag our feet and the later we get to work, the cost of the transition will only mount. I hope that the world renowned opinion leaders and experts gathered here today can put our heads together to devise solutions for overcoming this crisis, achieving an efficient economic transition, and building a better future. I look forward to your insights. Thank you for listening.
Thank you to the Honorable Kim Joo-hyun for your congratulatory address and for showing your support for today's conference. I would now like to invite Mr. Kim Tae-hyun, Chairman and CEO of the National Pension Service. Prior to his role as Chairman and CEO of NPS, Mr. Kim served as President of the Korea Deposit Insurance Corporation, as well as Standing Commissioner and Secretary General at the Financial Services Commission. Please join me in welcoming Chairman Kim Tae-hyun today.
Good morning. My name is Kim Tae-yeon. I'm the Chairman and CEO of National Pension Service. Let me extend my congratulations on the opening of the Ige-Wfg Financial Group's International Conference on the theme of Sustainable Finance for a Better World. Chairman Chung Kwang-woo of Ige, Chairman Sun Tae-seung of Uri Financial Group, distinguished guests, ladies and gentlemen, it's a pleasure to meet you. I'm very pleased to meet Honorable Chairman Kim Joo-hyun of FSC, and Chair Professor Robert Merton of MIT, speakers and discussants. The IG International Conference is one of the most prominent conferences in Korea, with participation by the world's foremost scholars and leaders from various fields. I hope the conference will be a meaningful forum for a presentation and discussion for everyone seeking a path of sustainable growth of the financial industry through ESG management and financial innovation. Ladies and gentlemen, ESG has become an essential part of the management strategies of financial institutions. Non-financial factors such as environment, society, and governance are positioned as key factors influencing future capabilities related to reputation and performance of a company, as much as financial factors such as operating profit. Right after the Asian financial crisis, transparency in corporate governance was relatively unknown and thought to be an inconvenience in Korea, but is now an essential, inseparable part of corporate management. ESG management is not so different. It is also a management strategy that can enhance corporate value by increasing profitability and cutting costs in the mid to longer term. Therefore, systematic management of ESG risks and opportunities is the key to ensuring corporate sustainability. In this regard, the importance of responsible investment by financial institutions is on the rise. As you know, responsible investment is a part of ESG management, and it is a method that considers ESG issues in the investment decision making process in order to pursue stable returns while minimizing investment risks in the long term. Institutional investors, including leading global pension funds and asset managers, investors are actively considering non financial risks related to ESG, and institutional investors' role in responsible investment is already a global trend. As a long term investor that manages citizens' retirement funds, the National Pension Service of Korea began responsible investment in 2006 by introducing the responsible investment requirement by external asset managers of local equities. In order to improve our understanding of responsible investment and identify best practices, we have joined international responsible investment councils and expanded exchanges with global institutional investors. NPS has also established its own ESG evaluation framework. ESG ratings are calculated twice a year to understand how companies invested by NPS are doing in terms of ESG activities. By the end of 2021, an ESG integration strategy that considers ESG ratings have been applied in the in-house management of local equities and fixed income. Beginning from this year, asset classes that must abide by responsible investment principles will account for more than half of the NPS's AUM, as external asset managers for local and international equities and fixed income will have to consider responsible investment requirements. Next year, we plan to apply the ESG integration strategy to the direct in-house management of international equities and fixed income. The gradual strengthening of responsible investment by the NPS is serving as a catalyst for institutions in the domestic financial market to participate in responsible investment. By including stewardship code and responsible investment elements when selecting an external asset manager, and by having external asset managers, NPS, and also brokerage houses in relationship with NPS submit responsible investment reports, NPS is encouraging market participants to lay their own foundation for responsible investment. Going forward, the NPS will further strengthen its assessment of its external asset managers' ESG activities. This responsible investment activities of the NPS will serve as a touchstone for enhancing the sustainability of the National Pension Fund and enabling the ESG management to be successfully entrenched in corporate management. And we will also transparently disclose our responsible investment activities. I hope today's conference will serve as an opportunity to identify the right ESG management directions and enhance the sustainability of the finance industry. Thank you.
Chairman Kim Tae-hyun for your congratulatory remarks and sharing about MPS's proactive initiatives in ESG. At this time, I would like to turn your attention to the screen for a special pre-recorded message by Professor Robert Merton. Robert Merton serves as chair professor at both MIT Sloan School of Management and Harvard Business School, and received the Nobel Prize in Economics along with Myron Scholes in 1997. Please turn your attention to the screen at this time.
I'd like to extend a heartfelt welcome to all of you attending the International Conference, co-hosted by the Institute for Global Economics, IGE, and Worry Financial Group. I especially would like to thank Dr. Zheng Kwang Wu, chairman of IGE, for giving me the opportunity to deliver today's congratulatory speech. As honorary chairman of IGE, I very much wish to attend this event in person, and I sincerely apologize for not being there today. However, it is still a privilege for me to be able to greet you through video message. After experiencing unprecedented challenges from the COVID-19 pandemic, the world is now facing its most significant set of hurdles since the global financial crisis, including soaring inflation, high interest rates, the strengthening US dollar, and the ongoing war in Ukraine. Additionally, climate change is increasingly impacting our daily lives with heat waves, droughts, and floods worsening day by day. If this situation continues, vulnerable populations will be most at risk. Against this backdrop, I believe that the core themes of this conference, with the proliferation of natural recovery and environmental protection, will be important catalysts in overcoming the climate crisis and achieving sustainable growth. I hope that many productive and innovative ideas will be discussed at this conference to help Korea and even the world step up to the challenge of ensuring a better future for humanity. I look forward to visiting Korea and meeting all of you in person next time. Until then, I wish everyone good health and hope that you have a successful conference. Thank you.
Thank you very much to Professor Robert Merton, and we do hope to see you in person next time. Before we begin with our first session, I would now like to invite IGE Chairman Dr. Chung Kwang-woo and Mr. Henry Fernandez, Chairman and CEO of MSCI. Mr. Fernandez has been a staunch supporter of IGE's conferences in the past, but this is the first time that he is joining us in person. Please join me in welcoming both Chairman Chung Kwang-woo and Mr. Henry Fernandez. I think we need to have another seat ready. So please wait with us 1 minute as we get the stage set for Chairman Chung Kwang-woo and MSCI Chairman Henry Fernandez. So once again, let me invite IGE Chairman Chung Kwang-woo to the podium, along with MSCI CEO and Chairman Mr. Henry Fernandez. Please join me in welcoming.
All right, first of all, thank you very much, Andy, for making a very long trip to join us, this morning. I very much appreciate it.
It's such a pleasure to be here in person. I know I have participated via video to this incredible event, and I want to thank you, IGE, and Worry Financial for sponsoring these kinds of forums to have a good exchange of constructive ideas on how to solve many of the world's problems.
All right, thank you. Given the time constraint, why don't we get started? I would like to start with a macro picture. Now, as you know, the world economy has been under tremendous pressure. Now, most analysts, including those at IMF and World Bank, are predicting some sort of recession. There are different views about the degree of recession, but most obviously we would likely to have a recessionary environment next year. What is your thought, your MSCI view on economic prospect through next year and beyond?
So the global economy faces significant headwinds. And I think that it's going to get worse before it gets better, unfortunately. We are faced, as has been said before, with a number of global crises. Professor Merton talked about rising inflation, interest rates, king dollar, a war in Europe, food and energy crisis. So many of the things have come to the forum together. There are a lot of changes in the geopolitical landscape between East and West, and obviously between the West and Russia. So it feels like this is a period of either a cyclical downturn, politically and economically, financially, or or a start of a new paradigm in the world. And I think we need to be mindful of that. As you said, the large IMF and World Bank institutions have downgraded growth next year to 2.7%. I just spent time with the Citibank group people. Their forecast is 2.5%. But interestingly, I asked them what was the definition of a global recession, and in their mind was it was basically 1% growth or below in the world. Their forecast of 2.5% includes China. Excluding China, so the world economy ex China is 1%. So that tells you, the state of affairs going into 2023, and all of that will be obviously reflected in financial assets of all types and in commodity markets.
Okay, thanks. The other day, Fed has again taken giant step. That's fourth time in a row to push its core inflation rate, interest rate to 4%. Right? Now, obviously, they would put enormous pressure on the growth side, and also will affect foreign exchange market in a bigger way. So some say that U.S. economy is relatively strong. And along with this high speed of rate increase, so-called king dollar trend like to most likely continue for a while. And what is your perspective on this dollar prospect, and also overall financial market side? How do you see the equity market and bond market would respond in this very high interest rate environment with recessionary pressure building up?
So the U.S. economy is very strong right now. And how could it not be if you had for 2 years zero interest rates and almost $5 trillion of fiscal stimulus on the demand side? And on the supply side, limited availability of labor by COVID and the results of COVID, and by the significant reduced immigration that took place during the Trump administration and during the pandemic. And on top of that, we've had supply chain issues of, in bringing materials into the country. So, like any economist will tell you, if you stimulate demand very high and there is limited supply, inflation zooms up, dramatically. As a former economist that in the late 70s and early 80s spent most of my life studying macroeconomics and monetary policy at a time of high inflation, I may have forgotten a lot of that, but the one thing that I do remember is that inflation and inflationary expectations are really hard to break. Really hard to break. Larry Summers, former Treasury Secretary, has said that since the 1950s, the US economy, when faced with inflation of higher than 4% and unemployment lower than 5%, has always gone into a recession in the following 2 years. Well, inflation is 8.2% right now, and unemployment is 3.5%. So I think the Fed has a big challenge, and I think they're gonna go deeper and higher in their monetary policy. They don't want to lose credibility again, and they don't want to get a job half done. So I think it's unlikely that the U.S. economy will end up with a soft landing in the next couple of years. That has enormous implications for the rest of the world because very high U.S. interest rates at a time of recessionary markets around the world is going to continue to propel the dollar higher. It's already very high. It may stabilize here, but my own view is that it's going to continue to be higher, and that unprecedented set of actions is going to have enormous implications for export producing countries. Obviously, it's going to import inflation, and precisely, I think the biggest effect is going to be in the emerging markets of the world. So the U.S. economy is going to take a while to break down its inflationary expectations.
Okay. Just to follow up, you said, like many others, this super strong dollar is likely to continue for a while. Now, Ken Rogoff at Harvard recently, when I had a webinar discussion with him, was saying that there's an upper side 10 to 15% more room for further strengthening of dollar. Is that the kind of a ballpark that you can agree with?
Yeah, so I'm not currently an economist anymore, but I do try to look at all of that, particularly in the context of the MSCI business, which is a conference of global investments, global economics, and global policy. And I think there is a good shot that the euro gets to 90 against the dollar. We'll have to see what happens in Japan in April with the transition in the Bank of Japan. But it could be that the yen will continue to weaken, and so will the won. The pound is already, I think, UK has been the first country in all of Europe that has shown us what the significant effects could be of high inflation and low growth. So I think currencies will get a major realignment here for a couple of years, and the dollar will continue to be king, and everyone who is betting on a weaker dollar here should be aware.
Well, let's turn our attention to a very important country, China. Now, Chinese capital market has been under tremendous pressure lately, especially after this 20th Central Communist Party gathering, enabling Xi Jinping's third term. And our market responded very badly, and then it went back. So back and forth, a huge volatility has been shown at the time. A lot of anxiety about how we see the future of China, especially China's economy, under this new sort of leadership they set up. So on top of that, the declining growth momentum in China has been very much noticeable. Lately, the growth prospect also has come down. Now, overall, what do you see the future of China, say for next 5 years under Mr. Xi Jinping's third term? They have very serious economic challenges structurally, aging problems, high debt, property sector collapse, all those things combined. Now, do you see any light or a bright spot so that the investors could be motivated to put their money in?
We're witnessing a significant shift in the governance of China, politically, economically, and financially, since Deng Xiaoping started the modernization of China in the fall of 1978. And I think there are a lot of areas. Clearly, the move away from private enterprise to state-owned is going to create maybe more control of the economy, but a lot more inefficiencies. As all of you know, the property and construction sector of China represents 1/4 of the economic activity of China. That is right now a little bit under stress, and have to slow down. So that will slow down the economy. Clearly, population growth is slowing down. I think we've had peak labor markets already. So I think China is in for a retooling, repositioning of its economy in a major way in the next 5-10 years. It's going to have to turn into a more consumer-driven economy rather than investments. That's going to benefit a lot of companies that export to China, because on the investment side is about raw materials. Going into China, on the consumption side is going to be a lot of the things that people here in Korea and in Japan and the West produce. So that's going to present major opportunities. I think the question will become, with much lower economic growth, let's say half of what they used to have, can they continue to create the social contract that the Communist Party has with the people of China? It's hard to say because they still have a lot of people in poverty. So the last point that I will say is, I don't think that when people talk about a decoupling of China and the U.S. and the West, where people make references to what happened during the Cold War with Russia and the Soviet bloc, it's a completely different set of circumstances right now. I think there's going to be a lot of friction for sure, geopolitically, militarily, certain areas like technology, at the same time that a lot of cooperation in other areas.
Thanks. I think one of the most important part of our conference is about climate change. So let's talk a little bit about this now. As I understand it, you wrote a very good article last spring arguing that the energy crisis could provide the impetus we need to drive faster global climate progress, at least over a long time. That's what you said. Do you still believe that? Or any change that you'd like to make at this point? And also, beyond the growth of renewables, I think I would like to make this question very, with the highlight. Beyond the growth of renewables, is it possible we could see a renaissance for nuclear power from the perspective of clean energy and energy security?
Contrary to a lot of people in the world that are very dismal and pessimistic about the transition to a low carbon economy, I am cautiously optimistic. Clearly, what we're doing here in the next 15-20 years is the largest reconstruction of the global economy in the history of humankind. That $90 trillion global economy needs to go from reliance on fossil fuels to reliance on renewable energy. And I like to, for those economic historians in the audience here, the world economy never grew more than, say, 50 basis points throughout millennia. And it achieved growth in the single digits through fossil fuels, starting with coal and then oil and gas and all of that. So it's a major driver of economic growth in the world that we need to replace. And of course, that is a major challenge of our generation that we need to rise up to. I am optimistic because every one of these transformations is powered by capital. The role of capital is absolutely essential, as you said in in your opening remarks. And it, a number of years ago, when MSCI has about 10,000 investment institutional clients in some 90 countries, it was hard to have a discussion on climate change and climate risk even a few years ago. Today, more than half of every discussion I have, sometimes even the whole meeting, is about climate change and the risks and the benefits that people can have in their portfolios. If you're an investment institution, on their loans and the like. Of course, it's not an easy transition. It's going to be a very difficult one, but there is a massive mobilization of capital in the world to reprice it uh, and reduce the cost of capital to low carbon companies and increase it to high carbon companies, and reallocation of capital. And we're in the middle of all of that with a lot of our clients. So that was not happening. I think Glasgow last year was a major impetus to that. We're trying to get a benefit from that this year. So the capital mobilization has started. Now, obviously we'll have to rely on capital going into breakthrough technologies in energy and in green technology, and that has not yet happened, but there are a lot of promising areas. So that doesn't mean we should relax. What it means is that we should be very keenly focused on continuing this process. Going back to your specific question, yes, this year clearly because of the fight for energy in Europe and other parts of the world is carbonizing a lot more than it was in the prior years. The use of coal has been increased dramatically, even in the use of oil, because there's no alternative. We're not going to let people freeze to death in the winter, and we're not going to let businesses not run their operations. So we got to grab whatever we can in the context of this energy crisis that Russia created by weaponizing their gas and oil exports. So, but I think that what is happening right now is that every policymaker in the world has realized that energy security and energy independence is a must for their countries. So, clearly, oil and gas and coal has sometimes been the most mobile form of energy. You can take it from one part of the world and transport it to another part of the world. So people are now focused on what they have in their own country, whether it's wind, whether it's solar, to be able to create that energy independence and energy security. And there is keen focus on nuclear. Of course, nuclear is a socially divisive conversation, but there is no future of the world without nuclear power. And I think it's important that you all talk about that, in every opportunity. There is no future without nuclear power. And the old nuclear power facilities were maybe a little less safe. The current ones have incredible technology. In this area, Korea, a lot of you here in Korea leads the world. Korea is the largest, I think it's 27% of your energy come from nuclear, and you're trying to get it to 30% by the year 2030. Korea is a major exporter of nuclear technology, is helping another countries create nuclear, energy facilities, including I think the Emirates. So I think there is a major opportunity for the country, for the Republic of Korea, to really lead the world in this respect.
I appreciate the last point, because it's becoming very clear that in order for us to achieve carbon neutrality, it seems absolutely essential to have a good balance between renewable energies and this nuclear power. Is becoming more real than ever, especially with this situation in Europe and elsewhere. Now, yeah. Now, perhaps last question, given the time constraint. Now, after this conference, you'll be leaving for Egypt to attend COP27 Global Summit. What do you expect from that meeting? And what would you like to see?
Well, I actually leave in a few hours, so my trip to Seoul ended up being a lot shorter than I wanted it to do. But I do promise to come back again to another of your conferences. I love. He and I have been friends for 15 years, and look at the world similarly. And I thank you very much for the invitations you've given me to participate. You know, in Sharm el Sheikh, Egypt, which is the COP27 venue, uh, it's going to be it's going to be a very challenging UN conference there. Obviously, the role we play is in finance and capital, and I'll come back to that. But on the political front, uh, it's a different world than it was last year, with a different set of challenges. This COP27, since it's hosted by Egypt, is going to focus on the role and the impact of emerging markets. Two-thirds of the carbon emissions of the world come from emerging markets and developing countries, and they are the least equipped, to deal with the problem. So I think the big fight there first is going to be on the $100 billion commitment that the rich countries promised the developing countries, and it's going to be a difficult one because every developed market in the world is faced with incredible challenges, and in Europe, it's going to be hard to tell the European population we are going to give another $20 billion to emerging markets at the time in which they don't have even energy to heat their homes. So that's going to be the major political focus there on the part of finance and investments. The best outcome of this COP would have been an agreement on the global price of carbon. I don't think it's going to happen. I'm not that optimistic, but that would have been a good outcome. So what we're hoping for, short of that, is that countries continue to make aggressive commitments to decarbonization. Secondly, that we get more people in finance and investments pledging to be part of the alliances, the various alliances in G funds. So that's something else. We're going from commitments that the investment and finance industry made in 2021 in Glasgow to measurement now. And we're unveiling with GFANS and MSCI and Bloomberg Philanthropies, with Mark Carney, who is going to speak here later, and Michael Bloomberg. We're unveiling a public data utility. What we're trying to do is set up a portal with technology in which every issuer of either bonds or equity in the world can submit their carbon emission estimates into that utility for the use of everyone. So we can create tools and we can create transparency. So we're very focused on achieving that.
Okay, thank you very much. I think it's time to close.
Thanks for having me.
All right,
and have a good
wonderful
constructive
trip
conference
to Egypt, and look forward to seeing you again soon.
Thank you.
All right, thank you very much.
Thank you very much again to Mr. Henry Fernandez of MSCI and to IGE Chairman Chong Guang-woo for the discussion and the insights that you brought. At this time, we would like to take a quick break, and then we will start with our first session at 10 a.m. I look forward to seeing you soon.
To become the most trusted and beloved financial group by various stakeholders, we established mid to long-term ESG goal as Plan 0100 and the Group ESG Strategy System. Uri Financial Group advanced ESG governance system by newly establishing the Group ESG Management Council and ESG Management Committee and implemented practical ESG management activities. Uri Financial Group will increase sharing with the local community through the unique power of Uri, which means us. In particular, we are carrying out various social contribution activities in connection with the UN SDGs. Also, we pursue sustainable management through mutually beneficial relationship with all the stakeholders around us.
Hope you enjoyed your break time and that you're ready for the first session of the Ige-Wfg International Conference. We're now ready to begin our conference in earnest with our first session, and our first session is entitled A New Chapter for the Financial Industry, Spearheading ESG Management and Embracing Innovation. Our first session will be moderated by another veteran supporter of our IGE conferences, Dr. Henny Sender, whose illustrious career includes managing director at BlackRock and former chief correspondent of the Financial Times. We have an incredible lineup of industry leaders joining us at the Shillas Hall today, and I'm excited to pass the microphone to Henny at this time once you're ready. And she has told me to wait, and so I will wait for just a few seconds as we get the stage set up. So I think we're almost ready. It's a wonderful crescendo to our first and equally amazing session for the day.
Thank you. My microphone is on. Before I welcome you all to this panel, I just want to express my sympathy to all of you for the tragic events of a few days ago. And coming both from New York and Hong Kong, one of the things that strikes me is how united all of you are. This country is just so cohesive. You've had more than your share of sadness, but the sorrow and compassion and the cohesion here, so I expend my admiration as well as my sympathy. Dr. Jun is a very hard act to follow, whether for any moderator or for any investor. I've known Dr. Jun since he was chairman at NPS, and I have always thought he is best practice. People always criticize finance as being short-term, but Korea has always financed its incredible national champions in an industrial world, and it is my pleasure to introduce Dr. Jin, who has the more challenging task of figuring out how to deploy capital going forward to create the national champions that will make ESG possible through innovation. And now it is my pleasure to introduce you all to Dr. Jin. Thank you very much.
Good morning. My name is Seung-ho Jin, and I am the CEO of the Korea Investment Corporation. Congratulations to the IG and Uri Financial Group on this auspicious event. And I'd like to thank you to IG Chairman Chun Kwang-woo, Uri Financial Group Chairman Son Tae-seung, and everyone who helped make this conference possible. It's an honor to be here. And welcome to our distinguished guests from home and abroad. Ladies and gentlemen, it's not an easy time for ESG. The geopolitical crisis in Europe has triggered an energy shortage that has brought on inflation and interest rate hikes, of all which has led to unprecedented instability and uncertainty in the financial market. With international organizations like the IMF, World Bank, and OECD having lowered their growth forecast, concerns about the recession are growing. So is skepticism about ESG and sustainable investment. But we have to remember both are priorities we must pursue for future generations. I think of ESG more like a marathon than a sprint. It's a race that requires steadiness and tenacity rather than short bursts of energy, because we'll never reach our goal of sustainable growth if we let challenges get in the way. To share a bit of our ESG history, as the Sovereign Wealth Fund of Korea, KIC established our stewardship principles in 2018. We were one of the first domestic institutional investors to do so. A couple years later, in 2020, we established an ESG integration system that considers environmental, social, and governance factors in the investment decision-making process for all sectors. Today, we continue to not only improve returns through ESG, but also to expand our sustainable investments. We have an ESG strategic fund that selects and invests in ESG-strong companies. We also look for opportunities that will create substantial environmental and social change through investing the proceeds of the Korean government's Green and Sustainability Bond. In 2021, we introduced an investment exclusion strategy. It's a comprehensive strategy through which we conduct research on ESG-related issues like coal, hemp, and controversial weapons, and exclude certain industries and companies. To effectively respond to the climate crisis, we have also built a climate change model through which we measure the carbon emissions of KIC's equity and fixed income portfolios and analyze climate scenarios. We have declared our support for the TCFD as well. TCFD stands for the Task Force on Climate-Related Financial Disclosures. And in line with the sort of disclosure it recommends, we recently shared the results of climate analysis we conducted in our Sustainable Investment Report. We are also in the process of joining the UN PRI, which is the world's largest consultative body for responsible investment. So those are the broad strokes of what we've done in terms of ESG. But what I want to emphasize today is that ESG is a long-term priority, something KIC will continue to promote and pursue. We plan to keep increasing our proportion of ESG investments and will make ESG a substantive part of what we do. Going beyond simply investing more in ESG, we'll develop various ESG strategies, considering the trends and characteristics of each asset class. For example, strategies related to renewable energy, green tech, and impact investing. We'll also strengthen our shareholder activities and collaborate more with partners. Specifically, we'll work closely with our Global Stewardship Manager to actively reflect the latest shareholder rights agenda, while promoting solidarity with institutional investors on major issues. We'll also discover green investment opportunities through the PRI and other sustainable investment partnerships. All the while, we'll promote responsible investment here and abroad through sharing information with domestic investors at ESG conferences like today's and in various other ways. Ladies and gentlemen, while it's true that the world has made great ESG progress in recent years, the challenges remain. For example, one US state has banned firms from doing business with it for not supporting the oil and gas industry. Another state has restricted ESG considerations in making investment decisions. To address these and other challenges, we need to pool our wisdom. At conferences like this, we need to share our thoughts, ideas, and suggestions on sustainable finance and learn and grow together. So I ask that you do so generously. It's the only way we can pursue sustainable growth. Thank you very much.
Dr. Jin, thank you so much. You've touched on many of the themes that we will be returning to in the next hour, particularly how hard it is to find areas that unite us and not just divide us. Before we get started, we have a video from Mark McComb of BlackRock, who is speaking on behalf of BlackRock, unlike me, who's speaking on behalf of my wonderful panel. So we'll start with the video and then we'll start our discussion. Thank you.
Well, good morning, everyone, and greetings from New York. My name's Mark McComb. I'm BlackRock's Chief Client Officer. First and foremost, I'd like to say a big thank you for the invitation to speak today, and congratulations to the Ige-Wfg Financial Group for hosting their international conference. Now, before I begin, I did want to take a moment to express my condolences and the condolences of everyone at BlackRock for the tragedy that occurred in Seoul over the weekend. Our thoughts and prayers are with all of you during this very difficult time. I do wish I could be with you in person, but I'm thankful for the opportunity to share BlackRock's perspective today. In my role, I oversee relationships with our largest clients and engage in timely discussions around the global energy transition and how BlackRock is leading those initiatives. I also used to spend a lot of time in Korea, and so I'm disappointed that I'm not able to be with you today, but I hope next year or in the years to come we'll have a chance to get back together again. Now, of course, we all know what a difficult year it's been for investors. They've had to wrestle with an extraordinary volatile market and a lot of geopolitical uncertainty. 2022 has brought to the end of low interest rates, low inflation, and easy money, and has ushered in a new regime of higher interest rates, higher inflation, and market volatility. Within the span of only a few months, we've witnessed the conflict in Ukraine, policy uncertainty, and a global energy crisis that's not been with us since the 1970s. We expect that markets and clients alike will continue to grapple with the investment implications of this worsening trade-off policymakers face between growth and inflation. And we're calling for a lot of uncertainty as we head into 2023 with a very high possibility of a global recession. Now, 2 years ago, we actually anticipated a tectonic shift in capital into more sustainable assets as investors adapted their portfolios, presenting a historic investment opportunity. And whilst we're still only at the very beginning of this shift, we can see that it's well underway, and over the past 2 years has certainly been accelerating. Of course, the transition is already uneven, with different parts of the global economy moving at different speeds. It's going to take time to retool capital-intensive industries that provide essential services for the global economy. I know that you know that only too well right there in Korea. We need to pass through shades of brown to shades of green. For example, to ensure continuity of affordable energy supplies during the transition, oil and gas, natural gas will play an important role both for power generation and heating in certain regions. Now, of course, our job is a fiduciary to our clients. That means it's not our money. We have to act on behalf of our clients in the way that they mandate us to do so. But we also want to work with clients to help them understand, navigate, and drive, if they so choose, the transition. We expect to remain long-term investors in carbon-intensive sectors because these companies play crucial roles in the economy and in a successful transition. We also use innovative data and analytics, as well as fundamental research, to identify issuers across all industries that are better prepared for the transition than their peers. It's about picking the winners and the losers like we do with any investment opportunity. So to be very clear, we do not pursue broad divestment from sectors and industries as a policy. We don't believe that that's the right way to achieve the desired outcomes. We have some clients who choose to divest their assets while other clients reject that approach. A portfolio fully divested from carbon-intensive sectors in the near term may be at odds with enabling an orderly transition to a net zero economy over the long term. In our active strategies, for example, we believe that identifying carbon-intensive companies that are positioning themselves to lead decarbonization within their industries actually provides better opportunities for us to create value for our clients. Now let me turn a little bit to BlackRock's ESG and sustainability mission and purpose. Our work on climate is rooted in our fiduciary duty, as I said earlier, and as an asset manager, it's to help our clients improve their investment outcomes. We focus on climate not because we're environmentalists, but because we're capitalists and fiduciaries to our clients. As an asset manager, BlackRock's fiduciary role includes helping our clients navigate the economic transformation. That component of our strategy has not changed. But of course, our clients' biggest challenges really lie in three categories. The first of these is really around execution. So based on surveys we've done, 60% of our largest clients have made net zero commitments. They're looking for help in executing these commitments, including things like assessing starting points, transitioning assets, and measuring progress on a level playing field basis. And this can be far more tricky to actually implement than it may seem, based on different regulatory reporting environments, different jurisdictional laws, and of course that when it comes to things like carbon reporting, there's not yet any global standards that they can work towards. So all of this presents very high execution complexities for our clients. Now, along the same theme, the second issue is really around data and reporting. Measurement and reporting are consistently cited by our clients as one of their top challenges, and it's driven by multiple data sets, as I mentioned, new regulatory requirements, inconsistent disclosures, and increased macro uncertainty. But we do believe that the world is moving towards greater levels of transparency and measurement in a way that is going to allow asset owners to really take a look at their portfolios in a much more holistic manner and be able to actually navigate the climate transition more effectively. Finally is really around whole portfolio solutions. Clients are looking for customized ways to green the core of their broad market equity and fixed income exposures and to incorporate climate awareness into their alpha and alternative books. Again, this is easier said than done, particularly when it comes to the fact that you're not starting with a clean sheet of paper. Many clients have long and deep investments in different asset classes, and one of the things is really to understand the starting point and then the journey that you're taking the portfolio on in order to seek your desired outcome. So it's no secret that climate risk is an investment risk that will impact returns in investors' portfolios as companies navigate both the physical and transition risks associated with climate. The wholesale transformation of the way the world produces and uses energy, moves goods and people, and constructs the built environment will reshape the real economy and financial portfolios over decades to come. An orderly transition towards net zero will benefit the economy and our clients in aggregate. We believe this is a matter of physics and economics, not values or norms. We project 25% higher GDP growth over the next 2 decades under an orderly transition compared to a scenario in which the world fails to act. This is not a political statement, it's an economic statement, and it's a statement made by an investor in order to fulfill our fiduciary requirement and deliver the returns that our clients are looking for. In closing, I think we can all agree that addressing climate issues and working towards an orderly transition is probably one of the most important existential risks that we all face as a global community. At BlackRock, we're committed to the concept of choice. We believe that people are in different places when it comes to how they're going to allocate capital and upon what basis they want to measure their returns. That's been our job as an asset manager since we came into formation over 30 years ago and will continue to be our North Star. For my part, I want to personally thank the Ige-Wfg Financial Group for hosting their international conference and for giving me the opportunity to discuss how BlackRock is focused on delivering returns for our investors and tapping into these opportunities. I hope you enjoy the rest of the conference, and I look forward to seeing you in person very soon. Thank you.
Thank you very much. In his opening statements, Dr. Hung raised the question about, is Korea bearing its share of responsibilities? And my panel has been saying to me, we want you to end on an optimistic note. And I'm convinced that for Korea, if not for the whole world, green growth doesn't mean slower growth, but there are those concerns which we will illuminate. It makes sense that the first panel today is about finance, and there is an optimistic assumption underlying that, which is that it is the role of finance to be a means, not an end. It's the role of finance to allocate capital, and if we do it in an efficient, productive way, that means we will have green growth and not slower growth. I have asked Dr. Ryu to start off our discussion today because for some reason our emails didn't connect, but we found that we had the exact same roadmap for our discussion today, starting with finance and the challenges of finance. And I'm going to start with him, and I'm going to ask you, first of all, for the people in the audience who don't know Sustinvent, to give us a few minutes about what you're doing there, and then give us the roadmap and the challenges of short-term incentives versus long-term needs. And all 3 points that you made to me as we were getting ready for this panel.
예, 감사합니다.
Yes, thank you very much. My name is Yu Wangji. I'm the founder and CEO of Sustain Invest. The Sustain Invest began about 16 years ago. We began to assess and analyze ESG performance of the Korean companies and provide those results to Korean pension fund and other large institutional investors. I want to define what investment is first. And I have been in the capital market for about 35 years. And I have learned that in order to do investment, we need to be able to read the trend of the global and then allocate the capital in the long term in the relevant sectors and the industries. And I think that's what the finance should do. If we could ride a time machine, and go back to 20 years ago, we would buy cheap equities and we would hold it for 20 years. And if we did that, we would have made returns that is in tens and hundreds. And if you look at the 20 years, the global trends were the internet, social media, and platforms. But those are the major global trends. And in the next 20, 30 years, I believe the global trends will be net zero or ESG. If we look at many reports and resorts for the humanity to reach the net zero by 2050, there needs to be investment of 150 to 400 trillion won for the next 40 years, which means that we're going to have tremendously large market opening in front of us. And I think we need to find opportunities in this large market. And so if we're looking forward to the next 30 years, net zero and ESG will be completely restructuring the capital market. And I think that's in line with Mr. Mark Meckham has said in his remarks. And so sometime in the future, I believe that ESG investment, the term is going to disappear. So when it comes to investment and finance, ESG is going to be something that is naturally considered. So I'm going to talk about 3 points. As our moderator had said, a long-term investment is important. And for us to have net zero, well, we need to have a long-termism, that is a long-term investment. If we just pursue short-term profits, well, we cannot really expect ESG investment by such investors. Here in Korea, there's a lot of short-term investment, and to have true ESG investment, well, it's not going to be possible because we do focus on short-term investment here in Korea. And Korea is not a carbon neutral economy, but a carbon centered economy. And for us to transition from a carbon centered economy to a carbon neutral economy, the government needs to not just launch new types of fund. The government need to utilize public funds such as the NPS and the public pension funds such as the NPS can support the private companies to promote ESG, and that's when we will have carbon neutrality here in Korea. And when such investments are made, I believe that the performance of such a public fund will be satisfactory, will be good if such investment is done. And here, second, Korea is all about regulators. And ESG through the market mechanism is trying to change the companies. So the government and the National Assembly need to make sure that such ESG mechanism works properly. And to do that, ecosystem has to be set up. So the rules and the regulations for the ESG must be set up, and the government and the National Assembly should only serve as the referees, not the main players. But it seems that the Korean government still seems to believe believe that it has to be in the driver's seat, such as creating guidelines that's going to be led by the government. The FSC creating its own platform to disclose the ESG information and to enhance ESG activity through regulation and laws. Well, if that happens, I think the ESG will not be able to live up to its positive values. And because ESG is going to become a mandatory, something that is forced upon on the companies, and the companies will not be able to have innovative management innovations that can generate new opportunities. The companies will only try to satisfy minimum ESG requirements. So the companies will only, on the surface, try to satisfy ESG requirements. And I believe that lastly, the backbone of the ESG management is the evaluation of framework. And IFRS has come up with ISSB. And so the ESG context of different countries must be considered. If there is unilateral guidelines, I believe will not work because one size does not fit it all. Of course, there could be some assessment or the financial assessment, but ESG in particular, when it comes to S and G, where we have to think about different countries' culture. I mean, just as BlackRock has its own corporate culture, different countries have different rules and regulations, have different industrial structure and developmental models. So to have one unified assessment model will not work. So we need to have a system that is both global as well as national. So it's more like a localized assessment. ESG assessment model needs to be developed. And Korea's ESG evaluation model has to be independent. The evaluation company must be independent from the companies that they will be assessing or evaluating. But that is not so easy here in Korea, and there has to be expertise. And so the human resources and capital related requirement must be satisfied. And as for the assessment methodologies, it's currently in the black box. It has to be disclosed so that the companies that are being assessed would know by which criteria that they will be assessed. So with that, I would like to conclude my remarks. Thank you.
I think that's a wonderful introduction, and it shows all the challenges. You referred to the inherent challenge between global and national, and it's come up a lot. I am an American. I moved from Hong Kong to New York last year, and what's interesting to me is that Washington was so full of self-congratulation for coming up with the Inflation Reduction Act, very peculiarly named. But to many people, in the name of friendly environmental policies, there is an element of protectionism, perhaps, and this is my views, not BlackRock's, and it gets to the challenges. Henry Fernandez was talking about energy security, and the extent to which that is necessarily my country first. And we will go into these kinds of challenges, and we've just had a very interesting explication from you as well about what is the proper role between the public and the governments and private markets and how that comes together. How does long-term money like public pension funds, public sovereign wealth funds, deploy capital into private markets, and how do you balance the needs to help those who are most challenged with the need to generate profits? So these are all things that we will illuminate further. At the end of the day, Mark Carney is speaking, and I was at the Hong Kong Monetary Authority Forum 2 days ago, And Mark Carney said at that time, finance can only enable, it cannot dictate. Clay, I'm going to turn to you. You know, we talk about finance as if it's a monolith in some ways, but banks, insurance companies, asset managers face different challenges, different conflicts of interest. And I wondered if you could illuminate, you know, the challenges that financial firms are facing, and what are the messages from your members? And one of the things that we talked about as we were getting ready for the panel was, you know, you need data, you need standards, you need disclosure. You know, how optimistic are you that we can move ahead with some agreement on these difficult questions?
Thank you, Henny. And let me first of all say a couple things. One is I want to thank IGE and the Worry Financial Group for inviting me. You've treated me very kindly, and I appreciate it. And you put together a very good conference. Secondly, on a much more sad note, I was just about to jump on the airplane when I heard about the tragedy that happened over the weekend here in Korea. And for most of the flight, I thought about my two kids who are roughly the same age as many of the victims. And I can only imagine, unfortunately imagine, the sadness and sorrow for those families, and my deepest condolences to all that were involved. So Henny, let me take your question. So we at the IIF, we are a global institution, so we try to think about global problems, global standards, et cetera. And we work with entities, banks, insurance companies, asset managers, financial service providers from around the world. And lately we actually have done a survey of chief sustainability officers within those institutions. And they have different ideas and thoughts, as Henny was mentioning. But some of the key areas where they came together was, first, a problem that they have been trying to do is how do they better integrate within their own financial institutions the issues around ESG investing and the risks that are involved from climate change. And I think that's right now the integration is still low to moderate, but it is improving. And that's an important point, and we've heard some of that from some of the other speakers today. The areas where they would say that were our biggest problems are threefold. First is data. In order to make the type of investment decisions and in type of risk analysis that you need to do, you need better data, more consistent data across different jurisdictions. And that is something that there needs to continue to be a fairly significant effort in that. And there is an effort, and it's an effort that's being taken by the private sector, but also by the public sector, and I think that we'll have to continue to see progress. Second, and a number of speakers have mentioned this, which is the harmonization or greater consistency in the area of disclosure. Henny just mentioned Mark Carney. He and his colleagues provided a service to us by helping create the TCFD, which is a way of trying to get better disclosure requirements as a standard across the globe. Has it been perfectly achieved? No. And that's because we have different jurisdictions with different legal regimes, and you have to try to figure out how to make that work. Third, and much less optimistic, is trying to come up with, how do you come up with a taxonomy or the ability to figure out, one of the speakers talked about going from brown to green in your investment decisions. Okay, well, what is brown and what is green and what is yellow? And that's a lot harder to think about, particularly because different regions, different countries have different views on that very issue. and coming up with taxonomies that are somewhat consistent for global operators, but also for regional operators, is going to be an area that we need to continue to work on. There's a different issue, which is, I said three, so this is a fourth, I guess, is trying to figure out what is prudential regulation around these areas. That affects probably more of the banking system than it does the asset management system. But it is an area that needs to be looked at because Henny asked for some optimism. So there's the pessimism of greater fragmentation among trying to get to what's happening in Europe is different than what's happening in the United States, which is different than what's happening in Japan, which is different than what's happening in Korea. And so having those come together is going to be an area that we'll have to continue to work on. The optimistic point is a little bit of what I said on the TCFD. So, and by the way, there's way too many acronyms in this world. But another one is, and a number of speakers have mentioned it, which is the work that the ISSB has been doing. And that is an approach to try to bring together more consistency for evaluation and accountability and accounting. Will it succeed? We hope so. But financial institutions, the people that are working at them and doing the implementation, these are some of the areas that they're trying to work on. They're boring and they're practical. They're not. They don't make the headlines, but these are the areas that folks are trying to think through. Anyway, why don't I stop there?
Thank you so much. If you're wondering about the order, basically we're going from macro to micro. So we'll end up with our two investors on either side of me. But now I'm going to turn it over to Dr. Sung. One of the many reasons I have to be grateful to the sponsors is that she is spearheading the ESG committee of Worry Bank. And Worry Bank, of course, has been the driving spirit behind this with Dr. Jun and the IGE. I met the Worry Bank people when I was here in June, and I'm just so delighted to be back and have a reason to interact more. But I'd like you to, illuminate for us, what you're seeing in a bank as it goes about allocating capital and trying to manage the trade-offs between profitability and obligation to its shareholders and providing incentives to its clients to move forward as it allocates capital. Thank you.
네, 좋은 질문.
Yes, thank you. Thank you very much for that wonderful question. And I would like to thank the sponsors for organizing such a wonderful conference. I am one of the independent directors. I was actually appointed as independent director in March of this year. And I have been learning about the ESG activities of the Korean financial activities. I have looked at what Korean financial institutions have been doing for the past 3 years when it comes to ESG and about asset allocation, about capital allocation. I've been, wondering, how they have been done by the financial institutions in Korea. Well, the asset allocation has to be done long term, for us to achieve ESG values. But Korean companies and Korean asset managers, where their performance is measured in the short term, that is like their short term performance is measured. In case of Korea's net zero plan, we are trying to achieve net zero by 2050, and by 2030, the NDC has been set for 2030, and on an annual basis, we have to reduce annual emission by about 4.3%. And so, for us to achieve NDC, there has to be a lot of financial support various industries in Korea. And for these financial assets that have been deployed to produce a result, it takes time. And so, however, in terms of decision making, the boards and as well as the managers at the financial institutions are having difficulty to maintain that long-term view. And up until last year, well, ESG investment, there were a lot of optimistic views, but that changed this year. You see energy price increasing, and if in the financial firms, fixed income and equities have fallen, their prices have fallen. And so the financial firms and institutions have a lot of concerns about their own profitability. And just as the gentleman from BlackRock has said, well, ESG is something that cannot be avoided. And there also has to be a financial support for the companies to transition to new types of energy and economy. So, financial support, I don't need to say again, is very important. And so the financial firms will have to make decisions thinking about ESG, and I believe that's the way we're going to be able to increase the value of the financial institutions at the same time, increase the value of the companies. And I think that in the long term is going to be increasing the shareholder values. And as a member of the board of directors of Uri Financial Group, I have been raising issues so that the board does think about the ESG.
될까요?
But I would like to conclude my remarks. Thank you.
You conclude your remarks quite yet. One following question for you. Have you debated products that give incentives to borrowers to accelerate ESG, for example?
지금 이제 우리은행에서 이루어지는 금융 상품들의 경우에는 이제
Well, the products that we provide, for example, don't have active elements where we provide incentives for better ESG performance. But if we look at the financial products of financial institutions, there are products under the theme of sustainability where good ESG performances can provide a discount on interest rates. And so if you look at financial institutions setting a limit and getting the returns from that is good, but if you provide a discount on interest rates on loans for good ESG performance, then the companies or the banks' revenue takes a hit. But it would be important in achieving ESG goals. So whether it is in the interest of shareholders is something that we are still discussing about, but we didn't have an active debate about this yet. But I do think that if the risk premium is maintained and set at an appropriate and reasonable level, and then we can find an optimized point for promoting ESG. I think that's the role that banks need to play.
So helpful. Thank you so much. And, your remarks really give us a good sense of the trade-offs and this whole debate on who bears the costs, how you allocate the costs. I'm going to turn now to my two investors on my panel, who we've talked about the banks. Now we talk about the asset managers. In his remarks, Dr. Ryu talked about the need for long-term investors. And we have two very different investors on this panel. Kevin is a sovereign wealth fund investor. He has a long-term mandate, and he does a lot in the private markets. And Rebecca, who I have known for so many years now, has her own amazing firm called Premier Partners, and she is on the Hong Kong Stock Exchange committees. And before she talks about her investments, I'm going to ask her to talk a little bit about how the Stock Exchange of Hong Kong is changing as ESG becomes more and more a factor, and how they think of the carrots versus the sticks. Thank you, Rebecca.
Thank you very much, Hanny, and also thank you, Dr. Jin and IG, for inviting me to join this very distinguished panel. And I would also like to express my condolences to to the families and people that are affected by the very sad incidents at Itaewon. As Henny mentioned, I am a member of the listing committee of the Hong Kong Stock Exchange. And increasingly, we found that the committee have been increasingly more focusing on ESG matters, to the extent that it has become a stable agenda item for us to go through for every listing application, very detailed ESG related disclosure. So a long time ago, most of the discussion tend to be more focusing on gender diversity in the board, to make sure that there is more balanced representation in the board level. But more recently, we actually have been also more focusing on the granular disclosure of how companies conduct their business. Is their business model incorporating ESG principles in their business model? And especially for manufacturing related companies or logistics related companies, we also spend a lot of time discussing and trying to influence the companies to make sure that they have proper disclosure, and in such a way influence the management's thinking into incorporating those in their process designs. So for example, in China, very different from I guess the Western world, where a lot of focus has been on carbon footprint. In China, because a lot of the companies have a significant percentage of their business related to manufacturing and also logistics, a lot of the discussion would be also around their management of waste, especially toxic waste discharge, on water pollution. And for example, in the more recent year, a lot of them are also around discussion of their ability to cover product liability, and also for some logistics company, for example, how well are they taking care of their employees and also people that they hire in the ecosystem. So it's a very long list of ESG related topics that because of the listing requirement, a lot more listing companies are paying a lot more attention to as a result.
I think that brings up so many important points, which is, and one of the things that I want to talk about is that accountability is everything. And it doesn't matter what the structure of the government is, but accountability is so important. And there should be some allowance for what your priority is. Most of our discussion today is about decarbonization, but I spend a lot of time, in places in South and Central Asia, and water is one of the biggest issues. And I worry that wars will be fought over water going forward. So I think every country, every company has to think what the biggest challenges are for them. You live in a wonderful city state. You run a lot of long-term capital. You have a luxury that many investors don't have. Can you describe how you see your mandate and give us an example of an investment decision that you made that maybe wouldn't have been possible 10 years ago?
Of course, thanks Henny, and thank you to Dr. Chen and IG for having me at this panel as well. It's wonderful to be here. Unfortunately, the scale of the tragedy that occurred over the weekend as well, I think I'm at a loss of words to add to it, but I do want to convey my condolences to everyone who was affected as well. But Henny, to your point, GIC, as the Sovereign Wealth Fund of Singapore, does have a significant mandate to invest everywhere else in the world except Singapore. And in some ways, living on, thank you for calling it a wonderful city, but an island makes a lot of climate change concerns very existential for us.
It is not abstract or tomorrow.
No, it brings it to life very significantly for us, for sure. In terms of our mandate and the way we think about it, I'd actually never heard of anyone refer to us as micro before, but it does help to bring in some perspective to the scale of the challenges that we face. If you think about it, finance and investing are probably just one of three different pillars to solve a lot of the challenges that we face today. The other two being policymaking that hopefully will be effective, as well as industry that needs to be innovative to find a lot of these solutions that we need to solve the challenges that the world faces. Capital is just one source of that solution, and in that way we are somewhat micro. Some of these solutions did not exist 10 years ago. And for us, we had the opportunity to invest in a number of different projects around the world that we think are making that difference towards a sustainable transition. And it had to be the confluence, I think as Mark McComb mentioned, of physics and economics, if you will. The technology needed to be there, the capital needed to be willing to facilitate it, and regulators needed to be willing to support it as well. So we are investors in a significant project that produces about, I believe it's 7.5 gigawatts of power in an emerging economy where clean and sustainable energy is not just a substitute for what they have, but an imperative for the development of the economy as well. And the ability for us to do that had to have the confluence of some of these technologies for production and for storage of that energy, as well as the willingness of regulators to work with us and with the company that we work with to facilitate a lot of the development that needed to occur, as well as the capital and the willingness of some of our partners to be able to invest with us as well. And all of that needed to come together at the same time. We invest at a particular scale, and we have to look for projects that are financially both viable but also significant enough for the portfolio as a whole. And one of the biggest opportunities for us is in facilitating the green energy transition, because when you're looking for utility scale opportunities, those require a significant amount of capital. And if technology does exist to solve that, if the regulators are willing to work with us, we have the capital to work with them as well.
That gets back to the point that green growth doesn't necessarily have to be slower growth. But you also talk about sequence issues, right? And how everything has to come together. How confident are you that there will be innovations that make things possible? Because, in some countries, everyone's talking about EVs, for example. But if you don't have the battery infrastructure, the charging, you have, I love the phrase range anxiety, right? I think that's existential. Can you talk a little bit about how you see the challenge of finding innovation? And, when you think about deploying capital, you have a lot of money, you need scale. But can you talk about, I find that Singapore is such an awesome investor, and all sizes. There's so many different pockets of money in Singapore that you have the freedom in Singapore generally to deploy small to large. Where do you see innovation coming from? And do you think that we will see innovation come from traditional conglomerates or from new, smaller companies? To what extent do you see legacy companies reinventing themselves? Let's talk about innovation, because that's a more positive topic and everyone will feel happy for a few minutes anyway.
I feel we're all getting forced to speak a little bit more to optimism to account for your general pessimism, Henny. Innovation can come from anywhere. And I think that that is the absolute truth of it. There are incumbents who will find that they need to reinvent their business model because of the imperative of the challenges that we face and because of the commercial consequences if they don't. There will be innovations that come from new startups because there's an opportunity for tremendous amount of growth. All of the challenges that we're talking about today are of a global scale. If you're able to find a solution for it, you will have no lack of demand for what you want to do. I think that is the key message behind a lot of this transition. It is so significant. It is a once-in-a-lifetime opportunity. And actually, if it's not done this once in a lifetime, there will not be much of a lifetime to speak of. And so it is absolutely necessary that it occurs. And as we know, necessity is the mother of all invention. There's innovation that will go on in places that many of us would not even be aware of. And I think it behooves us to actually go out there and find it and try and find a way to facilitate it as sources of capital, as regulators, as well as industry leaders. It is out there. We just need to be able to find it and find opportunities and ways to make that scale.
Rebecca, I'm turning back to you now. Rebecca sees more clearly and more long-term than almost any investor I know. You were very early on in being impressed by and setting up funds to invest in new economy companies. Recently, the world has fallen out of love with new economy companies. And, you know, we would talk 4 years ago in a pre-COVID world about all the deflationary effects of technology and how, you know, technology was changing things. So the sharing economy meant that cars would go from being things to being services. And yet one of the most amazing, you know, and strongest sectors in China, and the way China is leapfrogging the world, is in EVs. You know, I recently met with the head of one of the Chinese EV companies. His company charges more than Tesla for his cars, and they're doing an amazing job. Could you talk a bit about how you're deploying funds in new economy companies that offer all the benefits of ESG? And why the world seems to have kind of fallen out of love with new economy companies at the moment.
Thank you, Henny. So as an ETF firm, we are very data-driven and rule-based. So everything that we do, and I guess in our product development process, we do spend a lot of time studying data, including climate and ESG-related data in our index and product design. So for example, Henny mentioned about our new economy ETF. In fact, we are the first one to include a lot of, not necessarily EV, but green economy related companies into the strategies, because it actually started less for ESG purpose, but more from alpha generation purpose. So for example, I think the panel just now discussed about the attention that investor has been paying on ESG. But in fact, from our empirical studies, we find that there is actually a very high correlation between companies that have been spending time on managing ESG, have lower carbon footprint with their earnings volatility. So as a result, low vol is actually a factor that I think conventional factor investment has been spending a lot of time to. So we like that, and that's why we actually have been one of the first to include companies like CATL, which is the largest EV battery manufacturer in the world, into our strategy. And then later on, as we dig deeper into the data disclosure of these companies, we find that because they are put as the poster child for what they are doing in the green economy, these companies also actually create a positive feedback loop, in the sense that they also consciously put a lot more effort in the process redesign. So for example, CATL is already a net zero factory. Because they redesigned their process and also energy consumption such that more than 80% of their energy actually come from hydropower. And there are a lot of similar things that are happening. But I guess the difficulty is for a lot of Asian and especially Chinese company for language reason, a lot of these things they are only disclosed in local languages. So for data scientists or for I guess data or rule-based investors, in order to capture these type of data and factor that into the strategy designs, it would take a longer time. But luckily, like you said, technology help us. A lot of the AI, machine learning, NLP technology allow us to pass through a lot of these data and better make use of them.
Thank you. Dr. Yu, I want to turn to you again because sovereign wealth funds and pension funds do have the luxury of being long-term. You know, GIC doesn't invest in Singapore. The Kuwait Investment Authority doesn't invest in Kuwait. And the reason is so that they're less vulnerable. Well, I don't want to speak about GIC, but say Kuwait Investment Authority. It's less subject to political pressure from home and to deploy capital to support vested interests. And I wondered if you could talk about what you see as best practice for sovereign wealth funds in the world today, and whether they have an important role in how to structure the incentives because they have the luxury of being more long-term. You know, my concern is always, and it's something that you and I talked about a little yesterday, Clay, is will the countries or companies who need capital the most be deprived of that capital just because their situation is more desperate and they have less resilience? So it is a riskier investment in many ways. Can you talk about how you see that issue?
예.
Well, it's difficult for me to talk to you about the details of the operation of the sovereign fund, but as the CEO of the KIC has said, well, the KIC since 2 years ago has been integrating ESG in all asset classes, including the equities and the fixed income. And they have also set up a team that would specialize on ESG. And the KIC, its mandate is to promote Korean industry. And in order to, and the KIC, although it invests in all countries except Korea, and but also KIC has to promote industrial growth here in Korea, and that is why KIC is helping the other financial institutions, that is ESG financial institutions, to come to Korea and to cooperate with Korean companies. So KIC is helping indirectly for Korean industries to go low carbon. I think that's what KIC is doing. Since I have the microphone, I want to talk about, where ESG innovation comes from. You asked that question, so I want to another panelist, but I want to make a comment about that. I think ESG investment is all about innovation investment. Those in the investment community, well, they have only been focusing on, within the existing communities or the field, but they need to talk to other stakeholders, environmental groups, or as well, gender-related groups or the human rights-related groups. And so they need cooperation with other types of stakeholders. And I think that is going to extend the existing scope of traditional finance. And I think uh, in innovation, failure is not just a failure. Failure becomes assets. When a failure is assessed as assets, then I believe that we will truly have innovation. And I also want to add, to secure innovation in a society, well, capitalists should not allocate capital only for the financial purposes. The capitalists, they also need to have entrepreneurship in their decision-making process. Thank you.
These are wonderful points, and I do want to spend time on innovation for a bit longer. And Clay, I want to turn to you now, because innovation, by definition, many countries have problems accepting the risk and the failure, and there's cultures that, sort of lobby against it. To what extent do you think your members, are too risk averse? To what extent, will it have to be a very specialized group of financial investors that can finance innovation and live with that risk?
So risk obviously is a key aspect of any financial institution, and some of them have more ability to think through risks. But let me kind of take it in a slightly different direction. So we have a lot of investors that work with us, whether they're banks or insurance companies or asset managers, that invest in emerging markets. Okay, so by nature, that's a little more of a risky adventure than investing in a more developed market. What they are telling me is they have mandates. So their mandate is to invest in emerging markets, but now they have a new mandate, and that new mandate is to invest in sustainable financial issues. So in green investing. And so what they're trying to figure out is, okay, I want to do that. That is my mandate. I have been told by my investor class that I should be investing in emerging markets and in environmentally friendly programs. What they're running into a problem is how can they do that? And not because of the risk. The risk, that's what they do for a living. They understand how to mitigate it as best as they can. That doesn't mean they always get it right, but that's what they're looking at. Instead, it's how do they actually find well-defined and consistent programs. So A, they're actually meeting their mandate. B, they're not having what everyone calls greenwashing. So there's some sort of a way of actually figuring out that what they are actually investing in is actually green or is more sustainable. And so this is where it was an interesting point of listening to the investors up here. They look at the specifics. I have to look at more of the macro. And the macro is actually, in some respects, quite positive. All right, so we've heard a number of speakers today. Mr. Fernandez was the clearest. Things really aren't good in the world economy. And it's actually been even worse for frontier markets and emerging markets. Being able to actually issue debt in the markets has been extremely difficult. That makes sense. It's tighter financial conditions. That's not necessarily the case in the ESG area. there's actually been more investment. If you look at the numbers, and actually I think the chair of the Financial Services Agency here in Korea mentioned this as well, it's actually up this year. Even though everything else is down, that's actually up. And so that suggests to me that basically that mandate is very much, I think it was Mark from BlackRock who said this, this is a market issue. This is a market-driven issue. And the market is telling us invest more in these areas. And so that's what people are trying to do. Now, that means they're going to be taking risks. They're going to be risking in more innovation. But they also need to find ways that they can do it that is consistent, that has good transparency, that has good disclosure regimes. And we have enough trouble with that in the United States or in Europe. Think how much more difficult that is in emerging markets. So those are some of the areas that I hear about when I'm listening to my members.
Thank you very much. We only have about 5 more minutes. I did want to talk a bit about how confusing it is to go through the data. Henry gave us the data point of a 93 trillion global economy having to transition from the fossil fuels that powered the growth of the economy. There was a data point at the Hong Kong Monetary Authority of upwards of 100 trillion in stranded assets. And, you know, not only do the numbers, you know, don't really add up consistently, but they're changing. So when I talk to insurance startups, one of the areas they say we can't get into is weather, because the data, the historical data, does not predict the severity or the frequency of weather. And precisely because we've lived in a low to negative interest rate environment for so many years, we don't have the capital cushion to absorb it. Before I leave you all, I want to ask the audience 1 or 2 questions, but before I do that and conclude, and I will conclude on an optimistic note about Korea, if not the rest of the whole world, I wanted to ask my panel if you have any questions for each other. You have 2 seconds to think about it.
Henny, I don't have exactly a question for each other, but maybe a question for us to all think about. ESG, to a very large extent, and Mark Carney said in his book Values, that things only get managed when they get measured. So a lot of it is also still down to how much data we have. One story that I would like to share with you is, you mentioned about technology company being more receptive to innovations that are ESG related. Before COVID, some of the technology companies in China, they are actually really implementing it down to the individual level. I remember a friend was telling me that there was a building in Shenzhen where all the toilets have QR code. So every staff, when they go to the washrooms, they need to scan the QR code to get the toilet paper. And they are not limiting the amount that people use, but that would be the data that HR gets. So you can imagine suddenly all the toilet paper wastage reduced quite significantly. But that also means people lose some of their privacies. So I guess it is a question that we all need to think about. How do we balance between privacy and provision of data to track and facilitate ESG management?
You know, I come from a medical family. All the women in my family are doctors. And one of the sad things about the decoupling in the world today for me is that if you combine the traditional strength of the US in research, in wonderful institutions like MIT, and, you know, wonderful hospitals like Sloan Kettering, and you combine that with the big data and the machine learning from China, and you make that data anonymous, how much more quickly could we come upon ways of earlier detection and more effective treatments? And my panel was all horrified when I wanted to tell you all this anecdote, which I read in a book called The Lords of Finance, and it was written by a Pakistani at the IMF. And the book starts just before World War I, and it's an anecdote that he tells where Lloyd's of London, the insurance company, goes to the British government and says, if the Royal Navy blows up the German merchant marine and the German Navy, you will take down Lloyd's of London because we've insured them. And this was 2 years before World War I. And everyone thought at that time, how can there be a world war? Because we're all so interdependent, maybe not globally, but regionally. And then we had this disaster. So the costs of not cooperating are just unthinkable. I want you all in the audience to raise your hands and just tell me whether you think that the world will meet its targeted commitments. You know, whether it's 50 or 60, 2050 or 60. How many of you, just raise your hands if you're optimistic about the world meeting those targets, and then I'll make one more point and then I'll turn it over to the next panel. Who is optimistic about the ability of the world to meet the targets that we're talking about? Raise your hand. How many of you are pessimistic? How many of you don't have an opinion? How many of you think the world has set unrealistic targets? Most people don't have much of opinion. And thank you. I just wanted to say that one of the reasons I am so grateful to come here so often is Korea is a small country, but it has punched way above its weight in producing national champions in intellectual property up until this point, and I'm confident that going forward, the definition of intellectual property will change a lot, but I'm confident, especially being here with all of you today, that Korea will continue to do so. Thank you so much for giving me the honor of being your moderator, and turn it over for the next panel.
Thank you very much. Thank you so much to Henny, as well as to our distinguished panelists and speakers today. I think just to, not as a shield, but perhaps not that they don't have an opinion, but maybe we're just a little shy. So perhaps during the break, as we will have right now, we will be able to share some of our own opinions a bit more off the record, but yes, please look forward to that during the break. At this time, we'll have a short break and we will reconvene at 11:30 for our next session. Thank you very much.
The ESG vision of Uri Financial Group is good finance for the next. To become the most trusted and beloved financial
I hope you enjoyed your break and that you're ready for the next session of the Ige-Wfg International Conference. Right now, we're ready to begin the second session for today, and we're going to switch gears a little bit and have a lively dialogue with our three speakers. We're going to talk about navigating turbulent waters for sustainable growth solutions. We have three distinguished speakers with us in the middle at the stage, and I would like to introduce them briefly before turning the microphone over to Dr. Shin Sung-han. First, we have Dr. Shin Sung-han, a member of the Monetary Policy Board at the Bank of Korea, as well as Professor of Business at Hongik University. We also have with us the esteemed Dr. Ann Kruger, a chair professor at Stanford University and former first deputy managing director at the IMF. Last but not least, we also have with us Professor Song Tae-yoon of Yonsei University, who is also president of the Korea International Finance Association. Please join me in welcoming our three esteemed speakers.
Thank you very much. Many thanks to IGE and the Chairman John for inviting me to this very the excellent conference as a moderator, and I'm very much honored to lead this session with two world-class top economists, Professor Ann Kruger at Stanford University and Professor Song Tae-yoon at Yonsei University. My session will start with Professor Kruger's 10 minutes talk and Professor Sung's the following discussion on presented views by Professor Kruger, and then we will discuss freely on various topics around the world. So, Professor Kruger, would you please start?
Thank you very much. I'm, of course, very pleased to be here and congratulate the organizers on putting together an excellent conference, which is always very hard to do. I just want to thank both Worry Financial Group and IGE for their support and for inviting me. But I guess most of all, before I start, obviously the whole world was incredibly saddened by the tragedy here last weekend, and I want to express my sadness and sympathies along with everybody else for the terrible tragedy and for the loss of life and for those who lost it, and of course for the people who are left behind. I'm sure it's very hard for all of you even to focus on this soon afterward. So thank you for that, and you have my sympathy. Okay, I'd like actually to give you a title for my talk because it will simplify things. And my title is going to be Cross Currents in the World, meaning that we have a lot of things that make it look as if things will be good. We have a lot of things that will make it look bad, and some things that we don't know which way they will go. That there are just a lot of forces at work, and at least in my professional life, there are more cross currents and more things going in opposite directions than at any time I can remember by a long shot, not just a little bit, but a long shot. So let me go through some of them in sort of order. First off, I'm going to start by being optimistic and talking about some of the very positive things. First off, we do have COVID recovery, which in itself is good, and we may have more pandemic as some people are worrying, but even if we do, we have learned how to handle it, so it cannot very likely be as severe as before. But on top of that, many countries, including the United States, certainly Europe, I think Korea, ended up with pent-up demand, meaning that consumers had not been able to spend as much as they wanted to. Certainly that was true in my country. The savings rate went from about 5% of personal income to well over 10%, i.e. double the savings rate. And many people ended up then, when COVID vaccines finally came and the requirements for masks and all that diminished, people began wanting to spend more, so there was clearly pent-up demand, and there were clearly supply constraints. So that was upward pressure on economic activity, but even more on inflation. I'll come back to inflation because that was a negative, but the pent-up demand is a positive, but there's an uncertainty about that too that I'll come to. Everything is mixed in this situation. We have an ongoing electronic revolution, which is leading to a lot of demand for additional investment. And for that, the cost of a new fab for semiconductors is now estimated to be $20 billion for minimum size. And that's now, and we don't know what the future will bring. But quite clearly, simply getting the efficiencies that come from moving more toward electronics and making them easier to use, and I'm convinced they have to be easier because it's driving me nuts. But in any event, getting those efficiencies is going to be expensive. There is ample scope for lots of investment there, both for the ESG reasons we've discussed and for simple business reasons. So let us hope that in fact there's room for those investments, because when you add things up in a minute, I'm going to say that there's more than enough investment there if we could afford it. There's a striking parallel actually with the 1920s. The parallel is that actually electricity was discovered in the 19th century, not the 20th. And lots of things could have happened early on, but it looked by about 2010 or 2020, or 1910 or 1920, sorry. By that time, it almost looked as if there were no efficiency gains. And in the 1920s, all kinds of additional uses came on, and the productivity gains and things from electricity came much later. And I think the same may be true, because so far we are not seeing very many productivity gains from the electronic revolution. I think we will, and that's another positive. There's also, as we are discussing, a huge need for both public and private and business environmental expenditures. And if there's any slack in investment demand, and if there's any need for the public sector in particular to speed up its activity because of stagnation or something, there's lots of room for doing wonderful things for the environment, and our big problem is going to be lack of demand. So all of those are positives. We've also learned, I think, a fair amount about macroeconomic management. Not enough, but we are better than we were. If we do have another pandemic, it won't hit the economy quite as hard, although of course we never know what kind it will be. But even so, I think we can do better than we did. We do learn from what's happened in the past. So I end up with the conclusion that whatever else goes on, we cannot end up, I don't think, with secular stagnation of any kind for very long, unless our governments are silly or stupid in some way and don't see it, because there's plenty there to invest in. There are lots of things we want to do, and it's easy to show that the estimates even on the environment alone cannot be met. But there's a lot of uncertainty, and one of the problems with uncertainty is the fact that it itself makes business reluctant to invest and makes all of us more cautious in many ways. And that is, at the moment, I think, a big negative for all of us. It's always a drag on what people will do, and especially on what business will do. I think there are two main groups of uncertainty, both of which are important. The first of which is geopolitical, and the second of which is economic, and they interact. And of course, geopolitical, there are at least two big ones and lots of more little ones. The Russian invasion of Ukraine and the ongoing conflict is itself a major source of uncertainty. We do not know how long it will go on. We hope and pray that we can keep it contained to those countries in that area. We hope that it will work out in a way that brings back the world as we knew it, but I kind of doubt that. I think we're at least going to see some kind of regime where for certain kinds of goods and so on, there's a separation between what I will call the countries that want to participate in the intellectual property rights that are necessary for high-tech stuff and those that don't. But I'll come back to that if time permits. Obviously, defense spending is up worldwide, and defense spending needs are up even more. So once again, there's something positive coming out of that, if indeed we can get the thing settled quickly. But whether that will happen or whether it will drag on for this winter or longer, we don't know. And that's a question mark on what will happen everywhere. And I haven't even mentioned tensions between the US and China, which are clearly a big factor in lots of things, and how they will evolve is, I think, a major question for everybody throughout the world. Now I'm going, however, to the downsides, because there are many of those too. One of them, and the close in one, is the debt and unsustainability of debt, particularly in the poor countries, some of the emerging markets. Turkey in particular, India to some extent, I could come back to that and won't. Some of the smaller ones, Sri Lanka has big debt troubles right now. Some other countries look as if they're very dangerous. Zambia and a few in Africa are already there. So that's going to be a big issue, I think, going forward, especially as interest rates rise, and that happens. going on, there are also many other challenges. Inflationary pressures themselves, of course, raise big issues, with, of course, the need to raise interest rates, if for no other reason than negative real interest rates, i.e. the nominal rate of interest rate minus the rate of growth. When that's negative, when inflation, when I can borrow now, buy some good, hold it for a year, and sell it for more than I bought it at zero interest rate, it's wonderful. Or negative would be even better. And of course, we can't have that. So, at least in the United States and in Europe, nominal interest rates are going up. They are still negative in real terms. They've got to get positive again, and that can happen by inflation going down or by interest rates going up. And the question is how that will happen, how quickly it will take hold, and there's a lot of uncertainty about that. This is not a normal time because the recession itself, if it comes, will have come because of inflation, which itself will have come because of COVID, and that's not the normal recession. It's something different. And so it's hard to say what's going to happen there. I'm on the optimistic side. It is certainly possible that we can have a gradual increase in supply, which is starting to happen, and a gradual diminution in the pressure of excess demand in such a way that the nominal interest rate could go up and find a path that does not lead to recession, at least in the United States, for which I'm more confident. For Europe, there is the additional question of energy pricing, which makes it more difficult. But having said that, the U.S. is a big country, and if it could avoid recession, which is possible, but uncertain, if it could, it would be very good news for many other countries, including, of course, Korea. So that's in my uncertain category, a big one, is to how well the monetary authorities can manage in this unknown environment. It's not their fault if they misguess to some extent. But if they can manage well and find that tunnel between too much inflation and too much downward pressure, that could be a very good thing for all of us in the world economy. And of course, if they can't, we have recession and all of that. But managing inflation is important. If inflation accelerates, that will be a disaster for the whole world over time for a whole variety of reasons that I can't go into, but we can discuss later. Okay. Some downward and almost surely negative things are, of course, the energy prices. It's interesting that we talk here about wanting to move, of course, to the carbon-free and all of that zero carbon initiative, whereas at the same time we're talking about, oh my God, what will Europe do when they don't have enough heating for the winter and things like that? And we have cross currents there, both because of the underlying situation and because of policy. But on net, I think that for the moment is a negative. There's got to be a lot of investment in energy, another area, but that will take time. And no matter what we do, we have a problem. Another negative, and almost for sure, and that's for true Korea, it's true China for sure, Japan, and they're the worst, but not the only ones, low population, lower negative population and labor force growth. That is a negative more than I think any of us understood ahead of time, and it's pressing down on economic activity in all kinds of ways that are giving us more negatives than before. So far, I still see the positive other pressures outweighing that. Whether that will continue or not, I don't know. And of course, the last of those is the tension between China and the U.S., which is, of course, in my view, greater than it has to be. But certainly the U.S. has contributed, unfortunately, its share to it. But there are some genuine issues there. How they are resolved is terribly important for everything. So I don't know how much time I have left, but I want to come to one major uncertainty that's terribly important, and that is world trade. The history of mankind is the history of starting from nobody being able to stay put. They have to forage even to get their food and what have you, to settlement, and then to trade and more trade and more trade. It's been going on. It's been a benefit to us all. In the 19th century in England, it is estimated that 95% of all Englishmen never moved more than 5 miles from their home place during their lifetime. 5 miles. And now London to Manchester is sort of every day. It used to be a 90-hour trip 2 centuries ago. Just the world has changed, and the change has been integration, integration, integration. Lower transport costs, lower communications costs. This has all been good. It's been important. It almost has to continue. There's tremendous scope for increasing productivity and services, especially if we could get the trading system restored. The World Trade Organization is hugely important. It's kind of the air we breathe, but we don't even appreciate it. And unfortunately, the American who did lead it, and I was always very proud of that, under the Trump administration, have done great damage to it. I think countries like Korea that depend on trade need to have loud voices making clear how important it is to restore the open trading system in all non-high-tech goods at least, so that we can have that and have that worldwide and go back to expansion. We need the WTO to bring on new issues, e-commerce, intellectual property. Those things are important. We need to reform it and make it better. The meeting last June was encouraging, but we need to move that forward. And I think if we do not do so, the world is in trouble. So I think we will eventually get there. But if we don't get there quickly, we will have a hard time in between. So I think it's urgent. Countries cannot go isolationist. There's too much we cannot do in that score. Even the semiconductor industry cannot be separated into each country doing its own. Taiwan has a virtual monopoly on some aspects. The Netherlands has a virtual monopoly on some things. The British have a monopoly on some things. The US has a monopoly. We may not have a monopoly in semiconductors as, you know, the regular ordinary chips, but we have a monopoly on a lot of the high-tech machinery to make the conductors, semiconductors, and so on. And no, any one of these countries, even the big ones, trying to do it by themselves, it would take more investment than they can possibly afford just to do that. I mentioned $20 billion for a semiconductor factory. Can you imagine what it would take for the Dutch company, which uses 427,000 different components to make its high-tech machinery, to make the high-tech computer chips? What it would take them to replicate that in other countries, it just can't be done. So I'm convinced we will not go isolationist, but we may go to trading blocks, and even that would not be a good thing, and it's negative for the world. So I think that what happens to the world economy is not a given. I think some countries will be smarter enough to avoid a lot of the protection, a lot of the other mistakes. And as other countries see that, I think they will go that way. So if you ask me, am I optimistic for 20 years from now? Yes. Am I optimistic for next year? I'm hopeful. And I'll leave it there. Thank you.
Thank you.
Yes.
Okay, so after Anne's presentation, I'd like to give my own idea. That is, she just mentioned a parallel of 1920s, but I would like to mention the parallel of 1970s. As she just mentioned, a positive thing from the COVID-19, we are having some recovery. But if you go back to 1970s, we had the period of a recovery in some sense from the war in Vietnam and U.S. war. So that means after that war, U.S. has begun to decrease in some sense, there is a chance to decrease the money supply. We had a chance of the fighting against COVID-19, and then it was like a war. That means we injected too much liquidity to fight against COVID-19. It is pretty plausible in that period, and it is plausible to spend the military defense budget during the war in 1970s. But after that war, we should decrease the money supply. That was the first parallel of 1970s. And also, we had another parallel of 1970s. That means, as you know, at the time, I guess most of today's participants would remember what happened in 1970s. That is, another war. That means the Middle East War. In 1973, in the Fourth Middle East War, and also 1979, the Iranian Revolution, and also the Iran-Iraq War. That means there was a supply shock in terms of oil supply. We had a very similar situation currently in terms of the global oil and natural gas supply. Based on the political conflicts around the world, we have some shortage of energy supply. And also, I think we have another parallel of 1970s that is related to the structural part of energy market. That means at the time, as you know, in 1960s, the OPEC has begun, but their real power has become the dominant during 1970s because there was a war. In that sense, the supply of energy has begun to be controlled by some countries. Currently, we have in some sense, the similar situation based on new regulations on environments and also in some sense, the ESG. We think we need that change, but it can also work as some cost part. So if we have the cost increase, especially the energy, which is very important in providing world supply, world production, then we can have some supply shock that would generate, as you know, the cost push inflation. As a result of that, now we are facing some risk of stagflation around the world. So in that sense, we have the very similar situation of 1970s. She just mentioned the 1920s, but I think that we have a parallel of 1970s. And another, we have a parallel, that is, as you know, if you go back to the 1970s, we have a big confrontation between US and Soviet Union. Now we had, after that period, after the collapse of Soviet Union and also after the regime change in China, we had some different period in the sense that we could have some the fully fledged global value chain. But now, due to the confrontation between U.S. and China and U.S. and Russia, now we have a big problem in global value chain. So in that sense, we have a very similar situation of 1970s in those senses. I mean, some media or some scholars say the period of or the memory of the Oasia, but not just that part. That is one part, but there were many parts which had the negative impact on the world economy in 1970s. Unfortunately, we have a very similar situation of the 1970s in that sense. Then next question is how we can recover, how we can overcome those circumstances. Let me go back to the first aspect that I have just mentioned. That it was the war. So that means after Vietnam War, U.S. should begin to, in some sense, decrease money supply, cut down the defense budget. It is pretty natural, and it is what we are experiencing now. If you remember the period just before COVID-19, at that time, the U.S. economy was relatively fine, and then they were in the position of increasing interest rate. Of course, before the presidential election, there was some decrease, but basically there was a trend of increasing the interest rate, base rate, to decrease the money supply. And then, in that sense, it is natural, and then we should we should have that period of decreasing money supply. Next part that I have just mentioned is the war in different types of war in the Middle East at the time, and also the Iranian Revolution and Iran-Iraq War. In that sense, how we should think how we can recover in some sense peace in the world and the global economy, because that is very important in the sense that how we can recover global value chain. So that means by doing that, we can recover. But if we do not have the chance, unfortunately, we should have the prospect of prolonged disastrous period if we cannot recover that issue. So I think that is the second, in some sense, solution, but it is still vague. And also, as I just mentioned, there was an issue of the OPEC, which has decreased oil and energy supply. As a result of that, we had experienced the cost push inflation, which means the stagflation. So that means, but if we go back to that period, how we can recover the OPEC's power or that shortage issue? That was by having more diverse supply of energy, which means before during the OPEC period, even though now still we have the OPEC was based on the countries which are very geographically concentrated area, which means Middle East. But by having more diverse supply side, we could recover that. That means I think we have some clue from that experience. That is, by having more alternative supply sources of energy, we could recover that issue. So that means that now in this stagflation period, and I guess that we are thinking of today ESG and also the sustainable finance, that means there is a solution in that area in some sense, because how we manage or how we focus on investment, especially providing alternative energies, and also how we can decrease energy supply cost by doing that. And then definitely it is we should have the carbon reduction or the other environmental issues. So how we can manage or how we can have the road toward the investment strategy, more focusing on the energy supply, especially the environmental friendly energy supply. That would be the way to overcome this, in some sense, the crisis. This how we can shorten the period of this crisis. So that is I think today's topic, and also I think there is a solution to overcome the current, in some sense, crisis, I think.
Thank you very much for your excellent presentation and discussions. Professor Kruger listed positives and negatives, and it looks like that you are an optimist. And you greatly emphasized the importance of free trade, and I cannot agree more with your view. And Professor Sung, interesting comparison between now and 1970s, and importance of investment on the energy area so that we can have a cleaner environment. Now, let me talk about our current global economic issue, which is inflation, real economy, and in case of Korea, capital flow. After 3 decades of low inflation and 2 decades of ultra low interest rate, huge amount of monetary base expansion, and probably most importantly of a huge amount of helicopter money, emergency helicopter money, we finally fell in inflation, very high, very persistent inflation trap. And as time goes on, the trade-off between real economy and inflation is getting keener and actually pushing policymakers around the world in a very difficult situation. So one thing that looks clear now is that it will be difficult to avoid pain, but the question is how long, how much. So having said so, I'd like to ask you a question about what should we expect. I think a part of answer was given by your talk. what do you think? I think you are a little bit optimistic that U.S. economy will soft land. Uh, but actually, if we talk to market economists, they always are right now talking about the risks of over tightening, whereas U.S. Fed is always talking about the risks of under tightening. So the question is, which risks are bigger? Because there are actually both sides of risks. So what do you think the risks, which side risk is bigger, the over tightening or under tightening?
Well, I think the problem with under tightening is that if you under tighten now, you will have to tighten more later, and the cost of delaying the tightening will make it larger. So I think I'm on the side of those who say, in a sense, we made a mistake by not starting tightening soon enough because we did not know how much pent-up demand there was, and again, the supply shortages and so on. We certainly didn't know there was a Russian invasion of Ukraine coming. I mean, there are all kinds of things that have been going on here. But if we do not address these issues now, it isn't as if, okay, we've avoided the pain. And not only, it isn't as if we have postponed the pain. We will have traded some pain now for more pain later. As I said, I think there's a way through, but I don't know that I would know it, and I don't know that anybody here would know it because there's too much uncertainty. So whether we will find that way through or not, I don't know. But if we do enough so that the rate of inflation starts falling, then if they have overdone it, they can start correcting. Whereas if in fact we've underdone it and the rate of inflation takes off, it will be much harder to get it under control. If I could say one more thing though, and that goes to your comments of the 1970s, which are very interesting and excellent in many regards. One of the things that happened, and I'm going to go back now to the 19th century. In the 19th century, at some point, I was told during the oil price increase at that time, at some point, the supply of whales in the ocean disappeared. And whale oil was the main thing that was used for lighting so people could read and stuff like that. And the whole world had headlines everywhere about how civilization was going to die because nobody would be able to read at night and things like that because no more oil, etc. And that was the year that Thomas Edison discovered electricity. And the result of which, of course, was that we don't need whale oil for that purpose anymore. And an innovation came along, and it came along and found all kinds of uses in addition to just the electric lighting, and that made a difference. Now, in the 1970s, everything you said was correct, but one more thing happened, and that was that the price of energy went up, and people began saving on energy. It cost too much, and so they found more efficient ways to do it. And one of the slightly simplistic statements that nonetheless conveys a lot is that until the 1970s, when you got a 1 percentage point increase in GDP, you normally needed about 1.5 percentage points increase in energy supply. Today, when you get about a 1% increase in GDP, you need about 1/4 of 1% increase in the energy supply, which is 1/6 of what you needed before. So we have enormously economized on energy already. Refrigerators use far less. We've found new technologies. And letting the energy price go up is part of what had to happen to find that redistribution. So what do I expect to happen now? The short term worries me much more than the long term. I expect in the longer term we will address both the ESG kinds of issues. We will address the energy issues by finding both supply and demand shifts because it's more expensive. I fear ways of keeping the energy price down now because it will slow that adjustment too much. But on the other hand, I think in the short term, there is a danger that we might see problems if we don't find ways to soften that adjustment. So I'm very, I guess by both standards, pretty optimistic on the long run. I'm a little bit more uncertain about the short run. It could very well be that the U.S. moves along well, that Europe does not, or vice versa, depending on policy and everything else.
Let me go back to your question. So then I think there is an uncertainty in terms of both under contraction or over contraction. That means it is the problem that we are facing now is it is very hard to forecast what would happen because there is some part in inflation. One part comes from the COVID-19 liquidity supply, and also there are some part the supply chain part, which is related to conflicts between U.S. and China, and also the some energy supply part, which is based on environmental regulation, and also the another part based on Russia-Ukrainian war. So it depends on the various issues. So I define complex stagflation crisis, which means there is some cost part, but there are many other parts. So in that sense, what we can just say is that it is uncertain. We don't know what would happen. So that means we should closely monitor what is happening in market, and then we should respond to that at that time. So that is what I say. So it is the very important principle, or the principle that the policymakers should follow in that sense. It is very hard to say, oh, okay, that would happen in 3 months. You should not say, I think, the even Fed chair or the BOK president, they should not say something like that. What I say is, we would see what's happening in the market now. So I think that is very important issue. And if I go back to Anne's point, that in that sense, especially the liquidity part, that would be monitored by the Federal Reserve or central bank. But there are many other parts, like I just mentioned, energy cost or other part, that should be controlled by the government. So we usually think the inflation is part based on the just monetary part, but especially what is happening in stagflation, in this kind of stagflation, the government has a pretty big role in that part. How we can reduce energy, what she just said, the energy production efficiently, or the energy consumption also efficiently. So to increase that part, there is a big role of government, how we can decrease the energy production and consumption cost. So in that sense, that is very important issue to overcome the current crisis and situation, I think. In that sense, I'm very unhappy with, in some sense, Inflation Reduction Act, for example. I very much believe it is very important to the spirit of Inflation Reduction Act in the US, in the sense that we should focus on more environment and something like that. But sometimes we should also be very careful about the kind of environmental regulation should not be used as a one way of protectionism. But in the Inflation Reduction Act might be, even though that is not the purpose of that act, they can be used in other ways. So especially the cost part would become higher if we have the trade protection. So each country begin to adopt the trade production that would worsen the stagflation. So in that sense, that is a very important issue in the current situation, I think.
Sure.
We could argue about many things for a long time, although I think we agree on a lot too. But I do not think I have seen a single commentary by an American economist who thinks that the Inflation Reduction Act had anything to do with trying to reduce inflation. I mean, it's the wrong time. The fiscal deficit was already too large. And if you look at what's in it, it is inflationary. Some of it may be good purposes, as you said, like ESG or environment. But whatever it is not an Inflation Reduction Act. I think everybody in the United States would agree the fiscal policy was too expansionary over the past 2 years, and what the monetary policy is having to do now is in part catch up. The authorities did not recognize it, or they didn't want to recognize, or they didn't care about the expansionary effect of the first act, and then the Inflation Reduction Act, and the CHIPS Act, by the way, is another one. So we had a fiscal deficit of 15% of GDP, and this year even is 10%. I mean, it's way too large, and it is inflationary, no doubt about it.
Thank you. The I to your view on policymakers the kind of uh, code of conduct based upon the data. The difficulty is that the data are, very often a lagged number. And of course, inflation is probably the most lagged number within real economy variables, and inflation is even more lagged variable. So the question is how to interpret the number, and market economists say that they think the economy starts to contract, and the employment number will go down. It's on its way, and the inflation reduction will follow. Whereas the Fed is thinking it's too risky to ease or slow their tightening speed. And another problem for Korea is that for US, the risk of over tightening may be less than the risk of under tightening. But in case of Korea, the over tightening of, if the Fed is raising its rate too fast, it will drive all other emerging countries actually into a corner, a very difficult situation because of capital flow management problems. So one is the more general problem, and the other one is for countries like Korea, small open economies problem. So.
Well, I don't know how to answer that quickly because there's too much and you're making a lot of good points. But I can say several things, one of which I think, and an important one, is you're absolutely right, that monetary policy today drives what will happen a year from up to 9 months to 18 months from now in many ways, and one has to factor that in. And you're absolutely correct on that. But the second point is that the hard thing to judge is how much excess inflationary pressure is there now. And if you think there's quite a bit of inflationary pressure, then those interest rate increases so far, are they enough to take it down or not? Or will they just sort of reduce the rate at which the rate of inflation increases? And that's the really hard question. It's not the question of whether the interest rate going up will dampen things a bit. Of course it will. The question is, will that dampening be too little or too much? In my view, so far, it probably is not too much. That so far, at least, the American economy still acts like an economy with excess demand. And in that sense, there's still room now for further increase, at least in December, and maybe and probably one more, in the interest rate. By that time, if we see evidence that it's slowing more on the supply side, then ease up on that, and there will be scope. But the excess demand in the United States is a very real thing. There are things you just cannot get. People who are used to going to the grocery store and picking up what they want to off the shelves are half empty half the time. This is an economy much more excess demand than Europe or Korea or anywhere else, but the United States is big enough that if we take off into an accelerating rate of inflation, which was the risk, and if those inflation expectations get built in and the labor unions go on strike for bigger and bigger wage increases, the whole world will be in trouble big time. So it seems to me that making that a priority makes eminent sense, even though it is, as you say, risky. But I think the alternative risk at the moment I would weigh more heavily.
So let me go back to his question on data issue. So I should say definitely there are some lagging in the data finding or data analysis. But especially during this kind of turbulent period, I think the policymakers should have more weight on the more current data, in that sense, I just mentioned the market issue. So rather than the other real variables, which it takes time to be composed or to be ready, but the major feature of a market is that we can easily or very spontaneously figure out what is happening in the economy. Of course, that market signal also has their very much noise. But even though there are some noise, that we know that is very spontaneous. So in that sense, this kind of a turbulent period, in that the weight on those data would become more appreciated. So that is the point. And also as you just mentioned, it is natural to subtract liquidity in this period. So that means, anyway, we should increase some interest rate, because it is very hard to maintain discrepancy between U.S. interest rate in other countries if we do not have the capital control or the other ways of securing our currency. So in that sense, it is very hard. But that means that also have some negative impact, as you know, their own other economic agent in the financial market, in the sense that even though we need to increase their base rate, and also we should more focus on the financial support or the financial strengthening for fragile people and fragile economic agent. I think it can be also applied to the global economy. It is pretty understandable to have for the U.S. to have their own monetary policy based on their own economy, but they should also consider what would happen as a result of that monetary policy, like the microeconomics game theory or something like that. Of course, even though there are some differences in the magnitude, the reason why I say that kind of aspect is that, as I just mentioned, if we go back to 1970s, it is very important for the U.S. to have their very strong, in some sense, their French in terms of politically and also the economically with U.S. That means if there are many countries which have some economic turbulent or the other difficulties, even though they are friends of the U.S., then it is very hard to maintain those friends. And then it would eventually, that cannot become the advantage to the U.S., or the U.S. might have some negative impact in that sense. So I think when they make their policy decision, of course, normal time, that's fully understand, just focus on domestic economy, but they should also focus on the other the international financial markets, what is happening in this period.
Thank you very much. Now, the dollar index, which is a big headache for Korea and most emerging countries. Currently, most of emerging countries and also developed countries, the currency value is driven by dollar index, and others include kind of interest rate differential, but dollar index dominates. And currently we have a strong momentum, upward strong momentum of dollar index, and I think this is related to the U.S. pivot timing. But the expected move or expected return and volatility of dollar index is important in capital flow management for especially small open economies and most emerging countries. And how long do you think the dollar index, the upward momentum of dollar index will continue? Any thought on that?
First thought is that if I knew, of course, I wouldn't be here. I'd be making money. But the second more serious thought is, of course, that nobody knows, which is the same thing as I just said, really. But having said that, there are two factors that have been leading to the increase in the appreciation of the dollar recently. One factor is simply that because of the Ukraine-Russian war and uncertainty, as has happened ever since, I guess it was 100 years ago or more, when people other way in the rest of the world are worried about things, the dollar is a safe haven. And it is this time. And so that's been driving up the dollar. Then in addition, as of course our interest rate has gone up, capital has been flowing more toward the U.S. because of the higher interest rate. So both of those things have been leading to dollar appreciate. I would guess that well, again, we don't know what's going to happen with Russia, Ukraine, and a number of other things. So there's a lot of uncertainty about this, but I would guess there's potential that the dollar could still appreciate some more. How much more? I don't know. I'd say maybe 5, 10, maybe even 15%, but that would be sort of, I would guess, about the upper bound, assuming the relative rate of inflation of the U.S. does not rise further. If the rate of inflation rises further, of course, that changes everything. So I'm assuming that that gets back under some control and things in other parts of the world go about as they are now. But on the other hand, if that's not at all certain, it could be that we've reached a peak already. And especially if something happened to end the war, or especially if more signs came that U.S. inflationary pressures were going down, that might ease things too. So I think it's just very hard to know about what will happen to the dollar. And as you know, the U.S. does not really intervene in its own exchange rate. That's determined really by the rest of the world. And in that regard, the Fed does, in its considerations, take into account its impact of what it does on the rest of the world. It does not publicize that very much for the obvious reason that the law says that it can look at only full employment and price stability. But when you take into account that if, for example, the increase in monetary policy reduces, let's say, American exports, then of course that affects the American economy, so you can take it into account, if you see what I'm saying. So it's not quite direct, but it happens.
So in academic seminar, we sometimes say we agree to disagree. So I agree that why you do not agree with my opinion, sometimes we say. So that means in this period, it is certain that it is uncertain.
We agree on that, but I didn't say I disagreed with you.
No. I'm not talking about you. So in general, academic seminar, sometimes we say, yeah. So sometimes we say that. So that means that I think it is very hard. I mean, I totally agree what Anne just said. So in that sense, it is uncertain what would happen to that in that issue. So it is very hard to say that when that change would happen. But what we can say is that I think the U.S. Fed would continue to have some pressure of increasing base rate up to the point when inflation is stabilized. We don't know when that would happen, and we don't know what would drive. And then because there are, as just she said, there are many aspects, but we know that they would continue that part. That means the dollar index would have some pressure of becoming the higher up to that point. Of course, during that period, there will be a big change. There can be some volatility, and then there can be some differences in magnitude. But what we can say is that. And then I sometimes, yesterday I got a phone call from a reporter. She said, "Is this the peak of inflation?" Then I say, it is not the time to consider or think about the peak of inflation. I can say that it's not the time to think about to consider the peak of dollar index, I guess.
Thank you. I think we have one more issue to discuss briefly for next 3 minutes. It's the possibility of coming back of high inflation period from the context that deglobalization, resilience-focused value chain, global value chain, and the demographic change, notably well addressed by Goodhart and Pradhan in their book. They all imply higher inflation in the long term. And some economists and market participants think the normal level of inflation is actually moving up. Do you agree with that?
What happens to the normal rate of inflation will depend on mostly what the political pressures are, and at least in the advanced countries, and certainly in the United States at the moment, it is recognized that higher inflation is bad for people, it's bad for business, it's bad for growth, it's bad for everything. And so at the moment, the consensus is no, and it is quite possible to bring that rate back down. And I think that's the more likely thing to happen. I think it would be a tragedy for the world if for some reason inflation accelerates and that keeps on going up. That would be just very, very bad. Raising the target rate of inflation, which has been, as you know, 2% to 4%, doesn't make any sense. Because first off, once they've raised it, then the question is when will they do it again? So they've lost credibility. And raising it once and for all for 2 percentage points doesn't meet the problem, I don't think. So as far as I'm concerned, I'm very much for sticking to the 2% target. I think you could argue a bit about how fast or how quickly you get back to it. But I don't think you could say that really we ought to say, we'll toss in the towel, we're going to have higher inflation. That's Latin American style, and we know where that goes.
Okay, so I should say, I can definitely say I would not agree. So in the following sense, if we go back to a few years, that was the time we have some problem of very low inflation rate. At the time, people say normal inflation rate has been decreased. And then now we are having the higher inflation, and then people say now there was a change in inflation, normal inflation rate. I don't agree with the both sides, either side. So that means it is hard to, we cannot say what is the normal inflation rate. Why we care about inflation? Because people are suffering from inflation. That's the point. If they think that, oh, okay, I have the 2% wage increase stably, and then I would have the 2% inflation, so there is no big change in my real income, or if I can have an increase in real income, that's better. So that means the 2% and 4%, not just based on those numbers. What we should see to find the normal inflation rate is that people, the current economy situation, what is going on in wage and other real economy activities. That should be the point. But currently, there are no big changes in terms of real economy activities to change that normal inflation rate. Just what is happening now is that just there was an increase in cost push and also the demand pull based on liquidity injection. That was happening. So in that sense, anyway, we should dampen that inflation so that people would have the less suffering. So that is the point, I guess.
Okay. Actually, I had many other topics to discuss, but we run out of time. So I think we should wrap up my session. And thank you very much for your excellent talk, your excellent discussion. And I hope our audiences can benefit from your discussion. Thank you very much.
Thank you.
Thank you very much to Dr. Shin Seung-won, Dr. Ann Kruger, and Dr. Sung Tae-yoon for your insights on navigating turbulent waters for sustainable growth solutions. You have given us a lot to digest, in addition to our upcoming lunch. But before we begin, just very briefly, we would like to have both Amy and Ella Meek, founders of Kids Against Plastic, to join us on the stage. We would also like to invite Uri Financial Group Chairman Son Tae-seung and IGE Chairman Dr. Chung Kwang-woo to the stage. Just to give a bit of a background, for their trip to Korea, Amy and Ella were looking for a way to offset the carbon footprint from their flight. So with the help of Uri Financial Group, a Kumgang pine tree, or Kumgang sonamu, was planted in Ulsan-gun, South Korea. Amy and Ella also wanted to donate their honorarium to reduce the effects of plastic waste. So inspired by their initiative, Uri Financial Group wanted to provide a matching grant, and they join us on this stage to honor that pledge. So can we have Amy and Ella. And once the stage is set, thank you, Amy and Ella, and Chairman Son Tae-seung, as well as IGE Chairman Chung Kwang-woo. So to commemorate this giving pledge, we would also like to have a quick photo time with our guests on the stage. Thank you very much. So thank you to Amy and Ella Meek, as well as Chairman Son Tae-seung and Chairman Chung Kwang-woo. At this time, a very tasty luncheon has been prepared for you. As you enjoy your lunch, we would also like to share a special pre-recorded message by Mr. David Rubenstein, co-founder and co-chairman of the Carlyle Group. We hope you enjoy Mr. Rubenstein's message, as well as your lunch, and we look forward to seeing you at our third session at 2:10 p.m. Thank you very much.
Hello, I'm David Rubenstein, the co-founder and co-chairman of the Carlyle Group, and I'm sorry I cannot be with you this year, but because of schedule constraints, I'm just not able to be in Korea today. I have been there before, and I look forward to coming to Korea again to talk about the relationships between the United States and Korea, and the relationships between my own firm and many other firms in Korea. As I talk to you today, I want to talk about one important subject, which is sustainability. And I do so in an atmosphere where we recognize the economy is not wonderful in the United States and in Asia. Clearly, in the United States and in Europe and in Asia, there are economic challenges, stemming in part from the fact that for quite some time we've had to deal with COVID, and COVID has forced governments to increase spending, and the result of increased spending has been some inflation. The war in Ukraine has also contributed to this factor. And as a result, we now see interest rates going up as an effort to get inflation down and further down. Clearly, what will happen as interest rates go up in the United States and around most of the world, you will see lower GDP growth, and lower GDP growth will not be good for anybody's economy and for anybody's lifestyle. So this is not going to be a happy period of time. I suspect it will take a year or two before we sort through the post-COVID and post-war environment. And as we deal with this post-COVID and post-war environment, we should recognize that recessions are not terrible in the sense that they happen every 7 years or so. They do have some unfortunate consequences, but they are tolerable if we work together and we work in ways that make certain that we modify and minimize the effects of a recession. If that recession occurs in the United States or in Asia or in Korea particularly, or in China or in Europe, we do have a common interest in working together to solve one other problem. And that problem is sustainability and climate change. And let me address that for a moment. I think it should be clear to everybody that the world is changing in terms of the climate. It wasn't recognized 100 years ago or 200 years ago as the industrial age began, but I think it's clearly recognized now that the carbon that's been put in the atmosphere is making the Earth less tolerable, less safe, less humane, and also a place that we cannot sustain in this way for many, many decades into the future. We all have an obligation as humans to work together on certain issues. We may have our differences economically, technologically, and politically, but we all have one thing in common. We're all humans with the desire to make certain that our children and our progeny have a happy and healthy life. We can't leave that happy and healthy life for them if we have a planet that is not safe and is not healthy. We recognize now that the effect of putting carbon in the atmosphere has been damaging to our environment, been damaging to our health, and it clearly is leading to a dangerous situation that is going to get more and more dangerous. I have sought for some time that a better phrase for climate change was life extinction, because life extinction makes it clearer that we're actually going to begin to extinguish life, human life, and other types of life on the face of this planet unless we do something about it, and we need to do it relatively quickly. So while we have some economic challenges in the United States, we have some economic challenges between us and China, and clearly there are challenges throughout the world. It doesn't mean we should abandon our effort to deal with climate change and sustainability. We can work on these issues despite the fact that we have some political and economic differences. The U.S.-Korea relationship is good, but can always be better. There are some trade differences for sure, and we don't agree on everything. But there's no doubt that we do agree that we have a common interest in solving the problems of climate change, or as I say, life extinction. What can we do about this? Well, one thing we can do is make certain that we are very efficient in using energy. We're using energy that is not polluting the atmosphere. We're using energy that is more conducive to human life continuing in a happy and healthy manner. That is not going to be easy. Clearly, the United States recognizes that developing parts of the world feel that they have had a disadvantage for many, many generations, and now that they are able to produce products and do things that the developed world has done for some time, they perhaps should be able to do so in a way that the developed world did, which is to say, pollute a little bit more than maybe the developed world is allowed to do. That's a debate that is going on for some time, and I won't get into it now, but clearly we recognize in the United States that developing market countries have a different situation than developed market countries. However this is resolved, all of us have a common interest in working together. All of us have a common interest in preserving life. All of us want to have children who are happy and healthy, and grandchildren who are happy and healthy, and our descendants from there on also happy and healthy. That will not be possible if we continue to conduct our affairs the way we are doing now. We're manufacturing things with too much carbon, we're transporting ourselves with too much carbon, and we're living our lives with too much carbon escaping into the atmosphere. Now, the truth is that virtually nothing we do today will dramatically affect the carbon in the atmosphere. It will take a while for that carbon to evaporate. But we can do things to make Earth much safer and healthier. We can do many other things. We can transport ourselves in a healthier way. We can conduct our affairs in a healthier way than we're doing now. And we can use materials in the manufacturing process which are more sustainable. And I hope that the United States and Korea can be leaders in working together, showing that a bilateral relationship is one that can produce a sustainable economic relationship. It doesn't necessarily mean that because you are doing things in a sustainable way, you're going to have lower growth, you're going to have less economic GDP, you're going to have lower employment. That isn't necessarily the case. I think we need to make it clear that you can have a sustainable economic environment, a sustainable way of producing products and services without decreasing employment, and doing it in a way that's happy and healthy for society. It's not going to be easy. Clearly, the easier path, the path of least resistance, is to continue doing what we're already doing. But the path of least resistance is the path we can't take. We need to do something much more difficult than just taking the path of least resistance. We have to work much harder than we are today to produce sustainable processes, sustainable manufacturing, sustainable transportation. I think that the Americans that I know and the Koreans that I've met with over the many years have a view that it is important that we work on this problem. Now, I realize everybody in Korea and everybody in the United States doesn't share that view, but I do think we have an incumbent upon us to educate people about the challenges we face, and to not just accept as a matter of course that some people are not going to agree that there is climate change going on, or what I call life extinction. So as you meet at this conference, I hope you think about one thing above everything else. Economics is important, Political stability is important. War and peace is very important, and obviously peace is more important than anything else. But we have to make certain that we work together with the common cause of reducing climate change and reducing life extinction. If we don't do so, all the other problems we're dealing with, all the other economic challenges, trade challenges, manufacturing challenges, political challenges will in time seem insignificant. We have an obligation as humans to leave this earth happier and healthier than we found it. And if we don't do so, it's an unfortunate situation for our heirs, because they will not be able to enjoy the freedoms and the pleasures of living on this earth that we have had. So I hope all of you will think about, as you go through this conference, ways you can improve what you're doing in sustainability, and ways you can work with others from other countries and your own country to improve sustainability in manufacturing, in transportation, and the way we live. I know I'm going to try to do what I can do in a better way, and I hope all of you will do the same. I wish I could be with you again. Sorry I can't be with you this year, but I hope all of you will take my message and do something about it, which is to say, do something about sustainability and work together in ways that bring together Korea and the United States, and also our neighbors in Asia and the rest of the world. So thank you very much for giving me this time. I appreciate it.
변화를 위해 ESG 경영 실천에 앞장서고 있는 국내 기업들. 그들은 어떤 미래를 꿈꾸고 있을까? 나와 너, 우리 모두를 위한 W금융그룹. 1899년 설립된 후 우리나라 은행 최초로 증시 상장과 해외 지점 개설에 성공한 데 이어 2001년 국내 1호 금융지주로 출범하는 등 대한민국 금융을 선도해 왔는데요. 2019년 지주체제로 전환하며 새롭게 출범한 이후 단순 은행과 금융업뿐 아니라 자산 운용과 부동
ESG 코리아의 박수준입니다. 혹시 그린워싱이라는 말 들어보셨겠죠? 그린과 화이트워싱, 세탁의 합성어로 우리말로 바꾸면 친환경 위장술이라고 할 수 있는데요. 기업들이 마치 친환경 경영을 제대로 하고 있지도 않으면서 잘하고 있는 척 흉내만 내고 홍보하는 것을 말합니다. ESG가 사회적으로 중요한 가치로 떠오르면서 기업 매출에 영향을 미치자 무늬만 친환경에 나서는 기업들이 늘고 있는 거죠. 소비자들도 이런 그린워싱 기업을 잘 가려내는 눈을 키워야 할 텐데요. 이런 의미에서 오늘 소개해드릴 기업은 참된 친환경이 무엇인지, 지구와 환경을 위해 기업이 어떤 역할을 선도할 수 있는지 로드맵을 잘 보여주는 모범 사례라고 할 수 있겠습니다. 국내를 넘어 글로벌 지구 환경을 위해 더 멀리, 더 높게 나아가고 있는 우리나라 대표 금융그룹, 지금부터 만나보시겠습니다.
우리나라의 ESG를 선도하는 W금융그룹. 금융을 통해 더 나은 세상을 만들어간다는 핵심 비전 아래 ESG 경영에 전면 나서고 있는데요. 2021년 CEO와 자회사 대표 이사들이 위원으로 참여하는 그룹 ESG 경영협의회를 신설한 후 금융지주 및 자회사의 ESG 전담 부서를 만들어 플랜 제로 100이라는 중장기 ESG 목표를 세웠는데요. 핵심 내용은 2030년까지 ESG 금융 100조 원 지원, 2050년까지 탄소 배출 제로를 달성하는 것. 이와 더불어 친환경 경영 확대, 사회적 가치 창출, 투명 경영 강화라는 3대 전략 아래 9가지 세부 전략 과제를 세워 적극 실천 중입니다. 특히 사회적 가치 창출을 위해서 이해관계자 상생 경영 활동에 주력하고 있는데요. 기업 활동 전반에 있어서
이해관계자를 존중하고 그들의 권리를 증진시키며 함께 발전하도록 하는 것을 말합니다.
ESG 경영부는 ESG 전반에 걸쳐 국제적인 이슈를 살펴보고 우리가 더 적극적으로 참여할 수 있는 분야가 없는지 살펴보고 있습니다. 세계적인 트렌드를 놓치지 않기 위해 이렇게 주기적인 스터디를 하고 있습니다. 이를 통해 새로운 아이디어나 기회를 얻기도 하고 여기에 더해 ESG 경영부 전원이 ESG 리스크에 발빠르게 대응할 수 있는 능력을 갖추고자 하고 있습니다.
ESG 경영에 적극 나선 결과 글로벌 ESG 평가 최우수 등급을 획득하고 다우존스 지속가능 경영지수, 아시아 퍼시픽 지수에 최초로 편입하는가 하면 모건 스탠리 캐피털 인터내셔널 AA 등급, 한국기업 지배구조원 A 등급을 달성했습니다. 또한 환경부문 국무총리 표창까지 수상한 W금융그룹. 직원들 모두 자발적으로 나서서 탄소 중립 생활을 실천하고 있는데요. 채식을 활용한 탄소 중립 식단을 활용하는 가든데이도 한 달에 4회씩 실천하고 있습니다.
이 식단에는 생산부터 조리까지 탄소 발생이 최소화될 수 있도록 채식 위주의 식단으로 구성이 되어 있고요. 직원들의 반응은 굉장히 긍정적입니다. 매주 금요일에는 이 가든데이를 즐기기 위해서 직원 식당만 방문하시는 직원들도 있습니다.
또 사내에 그린 수거함을 설치해 쓰레기 분리수거도 철저히 하는데요. 직원들의 적극적인 참여 속에 깨끗하게 분리된 재활용 쓰레기는 W금융그룹만의 특별한 자원순환 시스템을 거쳐 생활용품으로 거듭나게 됩니다. W금융그룹의 재활용 쓰레기가 수거되는 곳은 경기도의 한 순환자원 유통기업. 사내에서 모아진 쓰레기들을 스티로폼과 플라스틱 페트병, 파지 등 종류별로 선별해 곱게 분쇄한 후 재생칩을 만들어 재활용 제품 생산에 활용하고 있습니다. W금융그룹은 이 업체를 통해 사내에서 모은 폐기물의 양이나 탄소 감축 효과 등 자원순환에 관한 데이터를 제공받게 되는데요. 이를 통해 폐기물 배출량을 모니터링하고 쓰레기 증감 요인을 정확히 파악해 더 줄여나갈 수 있는 방안을 마련하고 있습니다.
저희들이 데이터를 제공함을 통하여서 우리 회사에서 이러한 폐기물들이 발생되구나 첫째 임직원들이 인지를 하시게 되셨고요. 더 나아가서는 이렇게 우리들이 발생한 폐기물들이 잘 선별이 되면은 직접적 간접적으로 탄소 저감, 온실 저감이 되는구나라는 인지를 하게 되셨다는 데 가장 큰 의미가 있을 것 같습니다.
W금융그룹의 ESG 경영은 국내를 넘어 해외까지 그 폭을 넓혀가고 있는데요. 지난 8월 W금융그룹은 아시아 산림협력기구와 함께 업무 협약을 맺고 아시아 지역의 산림 보호를 위해 직접 나섰습니다.
이번 캄보디아 출장은 아시아 산림협력기구 즉 아포코와 우리 그룹이 캄보디아의 레드플러스 사업을 진행하기 위해서 왔습니다.
레드플러스는 개발도상국들을 대상으로 산림의 황폐화를 방지해 지구의 온실가스 배출을 줄여나가기 위한 사업인데요. 캄보디아 지역을 직접 돌아보고 현지 주민들을 만나본 결과 무분별한 산림 벌채의 심각성을 파악할 수 있었습니다. W금융그룹은 캄보디아 산림청과 협의를 거친 후 적극적인 금융 지원과 함께 현지 주민들을 위한 새로운 일자리 창출 등을 통해 산림 보호에 나설 예정입니다.
또 캄보디아 지역사회에도 도움을 주고 또 탄소 중립에도 일조하는 일석삼조의 효과를 얻었습니다.
បាទកាលណាបាត់បង់ព្រៃឈើនៅទីប្រាសាទតាខ្មៅនេះគឺជាជនជីវភាពគឺមានការខ្វះខាតទីមួយទៀតបំពេញតម្រូវការពួកគាត់ការកត់លុយឈើមកបំពេញសេដ្ឋកិច្ចគ្រួសាររបស់គាត់ទីមួយទៀតការធ្វើស្រែមករបររបស់គាត់មិនមានការទៀងទាត់ភាគច្រើនដោយសារតែគាត់ពឹងផ្អែកទៅលើផលព្រៃឈើ
이번에는 W금융그룹의 ES 주역들을 만나보도록 하겠습니다. 어서 오십시오.
안녕하세요. 오늘은 스튜디오에 선남 선녀들이 오셔가지고 저 약간 볼터치 몰래 하고 한 번 더 하고 왔잖아요. 네, 자기소개 부탁드립니다.
네, 안녕하세요. ESG 경영부 한재선 계장입니다.
네, 안녕하세요. ESG 경영부 임종문 과장입니다.
네, 반갑습니다.
제가 이렇게 얘기를 들어보니까 다른 기업들이 ESG 경영을 위해서 실천하고 있는 과제보다 규모가 굉장히 큰 것 같아요. 어떤 좀 비결이 있을까요?
금융을 통해서 우리가 만드는 더 나은 세상을 만들기 위해 사실 사회적인 가치 창출을 하기 위한 다양한 사업을 저희가 진행하고 있었어요. 첫 번째는 올해 공익재단을 설립했습니다. 이제 공익재단은 저희 전 그룹사가 참여하여 약 200억의 자금을 출자하여 만든 재단인데요. 좀 더 규모감 있고 실질적인 사회공헌을 좀 넓힐 수 있도록 하기 위해 재단을 한번 설립한 거고요. 이제 두 번째로는 경제적으로 어려우신 소상공인분들이나 청년들을 위해서 최근 3년간 23조 원의 금융 지원을 하는 또 우리 함께 힘내요 상생경영 프로젝트를 저희가 실시하고 있습니다. 이런 것들은 사실 직원뿐만 아니라 회장님이야 많은 직원들이 ESG에 대한 중요성도 알고 그래서 모두 동참하고 있고 합심해서 사업을 진행하고 있기 때문에 이뤄낼 수 있었던 게 아닌가라고 생각이 듭니다.
이렇게 많은 어려움을 가지고 업무를 좀 보고 계신데 그래도 업무를 보시면서 보람도 많이 느끼실 것 같고요. 또 성과도 많이 만들어내실 것 같은데 소개 좀 해주시죠.
일단 제가 환경 관련 활동들을 많이 했었는데요. 그 중에서 가장 기억에 남는 건 Act for Nature with 우리라는 캠페인이었어요. 이 캠페인이 이제 전국 초등학교 학생들이랑 플라스틱을 수거해서 이거를 텃밭 화분으로 재활용을 해서 그 흙이랑 씨앗 이렇게 키트를 구성해서 다시 초등학교에 기부를 하는 캠페인이었는데요. 제가 그 화분을 전달하면서 직접 초등학교에 방문을 했어요. 아이들이 일단 그 화분을 보면서 자기가 버린 플라스틱이 이렇게 재활용됐다는 사실에 놀라는 모습이 매우 귀여웠고요. 정말 매우 뿌듯해지는 순간이었습니다.
ESG 경영을 실천하고 계신 두 분, 각오 한마디씩 좀 부탁드리겠습니다. 먼저
ESG가 중요성이 점차 증가하고 있고 그리고 많은 분들이 ESG에 대한 관심이 더욱더 많아지고 있는 상황인 것 같아요. 그래서 저희는 많은 고객분들이 참여할 수 있는 캠페인도 한번 만들어보고 관심을 가질 수 있는 ESG 금융 상품도 한번 개발하고 출시해서 앞으로도 선도적인 ESG 사업을 잘 추진해 보도록 하겠습니다.
오늘 말씀 잘 들었고요. W그룹의 ESG 경영 많이 배울 수 있었습니다. 수고 많으셨습니다.
감사합니다.
감사합니다.
피톤치드 너무 좋아요. 짠! 우리를 위해 우리가 바꾼다. 안녕하세요, 송글송글입니다. 오늘은 W금융그룹의 체험을 위해서 이거 경상북도 울진에 와 있는데요. 보시다시피 칼칼한 분위기가 물씬 풍기는 숲속이에요. 여기서 등산이라도 해야 될 것 같은데요. 이곳에서는 어떤 ESG 활동이 펼쳐질지 궁금하시죠? 함께 들어가 보실까요? 오, 피톤치드 너무 좋아. 가을이 오라, 가을, 가을.
W금융그룹이 ESG 활동을 위해 강원도 울진을 주목하게 된 이유. 바로 지난 3월에 있었던 울진 삼척 대형 산불 때문입니다.
그날의 산불 피해를 기억하고자 사진 전시회를 열었습니다.
여기 다 산불 현장인 거예요?
네.
어떡해.
2000년 4월 동해안 산불 이후 최대 규모의 산불로 기록된 강원도 울진 삼척 대형 산불. 무려 213시간 43분 만에 진화돼 우리의 소중한 숲을 앗아갔습니다.
이렇게 보니까는 진짜 그 참담했던 그 화재 현장이 생생하게 이렇게 담겨져 있네요. 근데 과장님, W금융그룹이랑 산불이랑 무슨 관련이 있는 거예요?
저희 이 사진을 보시면 그때의 그 피해 규모를 알 수 있잖아요.
당시의 화재로 울진과 삼척의 산불 피해는 16,000헥타르가 넘었다고 합니다.
저희도 어떻게 도움이 될 수 있는 방안이 없을까 고민하다가 산림청에서 특별한 숲길을 만든다고 해서 이번 기회에 저희도 동참할 수 있는 기회가 생겨서 참여하게 되었습니다.
오, 특별한 숲길이요? 어떤 숲길일까요?
충남 태안 안면도에서부터 경북 울진을 잇게 될 동서 트레일. 총 연장 길이만 849km에 달할 거라는데요. 다양한 수종이 자라는 푸른 숲길을 조성해 기후 변화를 완화시키고 숲길 걷기를 통해 국민 건강 증진 그리고 숲 인근 지역의 발전을 이끌 예정입니다.
이거 대형 울진에서 대형 산불이 발생했습니다. 여기에 이제 주민들의 재단이라든가 이런 피해가 심해서 시대에 많이 빠져 있었습니다. 우리금융에서 선뜻 ESG 기금을 주셔가지고 동서 트레일 시범 구간을 조성을 하게 됐습니다.
안녕하세요. 산림청 직원분들이시군요. 저희 오늘 숲길을 걷는다고 들었는데 어떤 구간을 걷는 거예요?
예. 저희 동서 트레일은 동쪽 마양정부터 서쪽 끝까지 849km인데 그 중에 55구간 16km를 걷게 되겠습니다.
그럼 한번 미리 둘러볼까요?
네.
네.
이쪽으로 올라가요.
네. 가시죠.
앞으로 동서 트레일이 만들어질 지역을 미리 둘러보고 밑그림을 구체화시키기 위한 답사를 진행하고 있는데요. 이곳이 바로 동서 트레일의 시작점이 될 망향정입니다.
오, 바다 아니에요? 와. 오, 바다다! 여기 숲길인데 바다가 보여요.
관동 8경 중 하나인 망향정.
예. 동서 트레일 시작하는 첫 구간 망향정입니다.
와, 너무 좋은데요? 바다도 보고 숲도 보고 일석이조네요.
너무 좋은 것 같아요.
이곳 망향정부터 중섬교까지 이어지는 시범 구간을 시작으로 2026년까지 한국형 산티아고 숲길을 완성할 계획이라고 합니다.
산불 피해는 마음이 아프지만 이렇게 특별한 숲길이 조성된다고 하니까 기대가 됩니다. 하루빨리 산이 복구되고 예쁜 숲길이 조성되길 바라는 마음에서 우리 묘목을 한번 심어보도록 할까요? 화장님 뭐 있으세요?
저도 어린 시절에 식목일에 한 번 심어봤고 그 이후에 처음인 것 같은데 네, 좋은 기회인 것 같습니다.
자, 그럼 묘목 심기
도전!
국내외 경계 없이 우리 모두의 지구를 살리기 위한 W금융그룹의 노력. 앞으로 이뤄갈 푸른 결실이 더욱 기대되는 이유입니다.
저희가 이렇게 금강 소나무를 심어봤는데요. 이름을 지었어요.
우리
함께
가꿔요.
우리 함께 가꿔요.
우리 모두 함께 가꾸는 푸른 희망. W금융그룹의 ESG입니다.
네, 이번에는 W금융그룹 손태승 회장과 화상 연결해보도록 하겠습니다. 반갑습니다, 회장님.
안녕하십니까. 손태승입니다.
네, 회장님. 최근 ESG와 관련해서 두드러진 활동을 하고 계신데요. 그룹의 ESG 비전과 전략, 무엇인지 궁금합니다.
예, 우리 그룹 ESG 비전은 금융을 통해 우리가 만드는 더 나은 세상입니다. 고객, 주주, 사회, 임직원, 협력사 등 모든 이해관계자로부터 가장 신뢰받고 사랑받는 금융그룹이 되고자 지난 2021년에 직원들과 제가 함께 만들었습니다. 주요 전략으로는 친환경 확대, 사회적 가치 창출, 그리고 투명 경영 강화를 핵심축으로 추진하면서 중장기적으로는 2030년까지는 ESG 금융으로 100조 원을 지원하고 2050년까지 그룹 관련 탄소 배출량을 제로하는 플랜 제로 100을 목표로 설정하여 추진하고 있음을 말씀드리겠습니다.
W금융그룹, 최근에 ESG 분야에서 많은 성과를 내고 계신데요. 그 비결은 무엇일까요?
네, 최근 전 세계적으로 글로벌 기후위기와 생물 다양성, 순환경제 등 환경의 중요성이 날로 커지고 있어서 우리 그룹도 환경 분야에서 글로벌 리더십을 확보하기 위해 우선적으로 국제적 협력방을 모색하였습니다. 지난 1월에 자연 생태계 회복을 위해서 국제적 연대와 기업의 정보 공개 기준을 수립하는 PNFD에 참여를 하였습니다. 5월에는 유엔 사막화 방지협약 당사국 총회에서 토지 황폐화 방지를 위한 기업들의 선언인 비즈니스 포 랜드 출범식에서 제가 영상을 통해서 지지를 선언한 바 있습니다. 8월에는 글로벌 생물 다양성 보존 이니셔티브인 피바프에 가입을 하였습니다. 앞으로도 글로벌 리더십을 저희들은 더욱 강화할 생각입니다.
네. 우리 사회의 지속 가능한 발전을 위해서도 많은 노력을 하고 계신데요. 앞으로 계획은 무엇일까요?
네, 요즘 세계적으로 발생한 상황을 제가 잠시 한번 말씀드리겠습니다. 지구촌 곳곳이 기상이변으로 해서 폭염, 폭우, 홍수 등으로 신음하고 있습니다. 우리나라도 지난 여름 기상관측 이래 최대인 1시간에 140mm 이상의 폭우가 내려서 서울, 강남 지역 등 곳곳이 침수된 재해가 있었지 않습니까? 또한 국가 사회적으로는 코로나19 팬데믹이 아직 완전히 사라지지 않은 상황에서 글로벌 인플레이션과 우크라이나 전쟁이 장기화되면서 모두가 힘든 시기를 보내고 있는 상황입니다. 이러한 국내 상황 속에서 우리 그룹이 ESG 경영 체계를 바탕으로 우리 사회의 지속 가능한 발전을 위해서 글로벌 기후 위기에 적극 대응하고 지역사회와 더 큰 나눔을 실천하면서 ESG 금융 지원을 확대하여서 모든 이해관계자와 함께 더 나은 세상을 만들어 나가는데 최선을 다하겠습니다.
네, 회장님. 앞으로도 우리나라 금융업계를 대표해서 더 많은 ESG 활동을 펼쳐주시길 기대하고요. 오늘 좋은 말씀 감사드립니다.
감사합니다.
네, 오늘은 우리나라 금융업계를 대표해서 국내뿐 아니라 글로벌 환경을 위해 진심을 다하는 기업을 만나봤는데요. 앞으로도 무늬만 ESG가 아니라 뼛속까지 함께 ESG를 실천하는 기업들이 더욱 많아지면 좋겠습니다. ESG 코리아도 늘 진심을 다하겠습니다. 감사합니다.
Hello, I hope you enjoyed your luncheon and you're ready for the third session of the Ige-Wfg International Conference. Our third session will focus on ESG success strategies for nature recovery, circular economy, and supporting the climate vulnerable. I would first like to introduce two pre-recorded keynote messages, followed by special remarks from three distinguished speakers who join us offline today. Our first keynote message is from Ms. Maruma Murema. Ms. Murema is Executive Secretary of the Convention on Biological Diversity, and she has previously held several leadership positions in the United Nations Environment Program. Please share Ms. Murema's special message at this time.
Greetings to you all. I am pleased to be here with you today for this international conference on sustainability hosted by the Institute for Global Economics and World Financial Group. As I'm sure you are aware, there is a very dense international policy agenda on climate and biodiversity as we near the end of 2022. With COP27 of the UN Framework Convention on Climate Change just closing in Egypt, and the second part of the Conference of the Parties 15 of the UN Convention on Biological Diversity just about to start in Montreal, we can expect change on the horizon. We know that corporate and financial assets are largely dependent on biodiversity, causing material, physical, and transition risks. And with over 44 trillion US dollars of assets globally, over half of the world's GDP is at risk from biodiversity loss. We are at the pivotal moment in time. As Executive Secretary of the UN Convention on Biological Diversity, I'm honored to also co-chair the Task Force on Nature-Related Financial Disclosure, or TNFD. The TNFD is also progressing its ambitious work program, having released the third iteration of its beta framework and guidance in early November. It is now being supported by an extensive program of pilots en route to further developing and publicly issuing the TNFD framework for disclosure on nature-related risks, impacts, and opportunities in 2023. At the second part of the Conference of the Parties 15 this December in Montreal, parties to the convention will have the responsibility of finalizing, building consensus on, and adapting a landmark agreement, the post-2020 Global Biodiversity Framework. There is growing expectation amongst government, society, businesses, and financial institutions that this framework will be a landmark agreement for biodiversity, similar in scale to the Paris Climate Agreement. The Global Biodiversity Framework will steer the world on the right path in order to achieve our vision of living in harmony with nature by 2050 and create a sustainable future for generations to come. It is comprised of qualitative and quantitative goals and milestone targets that aim to put biodiversity on a path to recovery by 2030. I don't have to tell you that we have a very narrow window of opportunity, and it will take ambition, commitment, compromise, and strong collaboration across all sectors of society to successfully achieve the goal of living in harmony with nature. Believe me when I say that the draft Global Biodiversity Framework recognizes the critical role that businesses and financial organizations have in supporting this vision. Given the system-wide dependence of society and the economy on biodiversity and ecosystem services, biodiversity loss driven by human activities is exposing a multitude of risks to our health, livelihood, and economy, all with negative impacts to business and financial institutions. The draft post-2020 Global Biodiversity Framework places emphasis on various directives for businesses and financial organizations, including mainstreaming biodiversity within policies, strategies, and operational decision-making. Essentially, we want to systematically and effectively integrate the consideration of biodiversity within all levels of decision-making to minimize risks and negative impacts and enhance positive impacts onto habitats, species, and the ecosystems. Aligning financial flows with the objectives to reverse biodiversity loss and achieve conservation, regeneration, sustainable, and socially equitable use of biodiversity and ecosystem services. Aligning financial flows points to the mobilization of dedicated resources towards actions that are positive for biodiversity, or as many calls it, financing green assets and activities. This also means reducing risks and negative impacts to biodiversity in all other activities, assets, and investments, public and private. As well, seeking to generate positive impacts through appropriate mitigation, offsetting, ecosystem restoration and regeneration, pollution reduction, zero deforestation, and natural habitat conservation policies, etc. This concept is often referred to as greening finance. And finally, assessing, reporting, and disclosing on impacts and dependencies of businesses and financial institutions onto biodiversity with a view of reducing impacts to biodiversity and risks to businesses and financial institutions. Setting the right policy and regulatory landscapes to achieve the milestone targets and vision of the post-2020 Global Biodiversity Framework is first and foremost a responsibility of the parties to the Convention on Biological Diversity. They will be responsible for the implementation of the framework at jurisdictional level. This will include cultivating and enabling legal, regulatory, financial, physical, and commercial environment for business and financial organizations to transition towards business models that support the halting and reversing of biodiversity loss by 2030. That said, businesses and financial organizations already can and should take steps towards integrating the considerations of biodiversity within their policies and operations and start their own green transition without waiting for regulatory developments. We are running out of time. Acting now and acting quickly to align with the targets and vision of the draft Global Biodiversity Framework is a collective responsibility shared amongst each of us in society and the economy. I am happy to report that we are seeing some organizations already engaged in this process, and I salute the very strong interest that many businesses and financial institutions are showing in the Conference of the Parties 15 process. Conference of the Parties will include a dense and strong sequence on business and financial engagement, and I encourage every corporate and financial decision maker to be attuned to the developments that will take place during the conference. These will provide useful and necessary elements for a roadmap to halt and reverse biodiversity loss by 2030 and achieving the vision of the framework by 2050. On the matter of disclosures, I would like to emphasize the consistency of the TNFD initiative with the draft post-2020 Global Biodiversity Framework. Of course, the Task Force on Nature-Related Financial Disclosure, or TNFD, is not a policy or regulatory initiative. This is a voluntary, market-led initiative that is not directly associated with mandatory disclosure. That said, the TNFD framework is set to provide invaluable methodological and technical guidance for organizations to locate, evaluate, assess, and report on nature-related risks, impacts, and opportunities. This reporting is critical to account for the risks that the loss of biodiversity and natural capital creates for organizations and should be included within the overall enterprise risk management process. This is a critical element to the successful mainstreaming of biodiversity within business and financial strategies and decision making. The objective is to make progress in reducing nature-related risks to organizations and reduce negative impacts from organizations onto biodiversity, while also leveraging on the opportunities for positive impacts. I'm extremely pleased that Worry Financial Group is a member of the TNFD Forum and is participating in the piloting program on the draft TNFD framework in collaboration with the United Nations Environment Programme Finance Initiative, or UNEP-FI. This active engagement with the TNFD is a strong sign of commitment from Worry Financial Group, proactive approach to sustainability and to the recognition of the importance of nature-related risks, impacts, and opportunities for financial portfolios. This is a genuine opportunity to lead by example as Korea's first financial institution with leadership extending well beyond Korea. I wish you a rich and fruitful discussions. Thank you.
Thank you to Ms. Nueva for her thoughtful remarks, and we hope to be able to host you in Seoul soon. At this time, I would like to introduce our second message from Ms. Andrea Meza Murillo, Deputy Executive Secretary of the UNCCD and Minister of Environment and Energy in Costa Rica. Please share Ms. Murillo's message at this time.
Your Excellencies, distinguished guests, dear colleagues, As you well know, land resources, soil, water, and biodiversity provide the foundation for the wealth and well-being of our societies and economies. They provide the food, water, fuel, and other raw materials to meet the growing needs and the desires that shape our livelihoods and lifestyles. However, the way we currently manage and use these natural resources is threatening the health and continued survival of many species on Earth, including our own. The second edition of the Global Land Outlook shows that up to 40% of land is already degraded, affecting half of our humanity and endangering almost half of global GDP. Currently, global investments that degrade nature exceed conservation efforts by at least $600 billion each year. By 2050, the world's population will have increased to over 9 billion, with twice the current demand for agricultural products. If current trends continue, an additional land area the size of South America will be degraded by 2050 at a cost of $23 trillion to the global economy. The conversion of land for agriculture to meet the demands for food, feed, fiber, and bioenergy production is the leading driver of land use change. However, transforming the way we produce and consume has enormous potential to reverse land degradation and biodiversity loss, to mitigate climate change, to future-proof our economies and contribute to a land degradation neutral world. The involvement of the private sector is the restoration and in protection of ecosystem is key to ensuring sustainable supply chains that do not threaten the survival of future generations. The fact that you are all here participating in this conference shows that you are ready and willing to make a positive change and are committed to being a part of the solution. So what do we need to do? Nature positive investments need to triple by 2030 and keep growing. Most investment is currently coming from the public sector, and now the private sector must step up its investments as well, to finance a transformation that will allow humanity and the planet to thrive, to start moving beyond making the right noises and taking the right actions. We need to rethink productive capacities to support positive outcomes for nature that also deliver socioeconomic benefits. We must consider land and soils as an essential component of ESG standards. We need to leverage private sector expertise, innovation, solutions, and funding to achieve our sustainable development goals and ensure more sustainable production and consumption for a healthy planet and people. We need to provide for a growing class of conscious consumers that use their purchasing power to demand transparency and accountability of supply chains in the products they consume. Therefore, I would like to invite investors and businesses to join the UNCCD's Business for Land initiative. Launched at UNCCD COP15 in Abidjan, Côte d'Ivoire, the Business for Land initiative aims at bringing visibility to the commitments made by participating companies towards land degradation neutrality, both in supply chains and CSR activities. We already have commitments from Wuri Financial Group, along with several companies and foundations, including Medova, Alex Foundation, GS Retail Company, Hyundai Livard, and the World Business Council for Sustainable Development, and hope many more will join in the future. Colleagues and friends, fundamentally, land restoration is about creating opportunities and future-proofing our economies for a sustainable managed world. We must all be united for land, for nature, for climate, and for people. Thank you.
Thank you very much to Ms. Murillo, and similarly with Ms. Marema, we hope to invite you here to Korea very soon. As mentioned earlier, we have 3 distinguished guests who have joined us here offline today, and it's my pleasure to introduce our first speaker. Ms. Oh-yoon Sanjasuran is currently Director of External Affairs at the Green Climate Fund and previously served as the chairperson of the Global Water Partnership. She also served as the President of the United Nations Environment Assembly and is currently on the advisory board of a number of international organizations dedicated to sustainable development. Please join me in welcoming Ms. Oh-yoon Sanjasuran today.
Thank you so much. Ladies and gentlemen, a very good day to you all. It's a really distinct pleasure to be invited and very happy to see that the theme of today's conference, organized by the Institute of Global Economics and Woori Financial Group, is indeed on sustainable finance. How do we work together, public, private sector, civil society, every citizen, towards more sustainable future, nature, circular economy, and of course how to we fight the climate crisis as well. I represent the Green Climate Fund. It's based in Songdo, so this morning I drove from Songdo, and we there at the Green Climate Fund are very, very happy and grateful to Korea for being a global host of one of the main climate finance institutions now. GCF, Green Climate Fund, has been now working with more than 140 countries. Korea is one of the also main contributors, on top of being on the board, but also being a global host. So we are very grateful and we commend Korea for being a pioneer, a global leader, not only to announcing to achieve the carbon neutrality by 2050, but also approving a legislation which is underlying the climate neutrality goal and also supporting developing countries through, for example, hosting GCF on them to transitioning to greener, cleaner, low carbon world. As many of you probably know, in 2 days in Egypt, in Sharm el-Sheikh, thousands and thousands of participants will gather, heads of state, I understand there will be more than 100 heads of government and heads of state, negotiators, media, private sector, CEOs, civil society, representative youth, they will all gather for what we call COP, Conference of Parties for Climate Change. And this time it's COP27, although they will gather 30 years after the first climate convention was approved in 1992, and 7 years since the Paris Agreement was approved, because we all know about the historical Paris Agreement in 2015. Just before Paris Agreement was approved, also Korea decided to host or won the bid to host Green Climate Fund. So next year it will be 10 years of GCF being hosted in Korea and 7 years since our first funding proposal was approved. And now we have about $40 billion worth of mitigation, adaptation projects, programs, financially approved for 140 countries, and more than 10 billion comes from GCF funding, and the rest 30% comes from co-financiers. 1/3 of our funding actually also goes to private sector. We're very keen to work with private sector, as was mentioned previously and this morning. The needs for financing nature, circular economy, needs of financing climate is really huge. And how do we make sure that $1 of public taxpayers' money can shift and move maybe $10 of private sector money? How do we de-risk? How do we entice those investments? So those who will actually gather in Sharm el-Sheikh next week, it's of course a somber reminder of the climate crisis that the planet and humanity is facing, because there will be two perspectives. And I think it was already mentioned also this morning. On one side, the need for urgent climate action is actually more acute than ever. And nations must transition much faster from fossil fuels to retain any hope of preventing a catastrophic future on an overheated planet. We've been seeing more floods, droughts, heat waves, and wildfires. And every additional rise in global temperature increases the risks that people face around the world. And maybe I'll just show you one slide. Okay, I had one slide on climate crisis. Yes, so this one. So the probability that we may be getting to 1.5 degrees Celsius, this probability has increased dramatically in the last few years. Just maybe even a decade ago, the probability was not there, but we are seeing that the climate crisis is running faster than we are. That's what the United Nations Secretary General Antonio Guterres actually mentioned a couple of years ago. And as we've recently seen with the floods in Pakistan, vulnerable, most vulnerable, poor, and also women and children are disproportionately affected. At the same time, of course, we are seeing that the global economy is experiencing one of its deepest recessions. The post-COVID health, economic, financial challenges has been now exacerbated by volatile energy and agricultural food prices and inflation, stagflation, which has also been mentioned this morning. And of course, the Russia's war on Ukraine, leading to higher prices for oil, energy, and food, also higher transport prices, and as a result, we're seeing, the consumer price inflation everywhere. So one may say, look, of course, climate is important. At the same time, there are immediate either crises that we have to deal with, and then there are sort of more security and peace related. But at the same time, we also know that the climate change is a threat multiplier. We have clearly, David Rubenstein so clearly emphasized in his intervention during lunchtime that climate change and climate crisis is indeed a threat multiplier. We're talking about potential extinction. So this is the major risk that the world is facing, and that's also a major responsibility on all of us. There are also good news, and that is, although the global risks have been dominated in the last few years by inability to respond to climate change, natural disasters, extreme weather, and biodiversity loss, at the same time, we have seen this major momentum being built, especially in the last 24 months. Both the political will built, where the net zero race has started, and Korea, as you know, also announced the carbon neutrality by 2050 promise 2 years ago, because we've seen European countries, United States with the recent administration of Biden, Japan joined the race, and of course China announced that they will go for net zero by 2060. India, not that early, 2070, but still there is a pledge. So now total, if you look at the total pledges by 140 countries, it equals to about 90% of the global economy and 80% of total emissions. So on one side, of course, there is a hope. We're definitely seeing very much public support growing, especially from a new younger generation. But at the same time, all those pledges, the race to net zero, has to be translated into concrete actions. Last year we've seen some of the enhancement commitments at Glasgow, COP26. Next week, hopefully some expected at COP27 in Egypt. But there is a lot of also expectation from the private sector, from financial sector as well. Challenges we're facing are huge. At the same time, consider the scale of transformation that is needed to limit dangerous warming. So this major transformation could also mean major opportunities that are forthcoming. This decade, 2020 to 2030, is well known as a decade of nature and climate action. This decade is very crucial. The need to halve the emissions in this decade, halve the emissions the decade after, and then reach the net zero by 2050. On biodiversity, we've heard the Convention for Biodiversity Executive Secretary Elizabeth Mrema just before me, and reversing biodiversity loss. Also the targets on the land restoration, which Minister Andrea Metz also mentioned from UNCCD. These are really enormous tasks, but at the same time, we've been also seeing that this disruptive potential decade, not only the challenges, but also the decade that may bring innovations with technologies and these huge opportunities may show that whoever is in front of the race may also gain the meaningful progress as well. So finance, of course, is key in this transformation. Finance is key to catalyze and lead to systemic changes, and we've seen financial sector also banks, investors, financiers, asset managers, many started aligning their policies and actions with Paris Agreement, but also with sustainable development. More and more, there is a requirement that companies reflect the risks and opportunities related to climate change in their risk management and decision making. This also includes seizing, lending the companies that participate in coal projects. Investors increasingly recognize that climate risk is also an investment risk, and they want to know every firm's plan for managing those risks. There is a growing realization that risks and economic costs of climate change have been underestimated. So you may have seen World Economic Forum's top global risks report. They come out every January. And of course, the one which we expect in January 2023 may have more sort of traditional security risks like peace and interstate conflicts coming again to the top. But for the last 5-6 years, these were the major risks that, so there is a more realization that actually climate, biodiversity, nature risks are actually the global top risks as well. If I can just explain briefly how we're trying to contribute at the Green Climate Fund, developing countries to leapfrog to more sustainable and greener development pathways. So, by the way, on the left side, there is a picture. On the left top is a picture from Mongolia. I come from Mongolia, and of course, in Mongolia, for hundreds of years, our nomadic herders traditionally lived more or less in harmony with nature. They really didn't contribute too much to the climate change, and they learned how to, move from one pasture to another, let one pasture rest, and how do we keep the nature and the land clean, because this is their livelihood. But all of a sudden, in the last few decades, they see the seasons changing, they see also more pasture degradation, they see more desertification, they see glaciers melting, which means that the source of water will be less. We even see the permafrost melting in Mongolia. So without contributing too much to the climate change, all of a sudden, the nomadic herders in Mongolia, they are at loss. They don't know how to tackle, how to deal with those changes, how to adapt. So I think this is the very typical picture in many vulnerable to climate countries in the world. I already mentioned the figures for our investment with co-investment in 140 developing countries. Of course, our focus is also in least developed countries, SIDS, small island development states, African states, and also we invest at least 50% of the funding into adaptation as well. I just wanted to emphasize that just increasing the volume of climate finance into developing countries is not enough. Investments are required in different sets of assets. Best if this investment create also co-benefits for COVID recovery, for green recovery, and of course, key is innovation, not only with projects and programs. The key is also innovating policy and regulatory. How do we integrate both policies, national policy with climate and Paris Agreement? How do we capture multiple wins? Innovation in institutions, capacity building, innovation in technology, but also innovation in financial tools that we use. And one interesting maybe example, so as I mentioned, 1/3 of our funding goes to private sector. Basically what we do is we try to come up with flexible combination of not only grant and concessional loans, and of course you know about World Bank, Asian Development Bank, and various development banks and international finance institutions. Mostly it's either a small amount of grant or typical concessional loan, but for middle income countries, they're not that much highly concessional. So in our case, as long as the developing countries' investment can leapfrog to low carbon investments, we try to use a flexible combination of, whether it's guarantees, equity instruments, concessional, highly concessional debt. We can include high volume of grant as well, so that to leverage blended finance and crowd and private investment, and things like first loss equity, first loss guarantee, anchor investment is really pivotal to unlock private capital. So this flexibility enables us, flexibility of financial instruments, supported by also capacity building, project preparation facility, etc., which is supported by grant, enables the fund to pilot new financial structures and support the green market creation. We work with accredited entities, our partners, and so it is a major sort of hub of climate solutions and innovations, and we try to de-risk both private sector but also public sector to support early stage project development. So I think my time is more or less over, so there are a couple of examples of our innovative projects, but I think I will skip those. I just want to finish with one slide. Just a few hundred years ago, the population of the world was 10 times smaller, but it's not, and then of course population of the world is growing, but it's not only the sheer size of the population. The consumption per capita for every one of us sitting in this room increased tenfold compared, again, when we were agrarian hunter society, right? So if the population is 10 times bigger, and if everyone consumes 10 times more, so our Mother Earth has to sustain and absorb 100 times more consumption of the human species, basically. So I think it's very important now that I want to finish with the calling on every one of us to recognize the challenges that the planet and humanity is facing and be part of the solution. And this Anthropocene epoch, which means, our human species, we have to be very, very responsible, so not to create this havoc on this earth. So thank you very much for your attention, and it's a pleasure now. I was asked to introduce the next speaker, which is Director of the Korea Environment Institute, Ji-hye Jo. Welcome and to the stage. Thank you very much for your attention.
Good afternoon, ladies and gentlemen. My name is Joji. I'm the director of the Resource Cycle Research Department of KEI. I would like to thank the IGE and Uri Financial Group for inviting me to talk to you. And with the growing awareness of corporate sustainability around the world, ESG is drawing attention as a new paradigm of management strategy. I would like to talk about opportunities and challenges of circular economy in the ESG era. Under the linear economic structure where a large amount of products are produced and consumed and mostly discarded, a large amount of waste is inevitably generated, and as it continues to increase, various environmental and social problems arise. At the same time, significant amounts of greenhouse gases are emitted from mining and processing of natural resources used in production, consumption, and disposal of products, which has a significant impact on the climate crisis. In order to develop more sustainably in the future, it is necessary to shift from a resource consuming linear economy to a resource efficient circular economy. Here, sustainable development means growth in which input and output are balanced within the capacity of a natural ecosystem. After becoming aware about the finiteness of the Earth, globally the move to transition to a circular economy has been in full swing and since 2010. And circular economy is an economic system that decouples resource consumption and economic growth and is currently on the rise in connection with carbon neutrality. As shown in the following figure, about 45% of global greenhouse gas emissions are related to products. Although energy transition is critical to reach net zero, circular economy that emphasizes resource utilization efficiency and circularity is just as important. The circular economy is an economic system that reduces the use of resources in the overall product life cycle and extends the value and lifespan of products as much as possible through reuse and remanufacturing. In addition, it aims to establish a closed loop system by putting recycled raw materials back into the industrial process. By doing so, it's possible to reduce energy consumption for natural resource extraction and processing and contribute to reducing greenhouse gas emission from landfilling and incineration of waste. Such a low carbon circular economy system is an important means for more sustainable development. And furthermore, the circular economy can not only contribute to waste reduction and carbon neutrality, it can also help with resource security. As was mentioned by our previous speakers, in recent years, a weaponization of resources through export controls by resource holding countries has become more widespread, and competition for rare metals is accelerating due to increased adoption of e-vehicles. And the circular economy is attracting attention because it can help to replace raw materials such as natural resources and rare metals that are used in manufacturing by resource cycling and expanding the market for recycled raw materials. At the same time, new business models are created through the circular economy, which can create new added values and jobs. And accordingly, the circular economy is becoming a new opportunity as a new growth engine. And I believe that this circular economy is going to be more discussed about as well as more important. As sustainability becomes more important, corporate ESG management strategies are also becoming important. As a number of major investors around the world, including asset managers such as BlackRock, emphasizing the importance of ESG management, the beginning of the ESG era has been ushered in. As ESG management accelerates, climate change, carbon neutrality, and a circular economy are attracting attention. In particular, efforts to minimize environmental impact throughout the product life cycle and the initiatives to increase sustainability throughout the supply chain have been put in place. In addition, a supply chain management to secure low carbon and renewable raw materials is also becoming very critical. And in the future, the circular economy is positioned as a factor that must be considered in ESG management. ESG is something that is a combination of the first letters of environment, society, and governance, and refers to three key factors for achieving sustainability in corporate management. In the past, investment management decisions were mainly based on financial profitability, but now non-financial factors such as the environment are an additional key factor and are directly affecting the industry as it is linked to companies' financial performance. Against this background, not only manufacturing industries such as steel and petrochemicals, but also distribution, food, beverage, fashion, apparel, and cosmetics industries are putting ESG linked with the circular economy at the core of their corporate management. In March of this year, the SEC in the US announced the mandatory disclosure of carbon emissions for listed companies. This applies to all listed companies, and the listed companies are required to disclose climate-related financial indicators in their financial statements. In particular, previously Scope 1 and Scope 2, which are direct and indirect emissions per business unit, were targeted, but now it has been expanded to include Scope 3 as well. And as shown in the figure, Scope 3 corresponds to the carbon emission for the entire product life cycle, from raw and sub-materials of parts and equipment manufacturing to product distribution, use, and disposal. Accordingly, in the future, suppliers and subcontractors to such companies should also provide relevant carbon emissions data to manage their carbon footprint. Governments also need to provide sufficient support to help with companies' efforts to lower greenhouse gas emissions throughout the product life cycle, as well as for the data necessary for calculating carbon footprint. The transition to a circular economy is emerging as a core global agenda for the implementation of carbon neutrality and is mainstreaming into climate, industry, and trade policies. In particular, the need for circular economy policy has been raised in the EU since 2010, and the product lifecycle management is strengthened through the circular economy package of 2015. And this is an international trend. In the Green Deal announced in 2019, the circular economy is presented as a core element to achieve a carbon neutrality and a resource efficient economy. And since it is reported that up to 80% of product related environmental impacts are determined from the product design stage, sustainable product policies are strengthened. Countries such as the United States and Japan and EU are strengthening product environmental regulations in the product design phase so that products may incorporate the elements in the circular economy. In case of the EU, the Integrated Product Policy, or IPP, was announced in 2003 to minimize the environmental impact of products. The policy converted regulations at the business site level to the whole of the product cycle level. Eco-design directives in terms of energy efficiency were announced for products that use energy, and then later to all the products that are energy related. And so implementation regulations to ensure resource efficiency for 6 product families, such as refrigerators and washing machines, have been published as a circular economy package in 2015. As part of the Green Deal, a new action plan for the circular economy was presented, and in March of this year, eco design regulation proposal for sustainable product was announced. And as eco design regulations will be applied to all products except for some human and derived products, and will also be applied in all member countries, as they have now been elevated to regulations from directives. And so in all the products that we export will be the target of this regulation. And in addition, it is required to take into account durability, repairability, and presence of renewable raw materials and carbon footprint in product design. And also the content of renewable renewable raw materials will be looked at. And so this is going to be looked at from, as I said, from a scope 3 perspective. And they are going to be very important in the international trade. And as Korean companies exporting to the EU will be directly affected, it is imperative to prepare in advance. In addition, through digital product passports, information is to be provided to consumers so that consumers can make their purchase decisions for knowing the sustainability of these products in advance. To summarize, policies being pursued in the direction to have global product competitiveness only when these key considerations related to the circular economy are reflected in product design, including in products such as the batteries and electrical and electronic products. At the same time, in order to solve the problem of plastics, which has become an international issue, the UN Environment General Assembly agreed to prepare an international agreement on the plastics life cycle with binding force by 2024, thereby establishing a plastic circular economy system on the international stage. And implementation reinforcement is currently in full swing. And according to the Secretariat for the first INC, more emphasis will be placed on monitoring methodologies related to plastic pollution, a circular economic approach, and measures related to sustainable consumption and production. And for reference, today's conference host, Woody Financial Group, has been invited to participate in the multi-stakeholder forum of the INC's one meeting for the establishment of plastics agreement to be held in Uruguay in December of this year. It is expected that international cooperation in connection with the circular economy will further be strengthened in the future. And so for the management plastics, a key item in the circular economy, it is necessary to strengthen the life cycle value chain in the product service area and prepare a plastic circular economy strategy and roadmap that comprehensively consider not only land-based plastics but also marine microplastics and hazardous chemicals, which do have direct impact on the health of the people. In Korea, too, policies to transition to a circular economy are being implemented in earnest. In particular, in addition to 2050 carbon neutrality strategy announced in 2020, the legal basis currently being laid, such as the Circular Economy and Social Transformation Promotion Act. And the Korean New Deal also incorporates this. And the by 2050, what sort of circular economy policies will we have? Well, those policies have now been clearly, the need for those policies have been identified. Now we're laying the foundation for the circular economy. And the act, or the bill, excuse me, is currently pending in the National Assembly. In the future, 5 strategies to reduce the carbon footprint over the entire resource cycle and to secure a competitiveness as a circular economy innovative industry, and at the same time to create a more sustainable circular economy ecosystem will be implemented. It is necessary to allow companies to lead a sustainable product design efforts and to build a consumer culture that the people can relate to and promote more environmentally friendly recycling. And I believe the government support in this overall process is very important. And consumption needs to be linked to production. And so we need to have a new, as I said, a consumer culture. And at the same time, in order to be established as an economic system, an innovative circular economy model in connection with industry trade and financial policies will have to be built. And active support in terms of policy and technology, finance, and infrastructure will also have to be provided. And so that companies that engage in circular economy activities can gain edge. So we do also have to have scientific and very quantified numbers. and also these in order for this circular economy to be adopted at local levels, a system has to be put in place so that even cities which are resource intensive spaces can truly become circular cities. And these circular economic policies, well, here in Korea, to this end, it is necessary to establish a system that allows implementation of this circular economy more widely, and for those implementations to be fed back into policy through monitoring. And there should also be better material management and reinforcement of circulation and throughout the entire resource cycle. And of course, we would need to develop the indicators and the indexes that we can use in order to do more close monitoring. And that is something that I wanted to emphasize from this slide page. Now, I would like to talk about the work we need to do going forward. And first, we need to expand the market for renewable raw materials by using raw materials that consider resource circulation. There needs to be incentives to drive a sustainable product design, and these products need to be made competitive in the market. We do have many different reuse or recycle related technologies. However, we need to define the concept of renewable raw materials first. And we also need to have quality standards for such renewable raw materials. So the standards have to be developed. And related to a product development, well, there's going to be an introduction of the resource efficiency ratings system that consumers, and with this, consumers will be given a choice as they can assess the durability, renewable raw material content, and remanufacturability in product design in the future. In order to induce eco-friendly design, it is necessary to establish a resource efficiency rating system based on which consumers can easily recognize these products, and products with high ratings need to be given eco labels or public procurement opportunities. And related to green, in order to prevent greenwashing, we also need to have necessary regulations and laws in place. And about the reuse of the products on multiple cases. So we need to vitalize so-called remanufacturing and upcycling industries. And we also need to revitalize so-called urban oil fields to replace petroleum-based naphtha. And through pyrolysis of plastics, as well as the recycling of the materials which were previously called urban minings. And going back to the remanufacturing and upcycling, I want to emphasizing safety. For instance, batteries. But in order to be able to reuse the batteries, we need to have criteria related to safety. And this is related to resource security. We should be able to identify essential raw materials that or the reused raw materials. And I previously talked about the urban oil fields. This is related to the used batteries, and those used batteries used to be a landfill or incinerated. However, we need to find ways for these batteries or other types of batteries to be reused in the industries. Now, there are many, of course, challenges that we need to deal with. You know, how we're going to secure the space that we need, as well as how we're going to be able to supply the necessary equipment and infrastructure. And in particular, for the future waste resources that will be disposed of in large quantities in the not too distant future, such as batteries and photovoltaic panels, well, we need to establish a stronger recovery and recycling system in advance. And now we are just mostly talking about the batteries for the vehicles, but we also need to think about the batteries that are used for other purposes. And we need to establish a stronger recovery and recycling system in advance to provide support so that the recovered energy can be reused from a carbon neutral perspective. And what sort of industrial support can we provide? What sort of policy support can we expect? And for the companies to respond to reducing of carbon footprints, we do need a globally interoperable or globally compatible certification. So that we do need LCI-based databases, which is difficult for us, individual company to build. And there also need to be support for new services as well as new technologies. And so, in addition, new technologies and services are necessary for process improvement and the circular economy need to be designed as new growth driving technologies under the restriction of Special Taxation Act, and tax support benefits should also be granted. And above all, a methodology for estimating emission reductions according to these circular economic activities should be developed so that the resulting reduction in greenhouse gas emissions can be recognized. And also, the financial support is needed. So we do need to have a clear investment criteria by which the financial institutions make their decisions to invest in the companies. And business models related to the circular economy must also be developed. And so we do need, as I said, regulation exclusion criteria for the companies in the circular economy. And I want to emphasize the importance of data. And all this data need to be controlled in an integrated manner. So, as I said, product life cycle data management is critical, and because of that, we do need a platform to be able to do this. And SMEs, it would be quite difficult to be able to do this sort of data management or a system of management. They would definitely need a support from the government as well as the financial institutions. And not here talking about just the technical support, but also financial as well as advisory support. As you can see, a circular economy has a multi-departmental or the multi-ministerial relationship. And so it is important to strengthen the governance of circular economy across ministries and build a cooperative system. At the same time, it is necessary to further strengthen international cooperation related to circular economy, such as the Global Circular Economy Federation, the Plastics Agreement, and the Marine Environment Summit, and to actively participate in international discussions focusing on standards and labeling related to the implementation of the circular economy. And in order to realize a circular economy in the future, systematic structural changes and transformational innovations in society are essential, and collaboration and efforts from all of us are required. I want to thank you uh, for providing a forum for sharing and discussing circular economy policies today. I want to introduce our next presenter. And And the next presentation is going to be from Uri Financial Group, which has recently been producing internationally recognized results in various environmental fields. I would like to introduce Park Jong-il, the Vice President of Uri Financial Group.
Ladies and gentlemen, good afternoon. As introduced, my name is Park Jong-il and I'm in charge of ESG at Uri Financial Group. Here you'll see the slogan, Good Finance for the Next. This is our ESG vision. Now let me walk you through the efforts that we have made at Uri Financial Group over the past 2 years to build a brighter future through finance. Do you see the forest here? It's beautiful, isn't it? Well, I go on a walk every morning. So, naturally, the first thing I do after waking up is checking the weather. I pay special attention to fine dust levels, whether it's good, normal, or bad. A clear, sunny day always gets me more excited for my morning walks. According to surveys, the climate satisfaction level of people in Korea regarding fine dust is merely 4%. Atmosphere and air pollution would probably be a better way to put it. Fine dust, much like the massive floods and wildfire, is a devastating natural disaster. Then let's take a moment to think about these natural disasters and the consequences of these crises and disasters. I don't need to remind you that severe floods, droughts, and wildfires are occurring more frequently at an alarmingly large scale. Climate change gives rise to disease, food shortage, detriments to livelihoods, and devastations to nature. Climate change knows no borders. It's a universal phenomenon, and as a result, migration, refugees, armed conflict, state bankruptcies, and protectionism occur compounded together to reach extremes. Let me elaborate on the disasters caused by climate crisis. Desolation makes it uninhabitable for both plants and animals above and underground. This hampers ecosystem services and results in loss of biodiversity. This ultimately feeds back into our system to harm mankind and societies as a whole, ultimately making it worse for every single one of us. Deeply interconnected and affecting each other like a never ending boomerang. That is why we at Uri Financial Group focuses not only on its core mandate as a financial institution, but also on building a brighter future through climate action, underpinned by four main values. First, climate action. Second, biodiversity conservation. Third, building a circular economy. And fourth, last but not least, freshwater and marine protection. These are our core main four values. Now let's take a closer look at our initiatives for a better world. First, let me touch upon global environmental initiatives and the ESG assessment results. MSCI Chairman Henry Fernandez is here with us today, and we got an AA rating from MSCI, which is 2 levels above from what it was a year ago. And we expect to get even higher grades by the end of this year. You'll see the word first appearing a lot at the upper right hand corner of this slide. Since joining TCFD, Uri Financial Group has been an active member, and not to mention the first in Korea to join global initiatives such as TNFD, B4L, PBAF, and the East West Trail. Why? Because, as we've heard today, carbon reduction and environmental protection are not initiatives that you can go solo in achieving. UN and other international organizations and groups' solidarity and cooperation is key to achieve the common goal of nature positive and nature recovery. Cooperation with stakeholders from both home and abroad are undergirded largely by the 3 UN international conventions. The UN conventions, again, climate change, biodiversity, and deforestation. As you can see here, our activities are in partnership with international groups such as the UNFCCC, UNEP-FI, UNCCD, IUCN, and WWF. And now allow me to share with you a short video clip about the feasibility study on Cambodia's REDD Plus on climate action. Did you enjoy the video? Well, let me tell you about an anecdote that an employee that went to Cambodia told me. Did you know that lung cancer onset rates among females in Cambodia are exceptionally high? In rural Cambodia, firewood is the main fuel used for cooking, and the smoke from burning that wood is what causes these exceptionally high rates of lung cancer. Through the Cambodia REDD Plus project, we aim to facilitate a transition towards using livestock excretion to produce gas that can be used to heat stoves. This will not only help conserve forests, but also improve the quality of lives of women in Cambodia. Our goal is to reduce greenhouse gas emissions, conserve biodiversity, improve the quality of lives of people living in rural areas of Cambodia through Red Plus. We have a branch in Cambodia where we have a network of 140 or so partners, and we will be working with the Cambodian government beginning next year to implement this project with AFOCO, or the Asian Forest Cooperation Organization. Next, I would like to introduce to you our 4 areas of activities regarding biodiversity conservation and nature recovery. TNFD B4L Initiative, East West Trail, and Global Diversity Framework Building. Let's take a closer look at these 4 areas of activities. First is our TNFD activities. We've heard about TNFD from other speakers. TNFD is about nature-related financial information disclosure. To put simply, TCFD is about the climate, TNFD is about the nature. Uri Financial Group became the first Korean company to join the initiative, and other companies are following suit. Upon a request from UNEP-FI, we are conducting a pilot test on two sectors: offshore wind and forestry, where the TNFD framework will be applied. Next is our B4L initiatives. In May, during the first part of the Conference of Parties 15 of the UN Convention on Biological Diversity, our chairman and CEO made three commitments. The first, building an international forest. The second, pursuing RED Plus in developing countries. And third, youth environmental education. Next year, we have numerous global initiatives in the pipeline to cooperate and coordinate in partnership and solidarity with the private sector. Next, we are also supporting the East-West project, which will be the Camino de Santiago of Korea, which spans 849 kilometers. This project aims to lay a large-scale, nationwide forest trail that begins at the eastern end of the Korean peninsula in Ulsan and connects to Anmyeondo Island in Taean at the western tip. We will be in charge of 16 kilometers of this trail, and next year we will conduct our pilot projects. Once finished, the trail will underscore the importance of nature and become a global landmark. And once the total of 849 kilometers are finished, people will flock from all over the world to enjoy this East West Trail. Last but not least, let me share with you our initiatives geared towards building a sustainable society in which the environment and humanity live in harmony. First is, as Dr. Cho talked about, the transition towards a circular economy and society. Plastic pollution in the land and sea have devastating impacts that have direct bearing on our daily lives as humanity. Uri Financial Group, in collaboration with UNEP-FI and joined by 16 financial institutions, is participating in a circular economy working group. Next year, at the invitation from the international community, we will be representing the private sector in formulating the UN Convention Against Plastics. Now, Dr. Cho touched upon this as well, but to elaborate on the transition towards a circular economy, achieving a circular economy is also aligned with strengthening resource security, achieving carbon neutrality by harnessing EVs and ESS technology requires multiple times the current level of mineral resources. We must guard against the weaponization of resource among countries. Thermal pyrolysis that melts plastics and other wastes are needed among other renewable energy alternatives. Active investments must be made in promising sectors backed by ESG management strategies, which is what Uri Financial Group plans to do in our efforts to spearhead a circular economy and society. What you're seeing here is 20,000 or so students from 35 elementary schools collecting plastics. Students made their own collection bins, and the detergent containers and dispensers and toothbrushes that were gathered one by one ended up totaling 1 ton in waste that was collected. Students also made their own gardens using 125 flower pots made from upcycling this waste. The result was absolutely beautiful. This was a precious moment that our children participated in to help build a better world. In August, we hosted a conference with the World Wildlife Fund, or WWF, to engage in discussions with various stakeholders on the importance on a circular economy. As I said in the beginning of my presentation, our ESG vision is embodied in our slogan to build a brighter, better world through finance. Good finance for the next. The role of finance is critical as our consumers and investors, funds, create new opportunities for people and companies across the world. Finance, in the end, exists to enhance quality and value of our customers' lives and to strengthen corporate competitiveness. In the years to come, our vision is to build a better world with our partners. By expanding support for green finance and renewable energy, by bolstering support for vulnerable populations, Uri Financial Group will do its part to the fullest in creating opportunities for a sustainable society. Uri Financial Group will continue to work ceaselessly and tirelessly. Let me go back a slide. Sorry about that. Well, this was actually a slide I wanted to show you. So, we talked about our one and only Earth a lot today. But let me close by talking about how we see Earth from space. In the 1960s, in the US drama Star Trek, Captain James Kirk was, as you remember, played by William Shatner. And last year, he traveled to space and said that I saw death, darkness, emptiness, and sadness in space. I realized beauty lies none other than here on Earth. I hope this serves as an opportunity to really take in and remind ourselves of the beauty and value of Earth. So, to close, moving forward, Wuri Financial Group will work ceaselessly and tirelessly to create a better future and brighter world. As the starting point of our promise and commitment, we have prepared eco friendly pencils made out of used coffee grounds. We hope that you take this as a token of our gratitude and our promise to build a brighter future. Thank you for listening.
Thank you very much to all of our distinguished guests for sharing with us about ESG success strategies for nature recovery, circular economy, and supporting the climate vulnerable. Before we move on to our fourth and final session for today, I want to remind those who are joining us offline of a very special event that was announced earlier on Uri Financial Group's website. So from now until the end of session 4, if you upload a picture of this conference on Instagram, you'll be able to receive a special eco-friendly travel kit and a signed photo card by K-pop icon IU as you leave today's conference. We look forward to your participation, and we will have a quick break of about 10 minutes before returning back for our final session. Thank you very much. 자리에 착석하여 주시다.
Please take your seats so that we may begin.
Okay, thank you very much. We hope you enjoyed the break and that you're ready for the fourth and final session of today's Ige-Wfg International Conference. Before we get started with the fourth session, I would like to share a special congratulatory message from K-pop star IU herself, so please join me in viewing her message.
안녕하세요. 우리금융그룹 모델 아이유입니다. 우리금융그룹의 국제 컨퍼런스 개최를 진심으로 축하드립니다. 지금 이 자리에 더 나은 세상을 만들기 위해 노력하시는 많은 분들이 참석하셨다고 들었는데요. 모두 유익한 시간 보내고 계시길 바랍니다. 곧이어 피날레인 이 세션은 더 나은 세상을 위한 MZ세대의 참여와 재현입니다. 저 또한 이런 뜻깊은 자리에 함께할 수 있어 매우 기쁜데요. 지금부터 더 나은 세상을 위해 적극적으로 활동 중인 젊은 환경혁신가 분들의 목소리를 들어보겠습니다.
Thank you very much, and we hope to invite you to the stage sometime very soon. So our fourth and final session for today is entitled MZ Generation's Recommendations for a Better World, Improving the Quality of Life of Future Generations and the Vulnerable. I would like to invite sisters Amy and Ella Meek back to our stage. As you know, they are youth environmental activists based in the UK and established Kids Against Plastic, a non-profit organization aimed at protecting the environment by reducing the use of plastic. We're thrilled to have Amy and Ella start us off for our fourth and final session. I'll leave the mic to you.
Hello everyone, hello again should I say. It's great to be here again speaking to you all. My name's Amy.
I'm Ella.
And we are the co-founders, as you've heard, of the environmental charity Kids Against Plastic. Now, we are thrilled to be part of the final session today, and a session that is really important and focused on the MZ generation's views on environmental change and really building the better future and world that we'd all like to see. Now, to start this session, each of the speakers are going to give a short presentation on the work that they're already doing to try and build a better future in a variety of different ways, before we move into a panel discussion and finally have a chance to ask questions at the end. So to get started, I'd just like to say it's a privilege to be up here speaking to you all again, and as people who have an interest in sustainability problems, but also a real power to help address them. And to have the opportunity to be here speaking about our work alongside other young people, and for our generation's actions and opinions to be the topic of a whole discussion on the global stage is incredibly exciting, and an opportunity that we would never have imagined when we first began our charity.
Our journey started back in 2016 when we were just 10 and 12 years old, and we started studying the United Nations Sustainable Development Goals. And when we were studying these goals, there was a problem that stuck out to us in particular, and that was plastic pollution.
We came across facts that really shocked and upset us, like the fact that 100,000 sea mammals and 1 million seabirds are killed by plastic in the ocean every year. We learned that a truck's worth of plastic enters the oceans every single minute, and that by 2050, there'll be more plastic in the oceans than fish. We heard crazy statistics about the scale of the plastic waste crisis. How there are approximately 51 trillion microscopic pieces of plastic in the oceans, weighing 269,000 tons. That's as much as 1,345 blue whales. And these pieces of plastic are making their way into the food that we eat, the water that we drink, even the air that we breathe. Plastics that are full of chemicals associated with conditions like cancer, infertility, and autism. We also now know that there are more and more links that are being found between climate change and plastic pollution, with 99% of plastic's raw material being oil, and the extraction of oil and gas that's used to make plastic releasing large amounts of CO2 and greenhouse gases. But also some waste management systems that release toxic chemicals such as dioxins into the atmosphere and into our soil and the air that we breathe because of plastic pollution. Now, the scale of the plastic waste crisis, I think from those facts, is clear to see that it's scary to say the least. And back in 2016, when we discovered this issue, we were shocked that nowhere near enough action was taking place to try and stop this issue from getting any worse. So we decided that we wanted to do something about it. So that's what we did. We began our then tiny campaign called Kids Against Plastic, which has now grown into an award-winning environmental charity. We started really small with litter picking, but we realized very quickly that if we were to pick up litter, it would be replaced by more litter even as soon as the next day. And that's when we realized that we were only going to see less litter polluted in the environment if we cut plastic waste from the source. And that means all of us. This was when we began our Plastic Clever initiative. Now, the idea of Plastic Clever is to encourage people to be more discerning users of single-use plastic, and in particular to stop buying and using their top 4 most used single-use plastic items. Now, these items can often be so simple to avoid through the use of non-plastic alternatives, or ideally, the use of reusable items instead. Plastic Clever is so simple and achievable that it can be applied to all sectors, and that's exactly why we work with families, businesses, festivals, councils, schools, and more to try and help them reduce their plastic usage. But we have a particular focus on our schools initiative at the moment, which aims to help schools reduce their use of plastic and eliminate their top 4 plastic items in some simple ways. So many schools around the world are already doing incredible work to spread environmental education and action, such as the Irwell Elementary School here in Seoul, which we had the pleasure of visiting earlier this week during our trip here. Environmental education can and should be accessible to young people around the world, and yet in many countries, including our own, climate education is sidelined and forgotten. Through Plastic Clever Schools, we're really hoping to change that. And we do our best to support schools around the world to get started with integrating education on plastics into their curriculum. We're really excited to have over 1,500 schools already signed up to the scheme around the world so far, engaging over 450,000 young people and counting in environmental action from a young age. We're really passionate about working with and inspiring young people through our charity. After all, it's in the name, Kids Against Plastic. And often kids are deemed too inexperienced or young to care about these issues facing our planet, but they really hold an untapped power to be a crucial part of solutions in environmental crises that we're facing. And that's exactly why we also run our Kids Against Plastic Club, which is a group of over 240 young people from over 10 different countries all over the world to try and help facilitate their own action against plastic pollution. The kids that are part of the club are a range of ages, from 5 up to 14 years old, and they all share the same passion and enthusiasm and the belief that they can make a difference, and that being young is not a barrier for taking action, and actually far from it. They show that you don't need to have a certain type of background or previous knowledge or to be a certain age to make a difference against these issues. Just have the willingness to speak up about something that you're passionate about. And that doesn't just apply to young people. We all, every single one of us in this room, have a vitally important role to play in ensuring that we see the action that desperately needs to take place to preserve people and the planet. And everyone here is in a position to make that change happen because we all have a connection to the very thing that underpins and is impacted by the crises affecting our planet, the natural world. And that's exactly why Kids Against Plastic aims to connect us all in this issue, no matter our ages or our jobs or our nationalities. Kids Against Plastic might be based in the UK, but your action doesn't have to be. We can all have a role in combating the issues like plastic pollution that we're facing. And we're here to help with our schools initiatives freely accessible online with 5 translations and counting. And there's access to get involved in our youth campaigns and a litter logging app that anyone in this room can use to log their litter pics. But most importantly, remember that sustainable thinking around plastic waste and climate change is something that we can take with us into all of our lives. The changes that we make really do make a difference, even if it's just through a few hundred less coffee cups being used each year because just one person in this room decided to make the small switch to use a reusable mug. But even better, we can take that thinking into all areas of our lives. The business decisions made on a daily basis that have the potential to have a huge impact on the planet and its people. Climate change, plastic pollution, these aren't new problems, but previous generations have failed to acknowledge and address them with the urgency that they require. And that means that for us, we have an important role to play. Thank you, and over to you, Vrico.
The sharing by Amy and Ella. That's very inspiring. So I would like to take this opportunity to introduce myself and share my story from Hong Kong. So I'm from Hong Kong, and of course, Hong Kong is known for being a financial hub and a coastline that's filled with skyscrapers. But I think what's more interesting for me is what's below water. I'm an active diver, and I got my diving license in Hong Kong, which you might be surprised because it's usually turbid water, but there's a lot of marine life in there. This photo was taken in one of my favorite sites, in Sai Kung Shop Island. As you can see, there's like a massive Pafona bat, the coral community there, and the camera that I'm holding is actually for me to catch the Pokemon in the water. And these are the Pokemons. So in Hong Kong, we actually have more than 25% of the China's recorded marine species. And all of these are dependent on coral reefs. And this is a global statistic. So everywhere, whenever, like for every ocean, all 25% of the marine life are dependent on the coral reefs. I really enjoy diving in Hong Kong, although it might be a surprise for you. But one of my most traumatic diving experience, was also in Hong Kong. This is a photo taken in 2014. And it was, as you can see, these are almost like, I call it a wall of remnants of post-wall. It's a bunch of coral communities, and this is some of the most fragile coral species that's called brain coral. It's heavily eroded, heavily degraded, and I've seen the disappearance of a small communities just within 2 months. I am a science student, and I've always believed in climate change, but I have never expected that I would witness the impact of climate change first person. So that got me to think about if there's anything that I can do. And what we're seeing in Hong Kong is not just a local issue, it's a global issue. In fact, we have already lost 50% of the world's coral cover since 1950. And scientists have already proven that if there's nothing changes, if we're going business as usual, we will lose up to 90% by 2050. These would impact in a number of areas. Because this is a financial group, I'll put on the price tag here, just so we can have an idea. The 36 billion reef tourism industry will disappear along with the reefs. the fishing industry that feeds 1.2 billion of people around the world is gonna collapse and suffer with the loss of biodiversity. The coastal communities will suffer from the likes of tsunami, and the cost of rebuilding that infrastructures out there protecting the community would cost more than $270 billion. So when I saw all that statistics almost 10 years ago, I felt like I wanted to do something. And that was how I first started, and Amy and Ali would be like, oh, plastics. But that's how I started. That's the first attempt when I first want to build coral communities. Obviously, back then you can see that I have very limited resources and knowledge. And with 4 years of failing, trial and error, we figure out that we need an innovation that can help us to mitigate climate change and also accelerate coral reef recovery. 8 years ago, I started researching on coral restoration specifically as part of my PhD degree. And we co-created the world's first 3D printed reef tiles made in clay. How it works? You can see that the structures here consist of 3 layers. And what's special is about the top layers, where we incorporate algorithm so that we source the local data, biological and environmental data, feed into the algorithm, and then the algorithm creates the most customized design for the local coral species to tackle their local challenges. Very fortunately, this year, the product itself got a Gold Geneva Award and also the Sustainable Award called Energy Globe in Austria. And this is how it looks like in the water. We deployed the first product 2 years ago and in Hong Kong, backed by the Hong Kong government. As you can tell, like the background is an underwater desert. And what we do is basically renovating the seafloor so that it became a livable and hospitable substrate for coral to regrow. 12 months later, this is the result. If you can see the structures behind it, it's basically the little buildings for little mini hotels for our marine life, our guests. And as you can see, it's not just that the tiles are seeded with corals and oysters, but in the middle you see a cuttlefish. I know that it's a she because at this moment of time, the moment that we're taking the photo here, she was laying eggs, generating her future generation right under the reef tiles. I started doing this, converting a research project into a commercial product 2 years ago. We started in Hong Kong, and this year we're expanding to the UAE, being backed by ADQ, one of the largest sovereign wealth fund in the UAE. However, while our story are being featured on Bloomberg, Forbes, CNN. If you want to know more about us, please have a look. But while we enjoy the public recognition, there are thousands of square kilometers of coral reefs that need to be restored. And this morning, when Dr. Senda asked how optimistic we are in accelerating and combating climate change, I was sitting on the floor doing this in the middle when she asked who is pessimistic and who is optimistic. As a scientist, looking at the numbers, I know that practically we are facing a very challenging time, and it is very aggressive. The goals that we set there is very aggressive. It is possible because we have the right technology. And from what I'm hearing today at this event, I know that we are on the right direction. I know that we have right frameworks to make the change. But still, it needs public buy-in, and we need to act faster. Quoting Jiyoung's sharing earlier today is that this generation is likely to be the last generations that will be able to make a positive climate reverse before we hit the tipping point. So this will be the end of my presentation, but here I would like to pledge a more aggressive call, and please join us in reversing the impact of climate change. Thank you. So, thank you. So the next speaker, as quoted, will be heading over to Ji Young, the president of Ige-Wfg. Over to you, Ji Young.
Thank you, Brico. for your precious word. This is Ji Yoon Kim. I'm a president of Green Environment Youth Korea. So we are first, it's a global climate change youth organization in Korea. And when it started, there were 3 people, and now we have around 60 members, and we all have the different jobs and different backgrounds. Everyone is a part-timer activist. So I'm, including myself, I'm also working in a private financial institution in my in daily life. So I would like to rephrase the sentence again. So we are thinking that it is important for young people to have awareness on climate change because we are the one who mostly affected by the climate change in whole life. So we need to speak out and demand the climate justice. So we focus on dealing with climate change in a more trendy and fun way. So so other youth can join our movement. So next slides are showing the activities we've done. So we try to make it fun as much possible. So we went to the music festival and running a booth. Also, we running a street booth on Sinchon area as a like marine debris and trash. And also, plugging is quite famous in these days, but we started in 2020 with the running crew. So they are teaching us how to running, and also we are teaching them how to throw the trash. And also we made a publication, and also we are doing the urban farming, also hosting the climate rally or climate march. We are using the power of the media, running several Instagram accounts. And also we are issuing the newsletter every week. So we are translating the famous news like media like BBC, Bloomberg, and other um, news press. And also we had a clubhouse. And every year we are also attending the COP conference of party. So we are hosting side event at Korea Pavilion, and every year we are inviting other Asian youth to have a dialogue on specific topics. So this year will be methane pledge. And also we are making diverse movement. So we try to painting on the street and also bicycle marching. So we are trying to raise awareness as much possible. So it started in 2014, as I mentioned. And after doing this kind of activities for several years, we feel like um, even though we're trying to make a lot of effort in my daily life, but still in my daily life, I still get unwanted garbage, and also couldn't do the boycotting the bank investing core, cannot use the electricity wholly generated by the renewable energy. Also, the EV is still expensive, and there wasn't even an option for individual. So we decided to join the Seoul Youth Policy Network, and we are start to proposing the policy to the Seoul city. So we are making several proposals every year, even though the shoot rate is quite low, but at least 1 or 2 is actually passed. And one of the biggest our accomplishment is this one. So this is ordinance revision for Seoul City designated banks. I'm sure pretty much of everyone is unfamiliar with this term and concept. So this is simply saying the city designate 1 or 2 bank to running and managing their money for their convenience. So it gives a lot of advantage to the commercial banks. So it's very competitive, and I'm sure the URI group was also like designated bank last term. So every 4 years there are selections process, and we suggest the financial department of Seoul City to give extra point to the bank that declare the divestment and invest in the renewable energies. At that time, none of commercial bank in Korea declared the divestment, but in Glover, there are many financial institutions actually made a declare the divestment. So it was the 2019, and Seoul city officials rejected to review this proposal because they said it's related to climate change and environment, not the financial sector. So we hosted the public forum. That's the picture of that. So we invited the Seoul city officials, financial experts, civil society, and youth to emphasize if the bank keeps investing the fossil fuel, it's threatening the financial solvency since the global trend is divestment from the core and it will be the stranded asset. So after forum, I had a chance to, this is the anyway the documentation I proposed to the Seoul, and I had a chance to have a talk with the former mayor of Seoul, Mr. Park. So I told him that if the Seoul wanna take the initiative for the climate change policy, you should take this proposal. And he actually gave me a positive answer. And next year, when Seoul declared the Seoul Green New Deal, it's actually included in a small part of it. But the right next day of the release of this plan, he's disappeared. And so the mayor was vacancy for a long time, and it seems like this proposal goes nothing. So we decided to find another way to make this amendment become true. So we found a councilwoman who is interested in this proposal, and we started working with her. And finally, 2021, May 4th, it's right before the Children's Day in Korea, the amendment is passed. So right now, the Seoul designated bank, when they are selecting the designated bank, they had to consider this extra point. So what I want to say is the policy is not just subsidizing or granting the money, but sometimes like this, it doesn't need extra money. And also this policy could give signal to the financial institution, a clear guide that we have to deal with the sustainable finance and try to make change the flow of the money. Because of the time constraint, I will end up my words here, but I will answer more questions when we have the Q&A session. Thank you. And I would like to invite next speaker, Federico, Platinum Capital.
Thank you, Yeyun, for your insightful remarks. So let me tell you a story. I'm Federico Perez, the founder and CEO at Platinum Capital. I come from Medellin, Colombia. And I started this company after working in a venture capital fund in Israel. And I came back to Colombia and I decided to scale the country's commodity export potential. It went well, but I was troubled by the business as usual extractive practices at the expense of the local communities. So I took action and turned it into an opportunity to integrate underserved communities into global value chains. Here, the coffee industry was ripe for disruption, and we impacted thousands of families, but this was not enough to move the needle. There are still millions of indigenous, Afro-Colombian, and peasants living in precarious conditions. With no other economic alternative, they turn to unsustainable production practices that lead to deforestation and ecosystem degradation at an alarming pace. And this threats local biodiversity. A threat in Colombia, the second most biodiverse country on Earth. The country that has over 41% of its landmass covered by the Amazon rainforest. And this is even more imperative because the Amazon rainforest has the highest potential of forest loss globally. If these trends remain unchecked, the impacts on communities, the natural capital stocks, and the future health of ecosystems could be severe. Moreover, climate change could further induce the internal displacement of people, increasing the risk of conflicts. And as some of you may know, Colombia already suffered from internal conflicts that led to the internal displacement of 8 million people. Fortunately, there was a peace agreement and things are getting better, so these communities are going back to their lands, and the government is even awarding them millions of hectares. The great challenge is how we can leverage these land grants if the public resources are limited and the private investment is scarce. Therefore, I turn into nature-based solutions and its potential because there is this socio-economic shock and the high rate of emissions present an opportunity to reduce emissions through these nature-based solution actions. We see that nature-based solutions can provide from 30 to 37% of the emissions reduction needed by 2030. That's why at Platinum Capital, we are streamlining the complexities of these nature-based projects. We do this through a platform harnessing remote sensing technology like geospatial imaging. Over here, we bring together the different stakeholders like carbon credit buyers, investors, corporations, local communities, and other land stewards. Therefore, we leverage the carbon economy to finance agroforestry and ecosystem restoration. Our goal is to restore nature on a large scale with integrity and at the speed that the climate crisis demands. But this is not viable, or it's not possible in the long term if these projects are not commercially viable. So that's why I turn into my theory of change. If we properly value nature, then we can mobilize a large scale of private capital towards the nature sector. Therefore, enabling information and market accessibility, sizable transactions, technical capacities, and an attractive risk-return profile. Below, you can see the different stages where you have to go through this nature project. And above, you can find the user interface where you can select a polygon and start planning your nature-based project. And as you know, nature is a complex system, and I cannot do this by myself. So urgent collaboration is needed in order to address the investment needs and the systemic barriers. For example, on financing, nature-based solutions have the largest proportional investment gap across all climate sectors. This portends not only a critical need, but also a great investment opportunity. So far, we partnered with the Westerville Foundation, the US Department of State, IUCN, and other organizations. I just want to end by emphasizing that the actions we take and the decisions we make in the next 10 years will determine whether nature, society, and the economy will break down or break through. Thank you.
Thank you so much to all of the speakers. And if you'd like to join us all on stage so we can have our panel discussion now as well. Amazing. Thank you very much. And I'd just like to start really by saying just a thank you for all your wonderful presentations, and it's so incredible to hear the hugely important work that everyone on this stage is doing to have such an impact on the really pressing environmental issues that are facing our planet, but also really showcase the role that the MZ generation really has to play in really providing the solutions to these issues that we really need to see. And I think we're lucky now that we get to kind of pick your brains a bit more to find out more about what drives you and about what your projects do. And I'd like to start really by asking each of you whether you think that being a youth change maker has really impacted you or helped you or challenged you in your really diverse journeys to making change happen? And what do you see the role or importance of the future generation being in climate conversations? And perhaps if we'll start with you, Ella, and then we'll go down the line.
Okay, yeah, sure. So I think obviously being here today at a conference where we get a whole section on being able to talk about this perspective of young people does show that we are all pretty lucky to have a voice as young people. Because I think a large frustration that young people can feel is that they aren't listened to and are dismissed by the older generations. So I think obviously we have it pretty lucky to have these opportunities and speak here today. So I'd say our journey being young hasn't really impacted what we do and the challenges that we face. So we're very lucky for that. But I would say that young people do have a massive role to play and should be listened to, and their voices should be valued so much, especially in such pressing times like we have nowadays, just because I think young people feel the passion for these problems, but with a different urgency than adults feel them with, because as it's been a theme in this section where people were speaking just now, and also throughout the whole day, young people are the ones who are going to be facing this problem even more when we grow up, and it is kind of down to us to really put the pressure on making this change happen now. So I'd say that's really why young people are so important to be listened to and valued, not just invited to. Often greenwashing is a massive problem for young people, being invited to speak. It seems like you're being listened to, but really it's kind of to show progression, but not really being followed through. So, yeah.
Yeah, cool. So compared to Ellie and Amy, I'm not particularly young, but I think what is interesting is that we are in an era where we have so much information out there. We have a lot of lessons learned from the previous decades, and also we are at the technology and information era that we just have a lot of informed decision to make. So I think this era for me is that I'm very lucky to have to learn from what has happened in the past and being able to foresee what's going to happen next while being able to use technology as one of the tools to mitigate, and hopefully we can guarantee a better future for our future generation as well.
I think I'm older than Rico, so I'm also working in a private company, so I can be an activist also at the same time inside the officers in the in the company. So I can see that why the government and the company is not moving, because if they are making a bold action, maybe they get a fight back from the public if public is not really wanting. So that's why youth have to raise the voice and then give them clear signal that what we want. When all the government and the company has obligation to listening their public and also customers. So when they get that complaining or like their opinion from the public, they can, when they are making the proposal, they can using that as a like a back data, like there are so many people who are complaining about this. So I think that's the main reason that we have to express ourselves. Thank you.
Yes, and from my side, I would say like every young person should see what can you do about it. Because let's say in the past weeks or months, we've seen people throwing food at art masterpieces or doing protests outside of financial institutions. That maybe might bring like an immediate impact, but in the long term, it's not really gonna make a change. So what I've done is that I turned into entrepreneurship, how we can build in different entrepreneurship skills. So, for example, when there was some protests in Colombia, I mean, I was not going to go over there and participate in that. So I just sent a cold email to the International Trade Center. I told them that I want to start a chapter to build the community in Colombia. It's basically a community that helps young entrepreneurs with resources, mentoring, financing, and other types of tools to grow their business. And that slowly started building up by just creating partnerships. And I work with the UNCTAD Youth Action Hub. I've been able to get into other programs and collaborating with the youth entrepreneurs. And as we see over here, these ladies have great projects, and that's what we have to support overall. And lastly, I would say that, like, from a cold demo, now I'm going to build an accelerator that helps young entrepreneurs. I cannot disclose yet which organization is going to fund this, but I just have to say that we should look and see how we can work towards like a value creating proposition.
Yeah, thank you so much. And I think that's a really powerful point to end on with that question is actually building the solutions, feeling like we can have an active role to play in really building the future we want to see. And I'd like to touch on that a bit more with you, Rico, about especially nature-based solutions. It was something that both yourself and Federico mentioned in your presentations. And what do you see the power of projects like Arch-Reef really being? And can you tell us more about the impacts of nature-based solutions and how they can really help to create a really nature-positive future?
So nature-based solution by itself is basically using the power of natural ecosystems to mitigate some of the environmental challenges that we are facing today. And one of the most discussed topic is about carbon recapture and carbon sequestration. And when it comes to the marine conservation side, I would say we need more metrics to other than just carbon capture and achieving carbon neutrality. Of course, it is very important, but also we're also at a stage where we should look at biodiversity crisis, which if we don't tackle it at the same time, we will be suffering from it in a foreseeable future. So I would say when it comes to nature-based solution, it all comes down to how do we measure our impact so that we can engage and inform our collaborators or buyers, adopters, to know that what their impact are they generating, and also how we're communicating the impacts that these projects have. So I would say having a more comprehensive data, not only looking at the carbon sequestration, carbon recapturing, but also the impact of enhancing biodiversity in a quantifiable way would really help accelerating the adoption and also scaling of different nature-based solutions across different geographies and different levels.
Yeah, that's fascinating. And I think, you mentioned about the data, and I think that that's played such an important role already in driving, I think, awareness and perception of the climate crisis and other environmental issues, but it's almost now about driving that and furthering that knowledge to actually put it into the solutions like the ones that you're really spearheading, which is fascinating. And I think, you mentioned about collaboration there and actually the role of this data in getting other people involved. And I'd like to kind of touch on that with you a bit more, June, just because you mentioned about the role of young generation in these issues and how we're the last generation that really have the potential to make and have to make a difference on this issue. But I know that you also speak a lot about the role of other generations to get involved in intergenerational collaboration. So could you explain a bit more about the importance of this and really how you see the younger and older generations working together effectively?
Sure. So actually, my presentation title was including the intergenerational equity. The reason why I put it on that title is I was one of the working group in Paris. So when we are seeing the Paris Agreement, the first page, the term of the intergenerational equity was actually put in there. So it's kind of legally binding right now. So we can asking them to money or capacity building for the climate crisis. But people easily misunderstood this intergenerational equity. Just future generation is asking them money and demanding a lot. But what I try to explain here is it's not just generation. It's not generational conflict. What I want to emphasize is cooperation between the generations. What I mentioned previously, that revision of ordinance, that actually had a lot of difficulty, as the officer said, this is not related to finance, and you just go to the Ministry of Environment, blah, blah, blah. So, I mean, I had a lot of difficulty. They don't want to make a change, but at the same time, there are some government officers or lawmakers actually helping us. because they are much more familiar with the system. They create the system and they know better than us. So we can leverage their knowledge and their experience. Also, they can leverage our passion on the climate change. So these days, it's easy to criticize like other generation, and I think the hateness and that exclusion is never win. So I think the cooperation is the best solution for us. Thank you.
Yeah, absolutely. And I think, you've spoken a lot there about the role of government and the important role that government has to play in policy around climate change, which obviously, completely agree. And it's so important. And to see, young people like yourself being open to collaboration, I think is so important and something that would be great to see more in climate networks. And moving away from government, I think perhaps to a business focus more, I think Federico, it'd be great to hear from you, especially since your company is all about finding the intersection between business and driving these nature-based solutions that you talked about to really build positive social and environmental change. How do you see the business landscape changing in the future to really better harness some of these values and integrate them into businesses?
Yes, so I would like to emphasize on how we have to build on partnerships. And adding to what like she was saying, I want to bring out a successful case study on how the different private entities or the conglomerates from my city work along with the public sector and the communities to bring a successful model that was replicated in many emerging markets. So this is the cable car. And actually my business or my company advisor is the one that came up with the idea. So as you know, Medellin, Colombia was in the 90s, it was one of the most dangerous cities in the world. It was besieged by the drug cartels and all sorts of violence. Nevertheless, through investment in mobility and in planting trees and education and healthcare, we were able to build the cable car to decrease the time it takes and the emissions in the city. And through that, it made a huge impact on the quality of living and the emissions of the city. And as we see right now, it's already been replicated in many of the emerging markets. So something that was used just as like a tourism mechanism, like the going up the Nassam Tower. Now it's used to help communities and people. And I do believe that it's very important to emphasize, and we should not only keep this with words or just me portraying this information. Like if you're here getting together in person, is to actually take action and build partnerships, do something together. And I think that would be my call to action in general.
Yeah, it's a great call to action. Thank you. And I think moving on to you now, Ella, I think we can fairly say the youngest person in the room here today, at 17 years old. I think it would be great to hear your perspective on touching on that business note. What more would you like to see from business or government sectors to really address the climate and biodiversity crises that we see facing the planet?
Well, I would say, like we mentioned briefly earlier, when we approach issues like plastic pollution, we need to approach them in a similar way to how we did with the coronavirus pandemic. Because there we saw this worldwide collaboration of people trying to figure out how we could stop the coronavirus pandemic from having such a massive impact and trying to find a vaccine and the best way to stop it from spreading. And I think we really need to see the same thing with plastic pollution, because plastic may not be a problem, plastic and climate change are problems that we are facing now and we are starting to see the impacts of now, but not in the same way to coronavirus, but more and more we're seeing places being impacted by floods and droughts and storms, and it is starting to impact us in our lives now. So I think we do need to see it in a similar way, with just as much danger as coronavirus in a different way though. And so I think there are some really good changes being made around the world to address climate change and plastic pollution. We're seeing bills being put in place by governments around the world and also people like the UN. And that's really valuable and it's what we need to be seeing. But I think it needs to be joined up around the world, because there are places that are managing to ban certain items of plastic from their countries, and that can be shared in other countries if we all collaborate together on this. And so I think that's something that's really important to see, and also urgency on the issue, because there are countries, so for the UK example, in England there was going to be a tax on plastics to try and that would have had a massive impact, but unfortunately the government went back on that. And so I think we need to see it with urgency to make change happen. And no, we don't have time to be going back on these decisions that would have an amazing impact, but we actually need to be doing them now as soon as possible.
Yeah, absolutely. And I think it's quite powerful to hear a few kind of common threads coming through from all of your answers. And I think urgency and also collaboration being some really key themes is something that is really great to see, and hopefully something that we can all take away from this discussion is that actually the only way that we have any chance of solving these crises, even as speaking on the younger generation's perspective here, is if we all work together and collaborate. And I think that's something that hopefully everyone in this room can really relate to when it comes to solving so many of these problems. Now, we've been speaking about the youth perspective, younger perspective, even if admittedly some of you guys are saying that you perhaps wouldn't class yourselves in that category anymore, I'm not sure, but you've been involved in youth action or in environmental action for quite a long time, and because of that, I'm sure you have some different perspectives and probably some different experiences being on the global stage for so many years. And so it'd be great to hear if you have any particular experiences that have stood out for you as meaningful ones, perhaps funny ones, that you'd like to share with everyone in the audience here today. Perhaps we can start from Federico this time and go the other way. Or we can start with Ella, if you prefer.
Yeah, let me think a bit about a particular.
Okay, we'll start with you then, Ella. Put you on the spot instead.
Okay, thank you. I'd say this is quite a recent experience, so maybe not from when we were younger, but we were actually put up for an award in our local area in Nottingham recently, and alongside us was a member of our kids' team for the charity, which was so amazing to see. And she's a lot younger than us and doing so much to try and tackle plastic pollution, going out and doing loads of litter picks. She's just very passionate, so it was very, very cool to be put up for the same award as her, and she actually won it, which we were very proud of. But it was a funny moment for us because we were meeting people who we've only ever met online from joining our charity. So it was so nice to meet her in person, but it was really funny for us to actually be put up for the same award as someone who's part of our charity and a young person who won. So that's quite a cool moment for us.
Yeah, I can share a little bit of experience from myself. Is that growing up, I was like when I was younger, even before university, I don't think I've given a lot of opportunity to be the leader on stage. But at the same time, we were at a transition where at some point, youth were more like being tokenized rather than being truly empowered. And I've seen that not personally, but seeing that, like I was just saying that our stories was featured on different channels, and there was a quite a period of time that I get a lot of emails from all over the world, and some of the most I think is really cute, is really heartwarming ones is from a 7-year-old, and of course he didn't really send out the email by himself, but I think his mother tried to put him like tried to find my email, and they're like, okay, your solution is really cool. Can my kid help to design one? Or he want to do part of this. Like he swim. Can he put a fish in it? Not let alone the idea how practical it is, but the fact that the idea that a kid would want to help, and also knowing that, okay, mom, can you help me to reach out? I think that proactiveness is what I don't see during my childhood, and I'm really happy to see that. And I think you guys are, of course, an inspirational role model. But what makes me even happier is that I'm seeing a younger generation trend too. Like the youngest email that I got is from a 7-year-old. So I think that really encouraging. I'm really happy to see more of that happening around different places too.
One of the episode popped up is the definition of global south and global north. So it can be translated it can be replaced by developing country and developed country. So I think right now it has changed, but when I was in COP25, I guess, and we use our gather together, and we sometimes making action together also we making interruption. We have an interruption time during the negotiation, so the UN gave us like 3 or 5 minutes to urge the negotiators to go make a progress. So this is very quite precious opportunity for every youth. So it's quite competitive to be selected. So I also applied, and then somehow I got selected. But you know, Korea is in UN categorization. We are at the time developing country. So I was the global south, and then other global south youth delegations were pissed off why South Koreans are selected as a global south. So I said, you see the Wikipedia, South Korea is a global south, and the guys were from Africa or other poor country, and they just don't want me to speak up. So we are quite made a lot of arguments on like how the Korea can be categorized. So it ended up anyway. The negotiation got delayed for 5 or 6 hours. So we were waiting and waiting, and then nobody could make a speech. But that was quite frustrating experience for me.
Okay, yes, now I have this story. So there is this association of the private enterprises in Medellin, and there's this mechanism they built in order to maybe lower the rate of protests in the sense that they communicate with the leaders of these protests, and they just basically through a back channel they say like, what do you need, how we can help you with education, with the job, with other employment opportunities. And like from the outset and from the media and the newspapers, you really think they're criminals and they should be in jail. But in one of these meetings, actually meeting and talking with them, they were just any other kid that was misguided, that had a rough background. And the funny aspect of it is that one of them was like a stand-up comedian. So when you really get to meet with the people, have empathy, and really connect with each other, I do think you can work towards a mutual goal. And in this sense, is like knowing what do they need, and really bringing and allocating those resources into that. So I do believe that it was quite interesting.
Definitely. Some really nice stories there, actually. I think sometimes when we hear perspectives from the global stage, it can be quite differing in people's experiences, but really nice to hear some positive ones there, perhaps with the exception of you, Gian. But you did mention COP, actually, and in particular UN events. And just because we have a bit of time left before we take a question, obviously, COP27 is just around the corner, I think in everyone's minds at the moment, especially coming from the UK and having COP26 hosted in Glasgow last year. We're very much looking forward to hopefully seeing a real robust follow-up to the discussions that were had then. And I know that yourself, Gian and Rico, you're both going to be at COP27 this year. So definitely very busy people we have on stage with us here today. And I was wondering if any of you had any expectations that you were wanting to see from COP27 just around the corner. What would you like to see perhaps come from this COP, or anything in particular that would be different to obviously the track record of COPs in the past, which for many people has been quite frustrating to not see the robust action come from them. So is there anything in particular that you're looking for from COP27 this time? A tricky question to end on perhaps, but okay.
I'll go first. Actually, last month we were dealing with the agenda in COP27, so I can say it. The loss and damage is getting very popular in the Yongo, which is like a young generation constitutions, and that working group is getting bigger, and think we are same position with the developing country, the youth, and the developed country. We are kind of restricted to consuming more things, you know. So we are in the same position, and we start to asking the compensation for the previous generation or the developed countries. So I think this time there was a controversy that we need to establish another financial international institution for dealing with the loss and damage. So I think that could be one of the agenda for to keep follow on.
Yeah, I think for COP27 this year and also for COP28, I'm quite optimistic because there's an extensive discussion about how we can accelerate nature-based solution, especially engaging the private sector. And there's already a lot of discussion going on saying that private sector will have to invest in nature-based solution and green technology. So already just from here, what we have been talking about and with the other stakeholders is that I think there's going to be a much stronger involvement from the private sector and accelerating the development of these different projects around the world. So in that sense, I am optimistic, and we will see how it goes. And on top of COP27, we will be also joining World Economic Forum next year in Davos. So all of these, the fact that we are fortunate enough to be there, meaning that not only representing youth, but also showing that there is a tangible, clear way and solution that is ready to be scaled. So I'm quite hopeful, and hopefully I will be sharing with you guys very soon.
Absolutely, and best of luck to both of you, your time there, and I think the eyes of the world will really be on Egypt over the next couple of weeks to see what comes from that. But I like the optimism, and I'll try and join you in that, and have my fingers crossed for some good results from this one. Now, I believe that we have a question from our MC, Professor Jun. So it would be wonderful to hear the question for the panelists.
Yes, fantastic. I think because in the morning we saw how shy our audience was, I volunteered to ask a question. And maybe to make Rico and Jiyun feel better, I'm much older, so don't worry. Before I ask the question, I do want to share, and perhaps I'm not the only one who feels this way, but I was listening to all of you. I was really touched just by your passion and how you channel that passion into something that's really tangible and has such a positive impact. And I'm sure I'm not the only one who felt that. And I think for this conference, when we talk about sustainable finance and how we can kind of channel that finance for a better world, a lot of the discussion and the solutions we talked about today had focused kind of maybe more macro, policy, maybe at a country or regional level. Because you are all, really on the ground and you have a good view of what's happening at the individual level, I wonder, because we have very distinguished guests here, from finance, industry, also in the public sector, media, as well as academia. But I think fundamentally we're still all individuals and we're humans. And so I wonder, just from your perspective and your experience and what you're seeing, with the work that you do, if there's one tangible thing that every one of us could do today, in the next 24 hours, whether that's something to do, something not to do, or maybe if it's a change of mindset or a question we could ask ourselves, if you could share that with us, I think that would be great food for thought as we end today.
Absolutely, a wonderful question to end on.
Sure,
do you want to start, Federico?
Definitely, many of us are flying to come over here, so it would be great if you can compensate our emissions through carbon credits. It's a simple and actionable thing to do.
Mine is very easy. Like for the last trash that you made, think about where it could end up, and you have the decision to decide where it would end up. Either you want to reuse it, recycle it, or if you put it in the normal trash bin, it is very likely to end up in the ocean or a landfill. So I think just thinking about the little things that you do on daily life, and my assignment here would be just thinking about the one last trash that you made today.
Okay, I would say that going away from this, I think never underestimate the power of telling other people about these issues, about what has been discussed here today. If you've learned something about the tips that have just been given, just go away and speak about this. I don't think that can ever be underestimated, the power of doing that, just getting the word out there about something that you've learned that you can do, and spreading the word will help that become a larger change. And even if it's a tiny change, if lots of people are doing it, it can make a massive difference.
What I want to saying is that you should believe yourself that you can make a change. I mean, it seems like a very single step and then minor, and no one really care about it. But if that individuals are gathered together, I think that bring a huge movement. and also just casually talk about the climate change or what you heard here. Just talk to one or two people today, and then let them spread the word. Thank you.
Absolutely. And I think to add to that, we've mentioned a lot about collaboration today on the panel. I think it's been a really common theme, and I would say that perhaps something to bring all of these things together is perhaps look for youth networks that you could get involved in or invite into your companies or invite into the areas of work. Don't feel like your sustainability has to fit into a preconceived notion, whether it's ESGs or whether it's a certain area of your life or business. This really is something that can and should integrate into all areas of business and our lives that we live. And I think to add on to that, I think to finish, it would be really great to hear from you guys the ways that perhaps people can follow your work, support your work going forwards, just a kind of final call to action where we can follow you to find out more and any future plans that you have as well. So. Okay, do you want to start this time?
So you can find what me and Amy are doing on our website, which is kidsagainstplastic.co.uk. And if you want to get involved in our schools program, then it's just called Plastic Clever Schools, and there's a separate website for it. And I'd say also, if you want to check out what the kids in our charity are doing, then there's a kids section of our website called the CAP Club, and there are some campaigns that they're running on there, like a 12-year-old who's running a campaign against the toys that are on magazines, the plastic toys that are really unnecessary and really tacky. So if you want to support campaigns like those, then they're also on our website. Thank you.
I like this ad section. So we're active on LinkedIn, and our company is Aki Reef, Architecture plus Reef. So if you're active on LinkedIn, if you have a LinkedIn account, go check us out, and you can find our team's members' portfolio there as well. So hopefully we'll see more followers.
I can say that you guys can follow the Instagram. I'm not sure like everyone has the account or not, but the Instagram is the main contact point of us, and then you can see what we are doing. And if you go to the Instagram, you can subscribe the newsletter. We are publishing every Monday. We are translating as I mentioned, the BBC, Bloomberg, Guardians. So we are it will be give you a lot of knowledge what's going on in the world. So follow the Instagram, Geyk Korea, Korea. Thank you.
Great. For us, you can find us on LinkedIn as Platinum Capital. But besides that, it would be great to have a quick chat if you want to set up your first nature-based project in the Amazon and help towards reducing deforestation and ecosystem degradation. Thank you.
I forgot to mention that we are very open to collaboration. So if you have any idea to collaborate with us, just direct message us. Thank you.
We're sitting on that table.
There we go. I think that's another small action that we were speaking about. One thing that everyone can perhaps do leaving this is, get on LinkedIn or Instagram and give some of these amazing projects a follow. But unfortunately, I think that brings us to the close of the session today. I'd like to say a huge, huge thank you to our incredible panelists and speakers that we have on stage today, not only for partaking in this discussion so well, but also for their really incredible spearheading projects that they're doing all around the world. And I'd really just like to close this session with a bit of a reminder. And people our age, the youth of the world, were often described as the future generation and the last generation, as we've heard, who are the ones with the capacity to make this change. But we're hearing it said even more that our generation isn't just the future generation, but it's also the present. And I think the amazing people on stage here today really show that that cannot be more true. And young people are here now and leading the way in so many fields and really ready to listen and to collaborate and to aid the action that we are all so desperate to see when it comes to tackling these environmental issues. And so I'd encourage everyone here to really try and keep up with the projects that we're seeing run on stage, but also, as I mentioned earlier, look into the young people working in your field or your country and see how you can really invite them to play a role in the work that you do. Because young people offer a valuable insight, a really urgent perspective on the challenges facing the world today, and one that we are set to inherit. And it's clear to see, as we've said, that we cannot address climate change, biodiversity loss, the many other issues that are facing our planet without true, genuine, cross-generation collaboration. So, thank you so much.
Thank you so much to our wonderful panel, and I think this is the time for me to introduce a special message by Mr. Mark Carney to kind of wrap up the very festive event that we've had today. As you know, Mr. Mark Carney, he is Vice Chair of Brookfield Asset Management and UN Special Envoy on Climate Action and Finance. So please share Mr. Carney's message at this time.
It's a great pleasure to join you all on behalf of the Glasgow Financial Alliance for Net Zero and Brookfield Asset Management. I'm very pleased to be virtually at this Ige-Wfg Financial Group International Conference. Let me say at the outset and commend Wfg Financial Group. As you know, you're the largest bank in South Korea, and you played a critical role in mainstreaming climate leadership there and beyond. Joining UNEP-FI back in 2019 and becoming an official signatory of the Net Zero Banking Alliance last month, and therefore GFANZ. Congratulations and thank you. Wfg Financial Group's strong work sets an example for financial institutions, not just in Korea, but across the Asian Pacific region and around the world. I'd also like to applaud IGE for your sustained focus on sustainable finance, such as demonstrated by your path-breaking ESG Global Summit 2 years ago. And the research on climate finance by groups such as IGE encourages governments and financial institutions themselves to focus on the net zero transition that is so essential. And that attention is needed now more than ever. We're meeting just a few days away from COP27 in Egypt, and we're already more than a quarter of the way through what must be the decade of delivery for the net zero transition. Our planet's temperature is already 1.1 degrees Celsius warmer than pre-industrial levels, and the last 7 years have been the warmest on record. And while the Glasgow commitments of governments could limit warming to 1.8 degrees Celsius by the end of this century, their policies are still only consistent with the warming of around 2.5 degrees. We must not just mind this gap, but urgently close it, for as the IPCC sets out, the global carbon budget is a binding constraint that will be exhausted within a decade on our current path. And Asia is at the front line of this transition. A leader in green technology, Asia is also the fastest growing region in the world, and it's well placed to seize the opportunities of net zero for greater energy security, more resilient cities and infrastructure, and even more sustainable growth. Asia is also home to the most exposed jurisdiction to climate impacts, and Asia will shoulder a large share of the costs if we all collectively do not take action to keep 1.5 degrees Celsius within reach. This will depend on reaching net zero emissions by 2050, and it needs the start of rapid decarbonization today. Now, fortunately, that transition has begun to accelerate. Over the past 2 years, the proportion of global emissions covered by country net zero targets has risen from less than 1/3 2 years ago to over 90% today. Under the Glasgow Climate Pact, countries agreed to close the gap between ambition and action that I mentioned earlier. And for the first time, nations agreed to phase down unabated coal power and inefficient subsidies for fossil fuels. Across the private sector, nearly 10,000 companies are setting science-based emission reduction targets. And it's in this environment that financial institutions such as Wfg are playing leading roles. As part of the Glasgow Financial Alliance for Net Zero, or GFANZ, 550 financial institutions from over 50 countries are committing to manage their balance sheets that total over $130 trillion of assets, to manage those balance sheets in line with the 1.5 degree net zero transition. Now, if the last year was about mainstreaming net zero commitments of countries, commitments of financial institutions, this year has been about operationalizing those commitments. And to that end, GFANZ is providing the global financial system with the tools it needs to manage the transition to net zero. This process begins with pan-sectoral guidance on financial institution net zero transition planning. Drawing on extensive stakeholder feedback, our framework, released just a few days ago, outlines the metrics, the governance, and the strategies that all financial institutions should adopt to translate their climate pledges into action. The GFANZ framework also provides a clear definition of transition finance, and that will help decarbonization in the real economy rather than the simple and false comfort of portfolio decarbonization through divestment. That means 4 strategies for how institutions can finance the transition. The first is obvious, supporting climate solutions, in other words, the technologies and products that will enable the economy to decarbonize. The second is to finance business models that are already aligned with the net zero economy of the future. Now, some would stop at these first 2 strategies, but they're not sufficient to get the world to net zero. Crucially, finance must support real-world decarbonization, not simply green balance sheets, by concentrating only on those companies and assets that are already green. And this requires a third strategy of going to where the emissions are and backing companies in high emission sectors to develop credible emission transition plans and implement them. This third strategy supports firms that have those plans, that set targets aligned to sectoral pathways and are implementing changes in their businesses to deliver them. And the final strategy recognizes that climate transition means backing plans to accelerate the managed phase-out of stranded asset. It facilitates emissions reductions while managing critical issues of service continuity and community well-being. And all 4 of these strategies are essential to get to the world to net zero. Now, of course, finance is an enabler. It makes decarbonization possible. And as I've been saying, the real action is in the real economy. And that's why GFANZ is also setting out the financial sector's expectations for the transition plans of companies in order for financial institutions to help determine which companies have credible plans, which ones should they back, and which they should avoid. In the new year, we plan to release guidance on the use of third-party sectoral pathways to help companies in very high-emitting sectors, such as oil and gas, aviation, and steel, to align their business models with the 1.5-degree pathway. These approaches help turn commitments into action. Putting this all together, our Net Zero Financial Institution Transition Plan framework, those real economy company transition plan expectations, and those sectoral pathways collectively provide a unified, coherent guidance on the path to net zero emissions across the financial system. These are universal tools, and as such, they're important. But GFANZ also recognizes that it's critical to tailor guidance to country specificities and regional issues. And that's why we've established regional networks that provide financial institutions with tailored guidance to support local net zero transition planning. In particular, we launched last June the Asia Pacific Network. It's chaired by Ravi Menon, the chair of the MAS, and it's already undertaken significant work to support decarbonization across the APAC region, not only adapting GFANZ's resources to APAC audiences, but also helping to facilitate the managed phase-out of coal-fired power plants in APAC countries. These phase-out projects for coal, are part of the second core tranche of our work, which is to mobilize private capital to the energy transition opportunities in emerging and developing economies. Today, the energy that keeps our lights on, heats our homes, transports our goods, and fuels their production accounts for around 3/4 of global carbon emissions. These emissions obviously have to fall rapidly to have any chance of keeping temperatures below 1.5 degrees. And this is challenging. We can't simply decree the most complex energy transition in history by fiat. It's not enough to just say no. Transition means transition, and this requires not only a decline in fossil fuels, but particularly a massive acceleration in clean energy investment. According to the IEA, the pace of annual clean energy investment needs to rise more than threefold this decade in order to get the world on track for 1.5 degrees. Let me draw that out for a moment. By examining the different 1.5 degrees scenarios for energy investment, our research estimates that by the end of this decade, the world will need to scale clean energy investment to the extent that for every dollar spent maintaining necessary fossil fuel energy capacity, at least $4 must be invested in new clean energy infrastructure. Today, that ratio is about 1 to 1. In coming years, it needs to rise. This analysis underscores that the biggest threat to addressing climate change is the speed with which we can increase clean energy investment. So, GFANZ is particularly focused on addressing the financing gap in emerging and developing economies, a gap or a requirement that will rise to an extra $1 trillion in annual clean energy investment by the end of this decade. In partnerships with governments, philanthropy, and multilateral development banks, we're working to create new country platforms and just energy transition partnerships, or JETPs, to channel capital to support the energy transitions of emerging economies. We've dedicated significant resources to advance private sector mobilization under the Indonesian and Vietnamese JETPs and Egypt's country platform. And we look forward to working with other countries and stakeholders in the future, particularly in Asia, to ensure the transition in energy is truly just and truly global. And finally, the last key tranche of our work focuses on accountability. We need to be able to track progress. And that's why all of our work, from global and net zero transition planning framework to our regional tools and guidance, will be underpinned by a new net zero data public utility. This will provide consistent, accurate, and openly available climate transition information to allow financial institutions, regulators, civil society, and the general public to track climate progress. A pilot of this utility will be up and running by the end of next summer, and it will promote unprecedented accountability on the transition with the support of the largest financial data providers, including Bloomberg, London Stock Exchange, Refinitiv, Moody's, Morningstar, MSCI, and S&P, and is supported by a number of governments, from the European Commission to the UK, the United States, France, Singapore, Switzerland, and international organizations, including the OECD, the FSB, the IEA, IOSCO, and the United Nations. As we work to launch this pilot, we really need your perspectives and input. So please respond to the consultation that is underway shortly. Now, before I close, I'd like to end with a caveat and a catalyst. Finance won't drive the net zero transition on its own. Finance is an enabler. It's a catalyst that can speed what governments and countries initiate. The scale, though, of the net zero financial commitments, of which Worry Group is a part, the scale of those commitments is such that if the world truly wants a sustainable, resilient, and fair energy system, the finance will be there. But this will depend on supportive public policies to accelerate the removals of barriers to this clean energy deployment and to support innovation. And so in that regard, we're very heartened by the work that Worry and IGE have undertaken, are undertaking, and will undertake. And we're confident that with continued collaboration between leading financial institutions, our best companies, civil society, and governments, we can reach our decarbonization goals. I hope to see some of you later this week at COP27 in Sharm el-Sheikh, and I look forward to moving together and taking steps closer to turning net zero commitments into action. Thank you very much.
Thank you very much to Mr. Mark Carney for his very special message. And as we close today's IGE Uri Financial Group International Conference, I would like to invite the chairman of IGE, Dr. Chung Kwang-woo, to provide brief closing remarks. Dr. Jun, if you would honor us with your message. So as we reset the stage, please be reminded that there is an Instagram event that is going on. So if you would like to receive an eco-friendly travel kit and signed photo card by IU, please be sure to upload your photo of our conference onto Instagram. So may I ask IGE Chairman Dr. Chung Kwang-woo to the stage, please welcome him with a round of applause.
Please allow me to speak in Korean from now on. 여러분,
Ladies and gentlemen, thank you for joining us at the Ige-Wfg International Conference. It has truly been an honor to host you here today at our event. Under the theme of Sustainable Finance for a Better World, we would like to express our deepest gratitude to you for staying with us until the very end. I've been to numerous conferences and events as a speaker, as a participant, and also as a host. But this time around was special. There was something very unique. Because mostly, if you go to conferences, you'll see that the energy is there. It's extremely high in the beginning, but then it dampens as time goes by towards the closing ceremony. But it seems that today it was the complete opposite. We saw even more energy as time went by towards the end of today's conference. And more than anything else, what was even more exceptional today was the fact that today's conference brought together outstanding female speakers, for which I am extremely grateful. But that's not all. We also had the MZ generation represented by Amy and Ella Meek, and our other speakers in session 4 who underscored the importance of change, the energy and passion and commitment needed by the younger generation to build a brighter future. And that was so inspiring to me. It was a strong message.
Up a new organization called Old Kids Against Plastic. 제가 늙은 사람을 위해
I was very tempted listening to what you were talking about to set up my own old kids or old people against plastic. So thank you for your inspiring words and bringing that energy here to Korea. We heard a lot of meaningful messages and invaluable insights. But I think that if we take one message away today, is a common theme that ran throughout today's conference, which is time is running out.
It's time to act. 그것은 우리가 전부 오늘 마음에 담고 가야
I think this is the message that we need to take home with us today and never forget. Humanity's mission to respond to climate change is truly the mission that our generation has and responsibility towards the future generation. We've talked about this, and even Ms. Kim from Ige-Wfg said that we are the first generation to feel directly the impacts and devastations of climate change, but also the last generation to reverse the adverse effects of climate change to prevent a climate catastrophe. So let us take that to heart. And with that, I would like to express my deepest gratitude and appreciation to all the speakers, panelists, discussants for taking time out of your day to join us here and enlighten us with your messages. And I would like to thank all the participants for joining us and making today even more special. And last but not least, a very special thank you to Chairman and CEO of Woori Financial Group, Mr. Son Tae-sung, for your support. I think this is where we say that we brought a perfect ending to everything. So thank you so much for making today perfect and meaningful.
So we would like to close the IGE Woori Financial Group International Conference. Thank you again to all of our distinguished guests, speakers, panelists, Ella, Amy, Ellen, Amy's mother, for coming, as well as our staff, the Shila Song, and of course Woori Financial Group. Thank you again, and please have a safe trip back home.
네, 잠시 안내 말씀드리겠습니다. 우리 금융그룹 임원 여러분께서는 행사장에서